my dear buddies, how are you doing? Punarvas Jayakumar here from Punarvas Jayakumar classes. So guys, most awaited video, that is the amendment video for December 2021. So unlike other places where you'll see that, amendments generally are shared only for that particular attempt, I took the feedback from the last couple of attempts from the students, and they wanted consolidated amendments for the last, 2-3 attempts put together, so that they can study everything in one umbrella. So taking that into consideration, last time I had released a consolidated amendment video, which of course had parts, bits and pieces of older videos also, but everything in one place. So similarly, I am doing the same thing for you, my dear friends. So I am dividing these amendments into 3 parts, okay? Part number 1 is all the amendments that have come in the past 6 months, applicable for the December 2021 examination, right? So all the files will be shared with you. It's still a consolidated file, but the first part that we'll be dealing with is around 38 pages, okay? So this 38 pages will be all the newer amendments which are present in your RTP, all right, which are present in your RTP. Apart from that, certain other amendments which I found are important but are present in the Bare Act, all hidden. So everything, because Institute has given one dialogue, everything that is applicable till 30th April 2021 will be there for the examination. But in the RTP, they have missed out a couple of points, so that also we need to take into consideration just to be on the safer side. And guys, this is one part. Second part is a separate discussion on PPIRP. That is pre-packaged insolvency resolution process. It's a very, very important amendment which is appearing in the RTP. So that would be in the form of, from page number 39 onwards, we'll have that. So 39 to around 71, right? So that video we will be, I'll be, posting it here. Everything is consolidated for you, no problem. Apart from that, my dear friends, since almost a year, there have been small amendments in IBC. Those amendments also are very, very important, which is present in my previous video and the video before. Few of the points have come in the exam, few have not come in the exam, so it is better to study all of that as well. So that is my last part, which will go up to almost 106 pages. So my friends, these are the amendments. So I will be recording now, and this will be posted to you. You can watch it, and along with that, I will do the editing where I'll add the older videos. In the sense this file, okay, which are amendments from almost a year, which are very, very important. So don't worry, blindly follow this. So those of you who have bought my videos in the past 1.5 years, well, I'm in the market since 2 years, but let's say from the past 1 year, whoever has bought the videos, let's say from previous September onwards, whoever has got the videos, those who are planning to write in May, then in December, please watch this video. Very, 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 very important. Okay. So actually guys, I'm wearing the same t-shirt. In the previous video also same t-shirt, and PPIRP had recorded separately, and PPIRP also coincidentally same t-shirt. So this t-shirt is very lucky for me. Some 300 rupees t-shirt it is, but anyway, it's a very, very lucky t-shirt for me because whenever I record amendments without my knowledge, I wear this t-shirt. So at least the same fellow with the same t-shirt you will be seeing across the next few hours. So let's now discuss, my dear friends. The notes are available in the description, in the sense you can come to my Telegram channel, and in the Telegram channel there will be a link. All right. So my dear friends, let's begin the consolidated amendments for December 2021 examination, shall we? First of all, the first amendment. So guys, the following penal provisions have changed by virtue of Companies Amendment Act 2020. So to strike a balance between criminal and civil liabilities, our Nirmala auntie says, hey, let us decriminalize everything. So she has come out with a slew of decriminalization amendments, where the offences earlier which had a higher penal provision in terms of money and also in terms of imprisonment. So wherever it was fine means it was payable to NCLT after an NCLT hearing. Now it has been converted most of it into penalty. Penalty is an in-house adjudication mechanism, IAM, in-house adjudication mechanism. So that is what, for less serious offences, they have done that. So quickly, let's go ahead. So guys, as I told you, full 1 to 106 will be given, just to sort of recap so that you won't get confused. 1 to almost 106 pages are there, which obviously will be given to you as a consolidated thing, right? So first part of the video would be some 1 to 138 with all the important amendments, 1 to 38, sorry, with all the important ones, and 39 onwards would be an extra set of amendment that is only like one huge amendment, that is pre-packaged insolvency, PPIRP. Then 72 to 106 will be older amendments, that is around 1 year, from the past 1 year, whatever has come, 1.5 years. So because this is with the last 6 months, this I can say 1.5 years old. So whoever has bought last year also, please watch it. All three are very, very important for December examination. There are some things which have changed. Everything I have covered here, everything is amended. That's why it's amendment class. Okay. So close your eyes, take a deep breath in, download the notes and start studying, guys. Shall we, my dear friends? Okay, come on. So I have made the chart for you. I will not be reading out the same offences. The chart is already made for you. You just read it. So for example, section 64, these are all the changes. So I have given the amended penal provision here. So basically, last time May, all old provisions were there. Now everything has been amended. This is the amendment provisions with all these things. Section 92. So most of the cases, wherever there was fine, it has been converted to penalty. So try to study these penalties and go. Some 40 or 30, 35 are there, guys. Please study this if possible. Right? 137, 140, 165. Sir, these and all are not there in the syllabus. Why have you given? Boss, it will also come in, CA inter is included in CA final, right? So please go through that, nothing will happen. On the other hand, what do you say? There are certain specific sections, and also it will come for your auditing as well. 137, 140, it will also help in your auditing. So fine. So maybe like 140, for example, if you do not resign and do not give the detailed reasons, etc., then the penalty is 50,000 rupees or remuneration, whichever is less. Now this part is added, 500 rupees per day or maximum 2 lakhs, right? If you have accepted directorship beyond 165, then the penalty is 2,000 rupees per day for a maximum up to 2 lakh rupees, like that. Then apart from that, the following offences, this we can delete. The following offences would now be liable to penalty instead of being punishable with imprisonment. These are the amended penal provisions which are important. Who is liable? Company. Up to how much? 50,000 rupees, extend 50,000 rupees, like that. So basically everything has been converted to penalty. These are the amended figures. So all these things we need to keep in mind. Then these are all the CA interrelated stuff, but you can still go through because it will help in auditing. Then as far as my CA final is concerned, one important thing probably is this for sure. Section 184, guys. Earlier there was imprisonment and other things. Now it is just penalty of 1 lakh rupees if you do not disclose the interest. Director's interest, if it is not disclosed, this is the scene. Apart from that, we have for 188, that is related party transactions also, there was imprisonment. Imprisonment has been removed. So these two are very, very important, guys. Now it is just penalty of 25 lakh, and for company it is, for if it's an unlisted company 5 lakh, if it's a listed company 25 lakh, the director should obviously pay if he has entered into a transaction beyond arm's length price and a related party transaction. Then for our secretarial auditors report, section 204 is a penalty of 2 lakh rupees, which is new, and then there are other penalties which are going. Then a specific penalty where other penalties are not given, that is section 450. Here, my dear friends, it was 10,000 rupees plus 1,000 rupees per day. This is the addition, 1,000 rupees per day plus maximum 50,000 for officer in default. OID means officer in default, and it's around 2 lakh rupees for the company maximum. Apart from that, there are other things, less serious offences which have come under the determination. Subjective determination means imprisonment again removed, less serious, penalty has been charged. One is for non-maintenance of books of accounts, minimum 50,000, maximum 5 lakh. Then other things, registered valuer and all these other provisions are there. These are all the provisions which I have given. That's about it. 38 are there, guys, especially these two. If for example, if you do not comply with any order of the regional director or NCLT, earlier there was some, fine, etc. of some amount. Now they have all removed. They have said maximum amount of fine here in this will be compounded under the section shall be twice the amount in the respective section. Earlier some other provisions were there. Now it's just twice the amount in the respective section. Then if the promoters, etc. do not cooperate with the liquidator. Earlier again there was stronger penal provision. Now they say the NCLT will order them, direct them to comply. That's all. So now it will go to NCLT. Liquidator will go and cry, hey, NCLT, daddy, these fellows are not listening. The liquidator will say, hey, shut up and listen down. So they will give a direction. That's it. 38 penalties, coolly go through, everything is amended, done. Now my dear friends, other amendments. So 38 done, no? So numbering is changed. So obviously it's continuing. 39. Section 149, 197, Schedule 5, important amendment has come. Earlier, my dear friends, you could have given the, remuneration only to whom? Only to managing director, whole-time director, manager. These three people, managing director, whole-time director, manager, used to be called as managerial personnel. Now, my dear friends, especially if it's a loss-making company, profit-making company, anyway you will get. Loss-making company, there was no way in hell that independent director would get any money. There was no way in hell that your non-executive directors, that is your directors who are professional directors, who just come 4 times a year for the board meeting, they were never getting any payment. But now, my dear friends, they are getting payment also, because if you see, or any other non-executive director, including independent director, this line has been added in section 197(3), which means if it's a loss-making company, even the independent director and non-executive director will be paid remuneration as per schedule number 5. Very, very important amendment. So as I told you guys, very, very important amendment. So please note. So basically for a profit-making company, you were getting based on that 11% slab, and you can go beyond 11% with ordinary resolution. That was there for others also, but for loss making company, only managing director, whole time director, manager used to get payment under schedule number 5. Now the payment is also given to professional directors. That is the big change, so to speak. Next, again this was 197(3) and this is my 149(9). In 149(9), what does it say? Company has no profits or its profits are inadequate. An independent director may receive remuneration exclusive of any fees payable under subsection 5 in accordance with. So this also. Exclusive of fee payable means sitting fee is extra. Sitting fee is extra. Apart from sitting fee, for loss making company also, he will definitely get remuneration. Remuneration is payable to this guy. So because of that, schedule 5 limits also have changed. In the sense, they have added one more thing. Schedule 5 limits, what they have added earlier, it was currency of tenure of a managerial person. Managerial person means who? Managing director, whole time director, manager. To that, what they have added? Other director. This other director will be professional director, non-executive director, and also called as independent director. These fellows are also added. Very, very simple. Very, very simple. Now, my dear friends, this is again very, very important. You can get a question of around 6 to 8 marks. This you already knew. Effective capital. If it is negative or less than 5 crore, 60 lakhs. 5 crore but less than 100 crore, 84 lakhs, 120 lakhs. 120 lakhs plus 0.0%. This we knew. But guys, this is other director yearly remuneration. Other director, and mind you, this is per director. So guys, 12 lakhs, 17 lakhs, 24 lakhs, 24 lakhs plus 0.01% also they have given now. 0.01% of effective capital in excess of 250 crore. So 0.0% of 1 crore is 1000 rupees. So for every 1 crore in excess of 250 crore is getting 1000 rupees. So guys, this is a very important addition. Please remember it. This structure you already know. So here it will be instead of 60, 12, 84, 17, 20, 120, here it is 24. And then 24 lakhs plus 0.01%. This is per director, not all director put together, per director. Okay. Per director means which director? That is non-executive director, professional director, and independent director for loss-making company. That is the next change. Then coming to section 40, my dear friends, very, sir, enough sir, important. How? There was one rule, if you remember, that there are certain things that you cannot do via video conferencing. You have to do those things only via board meeting resolution. Yes, that was rule number 4. In rule number 4, they said approval of annual financial statement, approval of board report, approval of prospectus, audit committee meetings, approval of amalgamation, etc. We had said. And then they also told, provided where there is quorum, you know this, provided where there is quorum, physical quorum, then these people, these items, 5 items you can do via video conferencing, provided there is physical quorum. Then there was one second rule in that, sub rule, which said from the period beginning from whatever, due to COVID, till earlier it was 31st December 2020. Till 31st December 2020, they said that all the meetings, etc., it may be held through video conferencing also. So my dear friends, this one they said it can be held via video conferencing also. This proviso, they said, you forget this proviso. No need of physical quorum. No need of physical quorum. So was there. First change is this 31st December 2020 has become 30th June 2021. In the exam, if they give you any dates in 2020 and 2021, that is after March, that is due to COVID, always remember, and they give these items, approval of annual financial statements, approval of board report, please tell that physical quorum is not needed. Physical quorum is not needed because the extension is granted from 30th June. Now, why is this very, very important, my dear friends, is from 15th July 2021, this rule has completely been omitted. Which means this rule only is not there as of today. Why I am telling you this is a sunset provision. Last time ever, if they want to ask a question and the institute has one sadistic mindset, oh, last time I cannot take it, I will give, like that they will be, right? So last time, if at all they are going to ask, it is going to be this attempt, December 2021. Got it, buddies? So all these 5 points can happen via video conferencing, provided physical quorum was there. But that physical quorum is not required only. Earlier it was till 31st December 2020. Now they extended it to 30th June 2021. But from 15 July, rule only is not there, which means you can do whatever the hell you want. These provisions only are not there. So that you cannot write. Please don't write that, write this. So this is the amendment actually for our examination, 30th June 2021. Since from 15 July 21 it has been deleted, last time ever they can ask in the exam would be December 2021. After that it won't come, right? Now one more small change that has happened is section 149, my dear friends, independent director, rule number 6. In rule number 6, who are eligible to be independent director? First of all, 13 months. So basically you need to follow these provisions within 13 months of the notification. 28/9/2020, 13 months will drag. That's okay. That was there before also. Anybody who intends to get appointed, so these fellows have to now write the examination. They have to write a proficiency examination, independent directors. All this happened because of ILFS. ILFS, there was a huge scam and people lost faith in the concept of directors, etc. They said, nothing can be done now, I need to throw you out. Since I am throwing you out, now let me get back on this and then at least ensure that the quality of independent directors are good. So that is the idea. All this is the same provision, no change, no change. Now every individual whose name has been included in the data bank, there has to be a data bank, shall find a renewal for a period of 1 year or 5 years or for his lifetime only within a period of 30 days. All these are old provisions. I am not saying what is the change. Let's come to the change. This is the change, guys. Every individual whose name is so included shall pass an online proficiency self-assessment examination within a period of 2 years. Earlier it was 1 year. Now it has been made 2 years with effect from 18 December 2020. That is amendment number 1. Amendment number 2, very, very important. No need to write for these people. No need to write what? The examination as such for these people. For all these people given, no need to write, shall not be required to pass the online proficiency test. Who are those people? These people. Earlier there was from directors of listed company, all that list was there. This is a brand new list. First one, director or KMP as on the date of inclusion in his name in one of the more following. First of all, he is a director or KMP of a listed public company. He's a director of a listed public company. Okay. Second one is a director or because obviously guys, if he's a director of listed public company, he already obviously will be knowledgeable. That's why they said no need for you to write the exam. Second, unlisted public company having a paid up share capital of 10 CR or more. Unlisted public company, having paid up capital of, 10 CR or more. So that's what. So 10 crore or more, this you remember. They'll ask in MCQ or anything they can ask you guys. Important. Second. Third, body corporate listed on any recognized stock exchange. Right? In India, recognized stock exchange, or in a country which is a member of the FATF, Financial Action Task Force. So guys, if in those areas, in those countries, if they are listed, so this is the FATF website, you can just figure out. You see, FATF, first one, only the one which is green dot, they are members of the FATF. So if you are a director of any company in Argentina, Australia, Austria, then let's see, the first one only is FATF here. Belgium, Brazil, Canada, China, Denmark, Finland, France, Germany, Greece, Hong Kong, China, yes, it's a special administrative region of China, Iceland, India, then again Ireland, and all these countries. If you see, there are some countries that are not there only. If you see, Pakistan is not a member of FATF, Norway, all these companies, guys. So companies in these countries, body corporate which is listed on a recognized stock exchange or listed on in a country which is a member of the state of the FATF, money laundering, such member country, or also IOSCO, International Organization of Securities Commission, IOSCO. So if you see IOSCO countries, so IOSCO is what? It's like the conglomerate of all the security markets of various countries coming together. Correct? So obviously Indian security market, SEBI, there also will be a member. So if you see, chairman will be from Hong Kong, Belgium, and all these things. Brazil, China, our Indian fellow also will be there. Kenya, Korea. Korea is South Korean thing, not North Korea. Kim Jong-un. Right? So all these people. Pakistan is also there. Pakistan is not in FATF, it's in IOSCO. India, see, Ajay Tyagi, SEBI. Right? Guys, 10 marks question. What is the Security Exchange Board of Portugal? Sir, next question. See, Comissão de Mercado, leave it. This also in Spain. Tell me guys, 20 marks. Spain. What is the thing? In Quebec, Portugal. Sir, leave sir, enough. Done. Leave it. 40 marks question, guys. Tell me the Security Exchange Commission of Germany. Sir, thank you so much. Please continue. Okay, guys. So these countries, okay. So body corporate in that particular country. Bodies corporate incorporated outside India. Bodies corporate, if you are a director or KMP of a body corporate incorporated outside India having a paid up share capital of $2 million or more. Let's say this fellow is a director of Tesla. One fellow here is a director of Tesla there. So when he's coming to India, will I say, sir, write that proficiency test? Hey, I am already proficient. I am a director of Tesla. Right? That person. Or any statutory corporation set up by a separate act of parliament or a state legislature. UTI, LIC, it's all a separate act of parliament. LIC Act, UTI Act, SFC, State Financial Corporation, all those things. Apart from that, anybody in the pay scale of the director or equivalent or above any ministry or any department of the government handling in commerce, corporate affairs, finance, industry, public enterprises. So in MCA, any person who is handling the rank of a director or above, if he obviously wants to be a director of some government company or any company for that matter, obviously no need to write the independent director, no need to write the examination. Already the affairs of the government companies or statutory corporations set up by a separate act of parliament. So this fellow has experience in handling the affairs, part of the ministry handling the affairs of the government company or any statutory corporation. So obviously no need. Or in the scale of chief manager or above in the SEBI or RBI. In SEBI or RBI or IRDA, in SEBI, in RBI in IRDA, Insurance Regulatory Development Authority, in Pension Fund Authority and Development Authority, he is already a person who is having the pay scale of a chief manager, chief general manager, already that big shot. So that guy I cannot come and tell you, sir, please write the exam. It is shameful. Okay. For the purpose of calculation of 3 years in the proviso, any period during which an individual was acting as a director, etc., in 2 or more companies at the same time shall be counted as only once. So basically you have to see this for 3 years, right? Because we saw it in the rule already. So when should I say, if I am a director of 2-3 more companies, then I should take it as only one. That is the one part. Apart from that, if I am an advocate, if I am a chartered accountant, can I also become an independent director? Yes. But if I have just a freshly qualified CA, should I write the examination is what we have to see. Following individuals who have been for at least 10 years advocate of a court. Normal lawyer has finished the LLB exam, whereas an advocate is a person who is a member of the Bar Council, not that Bar Council, Bar Council of India, right? Then practicing chartered accountant, practicing cost accountant, practicing company secretary shall not be required. So what is the institute here that you need to register? I mean the entire institute of where they'll carry out these examinations, it's called as the Institute of Corporate Affairs at Manesar. This is the thing that is creating the data bank. It creates the data bank. And also guys, sir, what is the pass percentage, sir? 50%. Earlier it was 60%, is also an important change. Earlier it was 60%. Now they know people are failing left, right, center, so they made it 50%. And also, sir, first attempt, second attempt, third attempt, fourth attempt, I am writing attempt on attempt, see, like CA only. No limit on any attempts. No limit on any attempts. Got it, my dear friends? That's all. These are the important amendments in company law. Then moving on to FCRA. Guys, FCRA, there are so many amendments. In that so many amendments, 90% amendments I have already covered last time. So that video I will be attaching in this video only. You can see it at a later point of time. The only new change which I have found in the RTP is, we have seen donation to a political party, etc. is barred, or anybody associated with a political party. The rules have gone ahead and given examples, or rather defined what exactly is an organization of a political nature. That is what we need to see. Apart from that, all other amendments I have already covered. What is this? Organization having avowed political objectives in their MOA or AOA. If it's a company or if it's a trust or whatever it is, if you have the MOA, AOA or any bylaws for that matter, when I see there the objects clause has something related to political agenda, political objective, then that becomes an organization of political nature. Of course, FCRA to that will be banned. Second, trade union, including activities for promoting political goals. Trade union anyway is covered, now political goals also. Voluntary action group with objectives of a political nature, it participates in political activities. Students union, workers union, youth forum, right? You have this Akhila Bharatiya Vidyarthi Parishad, ABVP, then Vishwa Hindu Parishad, VHP, Karnataka BJP Women's Association, whatever, Congress Women's Association, whatever it is, all these which have a political affiliation will be called as organization of political nature. Then organization of farmers, workers, student, youth based on caste, community, religion, etc., whose objects are stated, etc., and which has political leanings. Correct, you have various communities, the Vakkaliga community, Gauda community, Brahmin community, especially in Karnataka I am telling, like you have various communities, right? So all these communities, if they form an organization, welfare group, the Akhila Bharatiya Vidyarthi Parishad is a student group, but it has political affiliation. All this, the nature I need to see, substance over form, that would be called as organization of political nature. Any organization by whatever name called, which habitually, not one time, habitually as a reason of habit, engages in or employs common methods of ban, hartal, rasta roko, rail roko, jail baro, all these things, guys. So all these people who constantly keep, here in Karnataka there is a famous guy called Vatal Nagaraj, he has Karnataka Rakshana Vedike, example I am giving you for the people from Karnataka, you will relate to it. I am sure in each of your states you will have people like them. So when anything that happens, he'll say first, hey, hartal, first, band, Karnataka band. right? So such organization which has political affiliations will also be part of this political nature. Very simple. Sir, other amendments and all are there, sir, you are not doing. Sir, that other amendments are already covered previously. I will attach that video here. Same t-shirt, I'll attach that video here, okay? That is done, recorded already, don't worry. Next, amendments in PMLA. What is PMLA? PMLA, Prevention of Money Laundering Act. Very easy, guys. So what is it? There is one dialogue called reporting entity. What will reporting entity do? As per 2W, reporting entity will report to FIU, Financial Intelligence Unit. They have to report. So what does reporting entity mean? It will be a banking company, you know that, financial institution. Into any golmaal transactions that are happening, you need to report to FIU, Financial Intelligence Unit of India. First is banking company, then it's financial institution, then it's intermediary. Then they say any person carrying on a designated business or profession. These people have to report to whom? To FIU. In that, they had given a person who runs a casino, a person who is a registrar, like or sub-registrar in SEBI and other things, any real estate agent, because in real estate dealings, lot of cash, lot of money laundering may happen. Dealer in precious metals. Now this they have given which real estate agent? Who has to report to FIU? Any real estate agent whose turnover is greater than or equal to 20 lakh rupees. That person is the person who has to report to FIU. He will become a reporting entity. Important MCQ question. Then dealer in precious stones or metals. All these dealings will have, if I have cash, I'll go and buy one gold biscuit. Now to curb that from happening, if you have any cash transaction, whether singly or linked together with, one person will go and keep on depositing cash, 2 lakh, 2 lakh, 3 lakh, 4 lakh, 5 lakh, all put together more than 10 lakh. Such dealer in precious stones or metals who has a cash transaction singly or jointly greater than or equal to 10 lakh rupees, such person will automatically become a reporting entity. So this is important, my dear friends, for probably MCQ. Got it? So that is the next change. Tick, tick. If they engage in any cash transaction with a customer equal to or about to rupees 10 lakhs. Then in section 11 capital A, they said every reporting entity, one of the examples was that I told you, shall verify the identity of its client. They say, sir, give me Aadhaar card. So the authentication, etc., offline verification, all these things they say as may be prescribed, as may be prescribed. Now who is that person? It will be now taken over by the National Payments Corporation of India. So the reporting entity specified below to undertake Aadhaar authentication services, etc. So basically this National Payments Corporation of India, they will take over. That is again MCQ question they can ask you. Right? So guys, now next is FEMA. In FEMA, there is one change. Export regulations. Guys, when you are exporting, you need to make a declaration. If you are exporting goods, right, you have to make a declaration in EDF. If you are form EDF, if you are exporting software services, goods and services in EDF, software services in Softex. Now, as per the FEMA regulations, export regulations, there are certain exemptions. If you export as trade sample, if you export for other things, there is exemption. One exemption has been added. This is the exemption. Again important, they can ask in MCQ. Re-export of leased aircraft or helicopter and engines or auxiliary power units, either in completely or partially knocked down condition, repossessed by overseas lessor and duly deregistered by the Director General of Civil Aviation on request of deregistration and export request authorization holder under Cape Town Convention or any other convention of lease deed. So guys, what is this? Very simple. See, I will import Rafale jets, I will import helicopters from US, I will import components from other places and I probably assemble in India. So if you see now, Tatas are doing the manufacturing of the storage aircrafts for the Indian Air Force. That's a very, very superb thing. It's the first time ever that a private company is been generally 100% market share is the Hindustan Aeronautics Limited. The first time ever private company also is doing the same thing. So now the thing is, what I am trying to tell is here, now I will be importing many things and all those things. Now I will also have an ECB borrowing from some other country. So they will have a charge over this asset because they have given me so much money, right? So obviously they can't just give it like that. They'll have a charge over the asset until I repay. Now there are a lot of debtors, lot of creditor everywhere. Let's say India is a debtor, others are creditors. And it can also so happen that, some other country, Dubai needs aircrafts, but it is being assembled in India. So I import from USA, assemble it and give it to Dubai for a fee. All that may happen. So guys, there are debtors also, creditors also. There are different laws for aircraft making, helicopter making across the world. So they felt that let us come into one particular protocol or rule and let us follow this. If you are unable to pay, probably you can re-export the helicopter. If you are unable to pay, you can completely knock it down or you can partially knock it down and re-export to the creditor, because obviously now he is enforcing his interest. You are unable to pay, so he will take over the asset now. Or you are unable to pay, you give it back to the person who you bought from, whatever. So the owner is one person. The person who has security interest is the other person, or they may be the same persons also. Or I am the future owner, India. Now in that case, all of them, many countries came together and signed a protocol, means a rule in Cape Town. It happened way back in 2001, if I am not wrong, Cape Town Convention. So I'll just show you a few points here. So you see, these are all the countries that have entered into the Cape Town Convention. I have opened up and I read the Cape Town Convention fully. So here they have clearly given what are the remedies on insolvency, what to do. See, remedies on insolvency, what do I do? Then deregistration and export request. When the debtor, that is India for example, has issued an irrevocable, means cannot be cancelled, deregistration. They say I want to deregister from this entire mechanism, and export request authorization I have signed. To in favor of whom? In favor of the creditor. Debtor India is telling, please take these items back, I don't want. Then they'll have to sign this something called as irrevocable deregistration and export request. So this is the Norwegian I have downloaded. The undersigned is a registered owner, full name of the aircraft, helicopter, manufacturing model, bearing my serial number, everything. The instrument is irrevocable deregistration and export request issued by the undersigned in favor of the creditor. The debtor is issuing in favor of the creditor. And tell recognition that the authorized party or the person it certifies as the designee is the sole person entitled to procure the deregistration of the aircraft and then procure the export and physical draft aircraft from Norway. So I have already registered with the Department of Civil Aviation and this military aviation. So I will to deregister from there, export it. Deregister from there and export. So I will give this request. So guys, when I am deregistering and in the complete knockdown condition I am exporting, why the hell should I declare? Because this is the part of declaration only, no? So very, very good provision. If you see, what is the amendment here? They have said, as per the Cape Town Convention, I am deregistering it, correct, on the request of irrevocable deregistration and export request authorization, IDERA, under Cape Town. Who is doing it? Director General of Civil Aviation, DGCA. He will deregister and send it. Civil Aviation Ministry will give a permission. Got the concept? Very, very simple. So guys, that completes all the amendments. Hold on, I'll tell you. From here onwards, it has already been recorded. Older amendments. I'm going to paste that immediately after this. So you please coolly follow all the amendments here. I've already discussed till here. After that, my dear friends, everything is discussed. After that, my dear friends, next part would be PPIRP. That also is there after that particular thing. So it's going in a sequence. Page number 38, then PPIRP, after that the last part. Okay, so all those things have been combined and given to you. So study well, all the very best. Hope you got the point. Take care, see you, love you all the best. Please continue the video. Most important, PPIRP also. Okay, bye. The real deal this time for May 21 is Foreign Contribution Regulation Act 2010. This will come for, the entire chapter will come for 6 marks. If you want to understand the full list of amendments, if you want to understand what is foreign contribution, etc., I have released recently fully amended chapter. I think it's some 2 to 3 hours. Just check it out on my YouTube channel, which gives the Foreign Contribution Regulation Act. All the amendments are covered there. So in that video, what is given? The basics plus concepts plus all provisions, including amendment. All provisions including amendments. So if you want more information, please go to that video. If you only want amendments, you already know the basics, you already know the provisions, you already know the other things. I only want what are the changes. Sir, don't sit and torture me for 3 hours. You tell me in some 10 minutes what are the changes. It's okay for me. I am great. I already know everything. Good. So the ones who have no clue about FCRA, kindly go and watch that video. Spend some time. It's worth it. 6 marks will come. For those who already have that knowledge of FCRA, please follow this particular video. Continue the video for changes in FCRA. Done? Let's see. First one, first and foremost. Through the Foreign Contribution Regulation Amendment Act 29 September 2020. What has come? No foreign contribution shall be accepted by any candidate for election, correspondent, columnist. So this is prohibition of foreign contribution. Sir, what is foreign contribution and all? Don't ask now. This is amendment clause. So please go to that video if you want and check out there. It's recently released only. Check it out. Recent video. No foreign contribution shall be accepted by candidate for election. All this we know. Correspondent, columnist, cartoonist, editor. One they have added, buddies, public servant. From now, that is from 29 September 2020, even a public servant is barred from accepting foreign contribution. Then you have judge, government servant, employee, all that. Member of legislature, political party, association of company engaged in all these things. This I have already explained, that you already know, that you leave. But what is the addition? Public servant. Sir, that's all. Public servant, I understood. If you study like that, what's the point? Who is public servant? In the exam, they will not directly give public servant. They will say government surveyor. Government surveyor. Is he a public servant? So we need to know who is a public servant. So if you see the explanation there, for the purpose of clause C, public servant means a public servant as defined in 21 of IPC, Indian Penal Code. That's all. We'll mug up and go. In the exam, some random thing they'll ask. Is a naval officer public servant? There. Oh, naval officer has taken foreign contribution. Is it public servant? Don't know. Right? We always interconnect the laws. Those of you who are my students, you already know. What do? Interconnect the laws. If we go to section 21 of IPC and C, I have highlighted the important points. At least you should know who is a public servant, yes or no? Right? We all stop here only. That's all. We don't go ahead. We have to go ahead. Military, naval or air force officer, every commissioned officer of the Air Force, of the Naval, Indian Naval Services and the military service would be a public servant, believe it or not. Any foreign contribution received by a military commissioned officer, naval officer, Air Force guy, gone. prohibited. Are you understanding? Every judge, including any person empowered by law to discharge an adjudicatory function, empowered by law, under Arbitration and Conciliation Act, you are empowered to become an arbitrator. Are you similar to a judge? Yes, sir. Arbitrator also will come here. Any liquidator, every court of justice, officer of the court, liquidator under liquidation provisions, winding up, receiver, official assignee, or even a commissioner whose duty is to recover, officer of the court is, will come under this. Who is going through every judicial process will come. At least you need to know who all are there, no? Correct? Every juryman. In the US, you have this concept of jury system, where the entire case is decided by a jury. Rustam, you have watched the movie. That was based on a similar case where the first ever Indian jury it was, which told he was not guilty. After that, they disbanded the jury system in India. But nevertheless, if any jury is there, every juryman, assessor or member of panchayat in arbitration and conciliation, and also there is an alternate form of dispute mechanism. Every person in panchayat, no, in these Telugu movies, Tamil movies, Kannada movies, they show from the bottom, they show the angle. One fellow will be walking in lungi. Everywhere, air everywhere will come. Then he'll sit on the, panchayat seat, put his one leg over the other leg. From behind, 2 lions will come. You would have watched those movies? That guy, Sarpanch, head of the panchayat, and every juryman in the panchayat, the elderly people, will be who's assisting a court of justice or a public servant in any of the cases going on, will also be a public servant. Every arbitrator referred for decision or report by any court of justice or by any competent public authority, arbitrator also, every arbitrator or other person, part of their public servant, they cannot take foreign contribution. Every person who holds any office by virtue of which is empowered to place or keep any person in confinement, your jailer. Ajmal Kasab was kept in solitary confinement and he was actually looked after by 2-3 jailers always. This fellow is also a public servant. Money comes from outside to do something with him, to kill him, because he'll blurt out all the truth. Getting the point? Money comes from abroad. This is very relevant now. Every officer of the government whose duty it is, such as officer to prevent offences, to give information of offences, to bring offenders to justice, or to protect public health, safety or convenience, under which act? Epidemic Diseases Act. Every local authority, every police officer, every person deputed by the police now during the COVID pandemic, where they are roaming the streets and ensuring people are not moving out like fools, bringing them to justice, upkeeping the public health safety, are public servants. Are you understanding the importance of that one word? Are public servants. Every surveyor, assessor, everything, they are just the highlighted points you study in the exam. If they ask, remember they are public servants. You would watch a movie of this guy, Rajkumar Rao, called Newton. So in that, he's an electoral officer. He goes to a very remote village, because in India, it's democracy. Every person has the right to vote. So in this wonderful movie, Pankaj Tripathi is also there. It's a slow movie, but beautiful movie, right? So in that, this guy goes into the jungle and ensures that some people at least come to vote, the tribals there. The entire movie is about that only. Is he a public servant? Yes. Every person who holds any office by virtue of which is empowered to prepare, publish, maintain or revise an electoral roll, or to conduct an election. All these in the election, these election officers will be there, no? They are all public servants. Every person in the service or pay of the government, in the performance of any public duty, all IAS officers, IPS officers, IRS officers, Indian Forest Service officers, everybody public servant. Every person in the service of a pay of a local authority, BBMP, Bruhat Bangalore Mahanagar Palika, that is the local authority here. Every officer who is part of that will be a public servant, established under a corporation or under a central, provincial or state act. Can you think about it? Let me go one step ahead. We are all decoders. We always interconnect laws. Let us go one step ahead. Under Banking Regulation Act 1949, this is not given in this. That's all. It stops here. But I went when let's go one step ahead because I've analyzed it further. Banking Regulation Act 1949, 46 capital A. See the dialogue. Chairman, director, etc. of any banking company, public sector bank, SBI, to be public servants for the purposes of Chapter 9. Beautiful. Are you understanding the impact of this? PNB, Punjab National Bank, used to give left, right and center guarantee to Nirav Modi. There was no mechanism only. He used to give them payments from India and from accounts abroad. They were happily taking because nothing was prohibited. Now you see, chairman, director, etc. to be public servants for the purpose of Chapter 9 of Indian Penal Code. Every chairman is appointed on a whole-time basis, managing director, auditor, liquidator, manager, and any other employee of a banking company shall be deemed to be a public servant for the purposes of Chapter 9 of the Indian Penal Code. Because of the insertion, now there will be many cases where they will pull this also under the criteria. This is an extra point. We are going ahead and understanding. Are you getting it, friends? Yes. Sir, why you do all this, sir? We have to do. We are in CA final. They will not give public servant. They can give extra things. Understood? Sure. So this is one simple thing where I have added this public servant as per FCRA Amendment Act. Next. Very, very important. What is it? Earlier, from a foreign source, if I am getting any money or in contribution, let us say Rotary Club Bangalore is getting a foreign contribution. What could it have done? It should first register and get a FCRA certificate. It should register and get a FCRA certificate. Fair enough. Now, if you are registered under FCRA and if you want to transfer it to some other club, let us say if you want to transfer to Lions Club, you got, let's say 50 crore, you want to transfer 10 crore to Lions Club. It was possible if Lions Club also obtained a registered certificate. Example I am giving. Or Lions Club could say, no, this is only for one particular purpose only. Like that delta. It's only for one particular purpose. If it is for one particular purpose, what am I saying? Rotary Club, it can have an FCRA certificate. It should have. Can it transfer to Lions Club? Can Rotary Club transfer to Lions Club? Answer is yes. Provided Lions Club also has a registered certificate. Right? Lions Club also has a registered certificate, or Lions Club takes prior permission from the government. Lions Club says that, sir, this is only a one-time money that is coming in. So I don't want to keep on asking. Let me take just once. So they could have taken prior permission from the CG, specific purpose for specific contribution, specific source and specific area. Only for these things. Specific purpose, specific contribution, specific source and specific area. Only for this I need to give prior permission. This was what was there till now. What has changed? Very, very, very important. This was the old provision. Now, Foreign Contribution Regulation Act with effect from 29/9/2020. No person who is registered and granted a certificate or who has obtained prior permission under this act, that is, for example, Rotary Club, and who receives any foreign contribution. In my example, they received 50 crore. No person shall transfer such foreign contribution to any other person. Means what? Entire concept of subgranting has been banned. Concept of subgranting is completely banned now. You cannot do any subgranting, which means this one here. Can Rotary Club give it to Lions Club? No. Section 7 has been amended, FCRA Amendment Act. Rotary Club cannot transfer to Lions Club. Subgranting is banned. Are you understanding? So in the exam, what to write? In the exam, you need to write both the provisions. You need to write the normal provisions, which is the rule number 24, and then say amendment has come, and then add this dialogue. Please, very important guys, you have to write this in the exam. First you write the old provision, then you write the new provision, then you write this note. Alright, then you write this note, very important. Relevance of rule 24, that whatever we discuss in the wake of total prohibition of subgranting is a contentious issue. Contentious means debatable issue. And it has led to ambiguity, confusion. Ambi means two, guity means mind, two minds. Central government would in all probability refuse to grant permission. Now today if I go to central government using the rules, they'll say act only has changed. What will rules do? Rules are always subservient to the act. Rules are subservient to the act. Always they should listen to the act. When the act only has changed, central government will now refuse registration for sure. An amendment to the rules or a clarificatory circular is imminent, means it is needed now, much needed. When the dust of COVID settles, little bit Shashi Tharoor language you have to write now, right? When the dust of COVID settles, one clarificatory circular is needed. Though it is recorded video, when I do like this, tomorrow you also do like that. So I know that you are there. I am seeing you. This is the only medium where I can interact with you now. One of the few mediums. Face to face is not possible. So I know it is not a live session now, it's recorded. So I'm doing like this, which means you also do like this. Okay, I can see. Right. Got it, friends? Easy. Law has to be studied the way it has to be studied. It becomes very easy. Then one more important amendment. I'll tell you. Anyway, I'll tell you here only. The administrative expenses, correct? From the foreign contribution that I get, how much could I have used for administrative purposes? Earlier, we could have used 50%. Now, they have limited to 20%. This is again important. Wherever 50% was used, now 20% you can use. So every person who is registered and granted a certificate and receives any foreign contribution shall utilize such contribution for the purpose for which the contribution has been received and will not use it for any speculative businesses. One more amendment. I'll explain. You will not use it for, let's say, share trading, futures. You will definitely not use it in cryptocurrency. Elon Musk, Alexa, play 1992 scam theme music. Right? It shall not be used for any speculative activities. Provided further The central government shall by rule specify the activities or businesses. That also we need to understand. Then next, shall not defray as much as possible, not exceeding 20% for administrative expenses. I have received 50 crore from abroad. Earlier I used to use 25 crore for expenses. Why? Give salary left, right, center to all these managers here. No. They are saying maximum you can give is 20% administrative expenses. Sir, what are administrative expenses? That also is very important now. So what are speculative activities we need to understand? And what are administrative expenses? Important, they can ask us some in the exam. Shortly, I am planning to also release one video where I have prepared an integrated case study on FCRA. So we will try to discuss. I've tried to include one question here which speaks about the administrative expenses. So let us try to do that later. One more video I'll release. Sir, how many videos you'll release? Sir, I'll release. For me, that is only the job. If you want, you watch. I'm sure you'll watch it. Because with your support only, we will obviously all of us will do well. Yes or no? Speculative activities. What are they? Speculative activities have been defined in Rule 4 of FCR. Any activity or investment that has an element of risk of appreciation or depreciation. Think cryptocurrency. Example. Of the original investment linked to market forces. Here market forces is Elon Musk. Correct now? Example. Including investment in mutual funds or in shares. Participation in any scheme that promises high returns is like investment in checks or land or similar assets not directly linked to the aims and business. In the exam they will ask you, they want to invest in government bonds, RBI bonds. Possible, not possible? 100% possible. Debt-based secure investment shall not be treated as a speculative investment. Important line. Then I said 20% administrative, 20% administrative. What is administrative expense? All salary administrative expense. See, here they have given. Salary, wages, travel expenses or any remuneration realized by members of the executive committee or governing council of that particular NGO. There will be members running the show, council members, governing council. For them, salaries, wages, travel expenses, etc. should not exceed 20%. Because these scam fellows, what they'll do, they take 50 crore, they take 25 crore. 50 crore they will get from outside, 25 crore they'll only eat. So that's why they're including this in the administrative expense. All expense towards hiring of personnel for management of activities. Everything, all your employees for salaries, wages, remuneration, cost of travel, everything. All expenses related to consumables like electricity, water charges, telephone charges, postal charges, repairs, printing, stationery, everything. Office equipment, accounting. You are going there as an accountant, you are going there as an auditor, all those charges. Expenses towards running and maintenance of vehicles. You will have 2-3 vehicles to run. All the expenses, driver salary, petrol. Cost of writing and filing reports. So you will have accountant, you will have legal team, everything. Legal and professional charges. All chartered accountant charges, legal charge, everything will be covered in the 20%. Rent of the premises, repairs, etc. In the light of COVID-19, let us say there are many NGOs which have been set up. In fact, I am into consulting and I have only at least around 5 to 6 we have set up some organizations I have guided, whereby they have a hospital. So this NGO runs the hospital, pays rent to the, so that many hospitals are there in for example, Karnataka. Some of them are not functioning, right? Which probably were abandoned for 2-3 years and all those things. So now these NGOs have taken up the space. They have taken it on rent. Bought some beds, hired nurses, and they are running the show. Main objective now of these organizations is to run. Similarly, let's say I want to educate the children free of cost. So I have a organization and I take something on rent, and now I hire teachers to teach there at that organization. Now tell me, will the amount payable to these teachers, doctors, etc., can I take it as administrative expense, or this is the most important expense, because of this the organization is running? There's a difference between these managing committee fellows trying to loot, and there's a difference between hiring doctors and teachers because of whom the NGO runs. So wonderfully they have given amounts not to be counted as admin expenses are expenditure incurred on salaries or remuneration of personnel engaged in training or for collection of analysis of field data, or association primarily engaged in research and training. In research and training, the main people, researchers, trainers, and people who collect the field data, etc., for them you can pay any amount, no problem. They will not come under this 20% bracket. Second, expenses directly in furtherance of the stated objectives of the welfare oriented schemes, such as salary to doctor, salaries to teacher, etc., will not be considered in this 20%. Good. They can be paid any amount, no problem. Yes or no? Got it? Good. They can ask us some problem. Then section 11 has started a thing called summary inquiry. The gist of the entire thing I have given here. Everything is included here. So whatever you read here, it's there in this chart. Central government can actually come out with a summary inquiry, just like your inspection investigation chapter. Initially, you start with an inquiry. So there can be an inquiry where there is reason to believe that the person who has been granted permission, it can be any of those clubs who have received money, has contravened the provisions of the entire permission why they are given. The reason why they granted a certificate, that only they have contravened. Then CG can initiate an inquiry. But until an inquiry is initiated, they will say, I will restrict the use of unutilized foreign contribution. I'll go to that club and say, I think some shady activities you are doing. So I am going to do one thing now. First one, whatever your unutilized foreign contribution is there, let's say you have around, let us say you have an unutilized foreign contribution of around 3 crores. So I'll say now, whatever 3 crores unutilized foreign contribution you have, you cannot use it. Point number one. Second, I will say stop the remaining part of foreign contribution. So whatever remaining part is going to come in, that is in the next part. And now what you are supposed to use, that also I am going to stop. They say, sir, 5 crores is going to come tomorrow. So I can restrict that also, because if I feel that you are using it for some other activity, I can restrict that for sure. So if you see, this is the third point. Restrict the use of unutilized foreign contribution. Stop the remaining part of foreign contribution and restrict additional inflow of foreign contribution. This is a new section, section 11, added here as a proviso. Shall not utilize the unutilized foreign contribution or receive the remaining foreign contribution. I will not allow you to receive the remaining one, or unutilized portion, or also additional foreign contribution. I am going to stop. Got it? Then again important, 12 and 17 together. Every person who makes an application under subsection 1 shall be required to open an account called FCRA account. Every person has been granted the certificate under this shall receive the funds in only one account called designated as an FCRA account. And such branch should be in New Delhi. They are saying enough of you taking in all other accounts, you should take only in the New Delhi account. SBI New Delhi. Funds should come there first. From there you maintain different accounts, I don't care. Centralization. Sir, I am in Kanyakumari, I don't care. Open it in New Delhi. From there you take funds. This is a new definition, new change. Provided that such person may also open another FCRA account in any of the other banks for utilization, I already told you. He can also open one or more branches, one or more accounts in various scheduled banks. No problem. Whatever amount comes to SBI or whatever amount you have opened other FCRA accounts, no other funds other than foreign contribution shall be received in those accounts. You can't mix up. There should be separate accounts. But the main account should be only one, SBI. From there you can transfer to various accounts, not a problem. Not a problem. Also, one important thing. On 7th October 2020, they have notified the New Delhi main branch. NDMB, New Delhi main branch, SBI 11, Sansad Marg, New Delhi, as the specified branch. From the date of opening of FCRA account in NDMB or from 31st March 2021, whichever is earlier, no inward remittance will be allowed in any account other than the one opened in NDMB. Correct? New Delhi main branch. Problem with this now, with my clients, I'll tell you, they really want to help out from abroad in the COVID scenario. And it has become impractical to open an account in SBI. They are taking minimum 1 to 2 months to open an account because of COVID. First of all, we know SBI, with all due respect. Correct? SBI logo is like this. Correct? Something, you know the logo, right? In that, the blue portion is what? Blue portion is lunch break. That one small portion is, that is when they actually work. Correct? No? It's just a fun thing. With all due respect. In every video of IPCI, I will bash up SBI. Wherever you see any loan, any scam, SBI first. Right? So that's the thing. So if you see, it's difficult to open account. So people are getting, little annoyed now that I want to help my country. I am a US citizen, but India is my land. I want to help India. Please allow me to do something. Not possible because of this. Clear? So let's hope that these provisions will be relaxed in the near future so that people can, ensure that the COVID pandemic, they will help from abroad. Rather, they can set up NGOs here, and from abroad money can come and they can genuinely help people to get, vaccinated or hospitalization and all those things. SBI New Delhi. Then section 13. Earlier, suspension of certificate was always for 180 days. Now they can, further period of 180 days, they can suspend the certificate if any inquiry is pending. So this entire rule, I have prepared a chart which is easy. What is it? When will I cancel the entire thing? Cancellation of certificate. If during the application itself you have given some false or incorrect information, if you have violated the terms and conditions, if whatever you have done is against public interest, if you have contravened the provisions of the Act, and if you have not engaged in the activity for which the registration was obtained, means you wanted to open a college or you wanted to open a hospital, now you are not doing, you are doing something else. And it is it's a defunct, means it is no longer working. In that case, I am going to cancel. Before cancellation, I will suspend it. Because in India, I should ask why you are not doing it as promised. That is called PONJ, Principles of Natural Justice. So how long can you suspend? Earlier it was 180 days. Now they have added a further period of 180 days. Further period of 180 days. 180 plus 180. FCRA Amendment Act. Then during the time of suspension, after that hearing will happen, principles of natural justice will happen. After you do the principles of natural justice, you can cancel the entire certificate. And at cancellation, there will be a cooling period. After cancellation, there will be a cooling period of 3 years. You cannot reapply. But what happens during that entire period of 180 plus 180? That's like almost a year. What happens to the new foreign contribution? Can it come into India? Will government say no to foreign exchange coming to India? No. So they say with prior approval of CG, you can get that and keep it there. Restriction will be there. What about existing foreign contribution? Like 40, 50 crores or 100 crores is still lying already. What do I do with that? 25% you can do after prior approval. Means 25 CR can be utilized after prior approval. Remaining 75 CR only after revocation of the suspension. You can utilize only 25 crore, that too after permission. Remaining 75 crore cannot be utilized until the suspension is revoked. Very clear? This is the amendment. 180 plus 180 is the amendment. You can check out. You can read this, but you can do the chart. So I've included charts also. It makes it easy for you. Then a brand new section has come, 14 capital A, which talks about surrender. Under surrender of certificate, what should I do? I make an application to the central government. Central government will conduct an inquiry as to why voluntarily you want to surrender. And all the property that was there of that particular organization will be transferred to a new authority prescribed under FCRA. He will be like an official receiver. Will this fellow also be called as a public servant? Yes. And ultimately, certificate is surrendered. Same dialogue is given here. They may permit if all these four conditions are satisfied. Right? Then we have one more section, 12 capital A. Again, very simple. I've made a chart. This will summarize everything. Under 12 capital A, if I want a certificate, I have to take prior permission, obviously. Or for one particular transaction, if I want a prior permission, or if I want to renew the certificate, renewal will happen, every 5 years. I need to give some KYC documents, know your customer norms. What all should I give is this particular section. For citizens of India, Aadhaar card. Now everywhere they're taking the Aadhaar card. For foreigners, it is the passport. Foreigners are here, they are running this organization. For NRI, non-resident Indian, you have to produce your OCI card. That is under FEMA, there is an overseas citizen of India card. That card you have to produce. These are the KYC documents. These can all be asked for 2 marks, 3 marks like that in the examination. Next, section 16. Every person who has been granted a certificate under section 12 shall renew it within 6 months from the expiry of the period. The period is 5 years. Just like our articleship is 3 years, and then at the last 6 months of your articleship, you can do final, all that we had. Ours was 3.5 years. In the last 6 months of our articleship, we could do CA final. Like that, your entire thing is 5 years. And after 4.5 years are over, you can apply for renewal of the certificate. Then one dialogue is added. Whatever is there in bold is the amendment, addition. Provided that the central government may, before renewing the certificate, make such enquiry as it may deem fit to fully satisfy itself that 12 subsection 4 conditions are satisfied. What are they saying? The central government may, before renewing the certificate, make such an enquiry as it may deem fit to satisfy itself that the person who is applying, person means that particular organization is applying for renewal, has fulfilled all the conditions of 12.4. What is 12.4 condition? This one. The following shall be the conditions. Person making an application is not fictitious person or is not a benami. I am not using it as a front to receive money from abroad. There should be a proper person. That person who is making the application has not been prosecuted or convicted for indulging in activities aimed at conversion, proselytization. If you see my video of why this act came, I have explained there. Through inducement of force. You would have seen all this ra 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 baba. You just go to Google and say Ra 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 Baba. You will get. That fellow was a chartered accountant. Father Sebastian Martin, if I'm not wrong. He was into conversion from one religious faith to another religious faith. Anything for that matter. Hindu, Muslim, Christian, whatever conversion covered. You will not be allowed. Has not been prosecuted or convicted for creating communal tension. Lesser said about this, the better. We all know what we are talking about. Communal tension, disharmony. Has been found guilty of diversion or misutilization of funds. Engaged or likely to engage in propagation of sedition. Sedition is what? Speaking against the country. Or advocating violent methods to achieve the ends. Right? Not likely to use foreign contribution for personal gains. Has not contravened any provisions, has not been prohibited. So basically all these things you need to see. That is what this dialogue says, connects to 12.4. So 12.4 also you have to understand properly. So government before renewing should check all these things. Is he a fictitious person? Has he been convicted before? During these 4 years was he involved in sedition? Did he create communal disharmony? All these things. Alright buddies, let's dive into the last part of IBC, which is PPIRP. So we have sent you the addendum to module 1, even to the Google Drive students and even to you guys. Kindly note, this is applicable to both paper 4 and paper 6D. I was expecting them probably not to give it in paper 4, but the same thing they have given. So both paper 4 and paper 6D, the same pre-packaged insolvency process. This is the brand new amendment, that addition rather, not even amendment actually, it's an addition, complete addition of a different set of insolvency. If you see, we discussed the normal insolvency process yesterday. The timeline would be the corporate insolvency resolution process. If you see, application to AA, 14 days, and then they will admit or reject, and within 7 days they'll communicate. But on the date of appointment of date of commencement of CIRP is equal to date of appointment of the RP, that is the IRP, interim resolution professional. And then other things go ahead within 3 days public announcement, then Creditas to submit the claim, IRP to verify the claim, constitution of COC. Within 7 days of constitution of COC will form the first meeting of COC. And then circulation of information memorandum, resolution applicant to submit resolution plan, approval of plan by 66% majority, submission to NCLT, NCLT will accept or reject. If they reject, liquidation. If they accept, then that's it. Entire thing should happen within 180 days with a one-time extension of up to 90 days. Overall 330 days. As far as fast track insolvency is concerned, that would be how much? How many? 90 days, and then with 75% majority, one-time extension of 45 days. Then if liquidation happens, you saw the liquidation timeline. Order of liquidation, liquidation commencement date. Within 5 days, you should make a public announcement under regulation number 12. Within 30 days of the entire liquidation, you need to collate the claims. And within 14 days of collation of claims, you can either withdraw or vary the claim under section 38. And overall 30 days from the collation of claims, you will verify the claim, section 39 plus regulation 30, and after verification, you will either admit or reject. After admission, 7 days communicate to creditor, and 14 days creditor may appeal to AA. This was the entire scene. Now, with the insertion of new sections altogether, right, new sections altogether, like if you see 11A, then in the entire here 54, A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P. These sections have been inserted. Yes, till 54, full series 54. Because 54 and 55 they had to insert something. So what to do? A, B, C, D, E, F. If A to Z is over, then they'll say A, B, A, C. Then if you remember in service tax, in the service tax was there, no, there it was ZZZZA, ZZZZB. It had gone to that level. It was a part of the Finance Act that time. Yes. Anyway, now GST it's not like that. So when you don't know how to insert, then it will go on like that. A, then AAA, 4A, 5A, like that. No choice. But anyway, so this is the scene now. 54. A to K, and then here some changes here and there also, like 77 capital A also has been inserted. So what exactly is this pre-packaged insolvency all about is what we need to discuss. That's why our addendum will help us. So guys, this pre-packaged insolvency, generally normal company, all that is okay, you understand, fine. New companies will come and take over, okay. But what about smaller companies? Now I started a very small company. It is a manufacturing unit and it comes under the definition of the micro, small, medium enterprise. We will see what is MSME later. But let's say it's a small enterprise. It is not so big that others would want to come and take over. It is not so small also that if I close down, nothing will get affected. People will get affected. I have employees. I have a good set of 20-30 employees. But ultimately what I am trying to tell is, I do not want to miss this opportunity to ensure that, this company will just go down without a fight. Now I was a promoter, I started this MSME, then I left and somebody else took over. In the sense somebody else was running the business, I moved on to other areas. Now I come to know my company, which was one of my babies, it is not doing well. There is some problem. In MSME, the issue is, of course, working capital banks will not pay, will not give the MSME. They'd rather give the big shots than the MSMEs. So basically, because of this working capital problem or any issue, I'm going down. Now I don't want to go down. If I go through insolvency, let us say I still go to insolvency and I go to this IBC and I'll knock on the door. Now when I knock on the door, the problem is what? When I enter the within the creditors enter the line to take over the company. The problem is, even if they form the COC, the predominant experience has been that nobody wants to take over MSME. They'd rather start something afresh or, probably close it, but nobody wants to take over. 180 days and 90 days, by that time, no one was interested. And let's say I am this promoter now, I want to take over. Can I take over? No, because promoter, you see, I am 29 capital A, related party. I want to come back and take over. I am not a willful defaulter, I want to take over. So the problem was, even a person who was a ex-promoter but was not a willful defaulter is not able to take over under 29 capital A. And the business of a MSME, micro, small, medium enterprise, is only, like for example, let's say I manufacture ice creams, guys. I manufacture ice creams. Small enterprise, my favorite. So the thing is, I manufacture ice creams. It's the small enterprise, but still, I know the ins and outs. I know the entire working of the entire thing. Other persons will never know. MSME is peculiar in such a way that only the person who started it will know in and out of the business. It's very difficult for others to understand the business. So you need a lot of connections, lot of networks, and other people cannot do. One is a large organization with lot of processes. One is a small organization which only you handle. And this is like something in between, which is probably gonna get larger, but ultimately the entire working, the entire mechanism only is known to you. So anybody else, first of all, cannot take over, and then I cannot take over because I am an ex-promoter. So to that extent, actually, in 29 capital A, there was an amendment, long time back, couple of years ago, where they see, if you are a willful defaulter in accordance with RBI, etc., is not eligible to be a resolution applicant. But however, they tried giving, if you see, couple of exemptions here only. If you see the 29 capital A entire video, you will come to know that they tried giving in these, particular explanations, etc. Here, this financial sector regulator, financial entity, they tried giving, and they also gave a couple of clarifications saying that If you are an MSME, then it's okay, not needed. You can take over and all that, because nothing was clear. And guys, one thing you need to understand, if MSME goes to insolvency, it's a public notice will be given, everybody will come to know. It's little, humiliating. And because of that humiliation, no one would ever want to come and take over. See, it's not such a huge company that I don't care what people think, I'll take over. And it's actually good. If ArcelorMittal took over SR Steel, ArcelorMittal's share prices doubled, tripled, quadrupled. But if I take one small MSME, people will laugh at me. And that's the idea. That's the experience. First problem was no one was taking over. Second problem was promoters who want to take over are not allowed. Third problem was others who take over also, it was always failing because they didn't know what to do. Complex network, if you have seen, for example, not an MSME, just a random example I'm giving. If you have seen the Dabbawalas of Mumbai, right? Dabbawalas of Mumbai, they exactly know which home to pick up the lunch from, where to drop it, then again next day where to pick up, exactly. And it's such a complex network. People from Harvard University, Oxford University came to study that. A complex network of Dabbawalas. And unfortunately, Dabbawalas now are not doing well because of the pandemic. I mean, now hopefully things are, resuming, but think about it. So rather than you carrying the lunch in the morning, you are getting hot lunch given by the Dabbawalas right on time. They just get into the train, they know exactly where to go, where to pick up from. Incredible network of hundreds of people. Now think about it, if some corporate wants to take over Dabbawalas, I'm just saying the entire concept, how is it possible? They don't know anything. Will you draw up SOPs, standard operating procedure? So all these big corporates have drowned themselves in SOPs, standard operating procedure, than anything else, right? So the thing is, so when you have built everything from scratch, you know the in and out, the nook and cranny of the business. You have the networking skills. You are like, for example, the Dabbawala. How can a corporate come and put the SOP and take over everything? When you understand the pulse of the customer. So that is the idea here. Very simple. You cannot drown yourself in all SOPs. There is one very good movie called Rocket Singh. Salesman of the Year. Very, very good movie. You should watch it. Ranveer Singh. Ranveer Singh. Ranveer Kapoor. Ranveer Kapoor's one of the earlier movies. Super movie it is. Flop, super flop movie. Obviously, because it probably didn't have any songs also actually. It's how this guy, in a computer, computer retailer store, how he changes by creating a network. Wonderful movie, super flop movie. Rocket Singh, Salesman of the Year. In Ranveer Kapoor is there in that movie, still it was a flop. After that only started doing all stupid masala movies, because he knew, I think, people want to watch me in masala movies only, I'll not do this. Yeah, so all these other things he started. But then this was a wonderful movie. If you see, there also he creates the network. Now another big shot wants to take over that company, it's not possible, guys. Ultimately, it's the network that you create. So the government understood that superbly, and they said, yes, now I have to do something about this, guys. That is why you need to understand why this came. Now, provisions we'll discuss, but you need to understand why it came. So they said, okay, rather than somebody taking over, why don't you only continue? And let's try to revive you like that, without anybody taking over. From a creditor's, possession. From you have a debtor's possession now, from a creditor's, generally in IBC what happens, who takes over? Creditors. But here, this is similar to SURFACE, not exactly SURFACE, similar I told, similar. So in SURFACE what used to happen, if a borrower has given money and, taken money and is not paid, another company called a securitization and reconstruction company would obviously take over the security from the bank, and they try to pump in some money to the borrower. They try to do something with the borrower. They try to help the borrower from the outside. Who remains at the heart of the business? The borrower. For example, in this case, MSME. So, within IBC, there is a concept which is against IBC. What is IBC? Creditor will come and take over. Debtor, from debtor's possession, it is creditor's possession. But here, what is the scene? It's reverse. Where the creditor will not come, the debtor will remain there. That is why it cannot come part of the other sections. You needed a separate section, set of sections altogether. So this is the classic thing of, pre-package. So that is why you know that it is already happening. So that's why I'm going to pre-pack it for you. Let's see. The President promulgated the Insolvency and Bankruptcy Amendment Ordinance. Cabinet had approved on 31st March. It is an efficient alternative insolvency resolution framework for corporate persons classified as micro, small, medium enterprises under the code. In a manner, again, which is quicker, cost effective, value maximizing, least disruptive to the continuity of MSME business. MSME business is such that you cannot wait for longer time. You need to do everything then and there. You cannot keep waiting for things to happen to you. Unlike other businesses which has deep pockets, this will not sustain. This will not sustain. And it preserves the jobs. The initiative was based on a trust model, and the amendments honor the honest MSME owner. Basically, it is on the trust model. You continue the business, guys. I will do something what we can do. It is definitely to honor the honest MSME owners who unfortunately due to, see for example the Dabbawalas, I'm just saying, do you think they lost their efficiency? No. Because of the pandemic, things happened. Because of the pandemic, a lot of MSMEs also are almost shutting shop. That's why it was very imperative for the law makers to come out with this MSME Act, this pre-package very, very quickly. This is all pandemic effect. Though the concept of MSME was being discussed for 4 or 5 years ago only, but this came, like the second gear, third gear, fourth gear came because of this. It is expected that the incorporation of pre-packaged insolvency will alleviate the distress faced by MSME due to the impact of the pandemic, and the unique nature of their business, duly recognizing their importance in the economy. So rather than, I showed you that dosa video, no? Did I show you? Dosa. That street dosa, yeah. So that dosa, how much does that dosa fellow earn? 3 lakh, 1 lakh rupees, 2 lakh rupees per month. That is India unincorporated. If you have a company in that, that is nothing but the MSME, micro, small, medium enterprise. That fellow is not MSME, just saying. So, provides an efficient alternative insolvency resolution framework where lesser burden on adjudicating authority, assured continuity of business, and assurance that everything will come. So what is pre-pack? It's a financial plan where restructuring is pre-posed and agreed in advance with creditors. This is like a compromise and arrangement. Compromise and arrangement which we discussed in a more structured manner under IBC. Compromise and arrangement in a structured manner under IBC is pre-pack. It's a quasi-formal procedure. Quasi means resembling. It resembles a procedure where the resolution plan is finalized before the actual initiation of the proceedings only. Imagine. Compromise. Sir, things are not working well, sir. If I go for IBC, nobody will come, sir. Let's keep that as a last resort. Let's try this route. If this also nobody comes, then I'll go there. Then it's my fate, my destiny. But at least let me try it under this law, is what this law is all about. Quasi-formal procedure. So where we decide the entire package before we even initiate any proceedings. The entire framework of pre-pack revolves around the corporate debtor having control of its entity, control to manage the affairs. So, unlike IBC where the possession will be transferred to the creditors, here possession will remain with the debtors. Motivation for a debt burden stressed out corporate debtor in pre-pack is to figure out an agreeable way for its own corporate revival and save itself from its death. For the creditors, pre-pack would be a faster route. Even though section 12 of the code maximum is 330 days, process does not end within 180 days, etc. So here there is something different, time limit and all that we will see. Benefits, of course, cost effectiveness, guys, because the corporate debtor continues with the existing management during pre-pack. It avoids the cost of disruption. In MSME, one day disrupted activity gone. It does not shift the management to the resolution professional at all. And then it does not shift to the resolution applicant initially. Later it does. It also saves cost of the resolution professional to manage the business. See, resolution professional in IBC has to figure out everything and start managing the business. That will take time. Here nothing. And the process remains away from the limelight till the commencement of the formal process. So until the process begins, it is away from the limelight. Nobody knows about it. You are still talking behind closed doors within four walls with the creditors and arriving at a compromise or arrangement in a structured format. So compromise arrangement is under 230, 231 of Companies Act, but under pre-packaged it has been structured into that 54 ABCD series. Proceedings are usually outside the court, costs are reduced. Speedy resolution process, it is difficult to keep the company alive in a stressful state. That's why it enables a faster resolution, preserves the value of stressed assets, thereby increasing the possibility of resolution. Value maximization, any distress asset has a life cycle, and the longer it stays in a state of stress, greater depletion it suffers. So here it preserves the value by cutting down these elements of the formal process. Less burden on courts also. The courts are overburdened with cases, do not have the capacity to deal with cases. A pre-pack has the potential to reduce litigation due to its informal and consensual nature. Consensual means two people are agreeing. I say, yes, I agree, let's do it. Does not require at any cost any involvement of court during the informal part of the process, and requires a minimum role of court as well. There is a need to have a functional out-of-court restructuring process, since the vast majority of cases are restructured out of bankruptcy. So this is an out-of-court settlement sort of a thing, guys. And most importantly, the entire structure is semi-formal. More they go into mediation and conciliation. So arbitration is where there is already a dispute, but there is still this, ill will or bad will between me and you in arbitration. In conciliation, I try to empathize. In mediation, there will be a mediator who will try to settle the dispute. So this is more like conciliation and mediation. The biggest advantage is that the proposed resolution plans are not under any form of scrutiny of the public. Public will not know at all. In other big companies, Arnab Goswami can shout, "Nation wants to know." Here, nation will not know under any circumstance. It's a small company. It is a small. MSME are like the backbone of the economy, to be very honest. How many big companies do you see? Okay. How many very small, you are unincorporated? Yes. India unincorporated can be the backbone, but they do not pay taxes. All your Pani Puri fellows and all those things, you cannot underestimate them, guys. You cannot underestimate. I was just reading something that where one guy went on a train, and when samosa fellow came, and he had fully finished that samosa that day. He was very happy. He is just a samosa seller. We feel sad. We just asked him. So this guy asked him, he was a chartered accountant only, asked him, "Sir, okay, I hope today you are very happy." "Yes, sir. I sold all the samosas today." Good. "How much do you make? Isn't it very tough during the pandemic?" "Sir, during the pandemic it was fine, but now it's brisk business." How many do you sell? Sir, 3,000 per day. Because I go in these trains, 3,000. So do you manufacture 3,000 samosas? No, sir. A samosa manufacturer is there. In bulk he gives. I just sell. How much did you get? Sir, I get 1 rupee per samosa. So whatever I am charging some 15 rupees, I'll give him 15, he'll give me 1 rupee from that. I'll take one. So think about it, 3,000 samosas is 3,000 rupees per day. 3,000 into 30. 90,000 rupees per month. No tax, no EMI, nothing. 90,000 hard cash. For us, TDS, take home salary. Correct? Take home. What is your take home? What is your CTC? What is your take home? If you see employees don't care about CTC, hey, that is cost to company. Tell me my take home salary. I will have to look at my expenses from take home salary. So 90,000. So you should never underestimate these people. They are the real unincorporated, really minting money. Not all, of course, but it's a lot of hard work, guys. But then you are also working hard. No, we are also working hard. After following all the laws, we are working hard. They are also slogging, no doubt. But what is the point of education? I showed you that dosa video that day. 1.5 lakh rupees per month is making profit. Yes, there's a lot of hard work. Yes, everything I agree. But 1.5 lakhs, no tax, nothing. So, here also, but the real backbone of the economy are the incorporated institutions like MSME, which give employment to 50 people, 100 people, like that. There are thousands and lakhs of MSMEs giving employment like that. So rather than larger corporations like Infosys, Wipro, yes, they are a different league altogether. India unincorporated is a different league where no money comes into the system at all. They are just, basically nothing comes to the government. There cannot be any development. Whatever government is getting is major chunk, without a doubt, is from this MSME. So the government wanted to help them revive rather than kill the company. Because killing a company would be like killing of a dream. And once a dream is killed, then that's it. So the government is trying to do something. One such thing was as the startup. Panipuri, startup, not that startup, yes, startup, which has the ability for innovation and expansion beyond comparison. But here, this is to ensure that things start going ahead, moving ahead. Need for advertisement and all is not there, guys. So it incentivizes the party to propose better terms and also protect the integrity and goodwill of the business. Only after a final agreement is reached, then I will go to the court. Basically, compromise and arrangement in a restructured format is pre-packaged, and it adopts a flexible approach. The pre-pack follows a debtor in possession model. It's totally against IBC. It's debtor in possession model. Management is not transferred to RP. So these fellows unfortunately, see the haircut that other companies have taken. You will be shocked. SR Steel, they took a 23% haircut. Bhushan Steel, 38% haircut. See Videocon. Con only it is. Con job. 94% haircut. 46,000 crore. They settled at 2,900 crore. This is the state of big companies. Who will come to MSME? What is the value of MSME? 100 crore. Okay, how much will you? 10 lakhs? 15 lakhs? So when these big companies only are dying with this haircut. This is shave only. Where haircut? Correct? When you go, sir, full shave. Little bit you leave here, sir, for style. That's it. At 94%. Full shave this is. No haircut there. So, that's the problem, guys. And delay also due to COVID. More than 270 days, 738 cases. 738 cases till now. I mean, this January, March of 2020, some total admitted cases 3,774 cases. So many cases, guys. Loads of cases. So if you see, they took the model of US and SICA, Sikh Industry Companies Act, which spoke about debtors in possession. US also debtors in possession. So the time frame took a longer time. So that model only they took, debtor in possession model, and they have framed this pre-pack. The control and management being vested with the corporate debtor, it is necessary to pivot a set of responsibilities and duties towards the creditors in addition to the fiduciary duties. Checks and balances to ensure the interests of the creditors are protected. They are always protected. Conduct of the corporate debtor is such or where there is no viable business. So process of pre-pack is very simple. COC can by 66% of the voting present close the process of pre-pack, where the conduct of the corporate debtor is such that there is no viable business model, then the COC by 75% voting decide in favor of liquidation. Role of the RP, there is no shift in management, mind you, but he has to ensure that all the dealings are fair and transparent. And the entire pre-packaged insolvency he should take care. But he doesn't take control of the business. That's the best part. He is more of a advisory role, supervisory role than a managerial role. Costs are also involved. Access to interim finance I need to get. So guys, 240 capital A of the code provides that the code is applicable to micro, small, medium enterprises. This came from 4th April 2021. For the first time ever, this will come in December 2021. But as I told you, Institute, when all eyes are on pre-pack, they will also give PRAS 2-3 amendments also, 2-3 attempts amendments which we have done. So don't only concentrate on this, also concentrate on that. For all you know, one question also may not come, I'm just saying. Then it will come in May 22 and all those things. So, but you never know. Institute may think that we will think like this, then they will give. Correct? So do not play with the institute. You cannot. So they have been playing us since a long time. Let them play. Let's be prepared for this also and the previous one also. Previous one anyway we have done so much in depth. 8.5, 9 hours yesterday we have discussed. So today we'll be checking this quickly. So as however, considering that MSME has limited capital, easy corporate structure, etc., CIRP may not be feasible for them, right? Apart from considering that the increased default of 1 lakh to 1 crore, obviously the MSME concept only will be eliminated with 1 crore and all those things. That is why, by virtue of notification on 9th April, minimum threshold is how much, guys? Default of 10 lakh or more. Important. For MSME, what is the minimum default? 10 lakh or more. Before 24th March 2020, normal companies, 1 lakh. Right? So 24th March onwards, 1 crore. But for MSME, whatever it is, from 9th April 2021, 10 lakh or more. It's a very recent change. Important. What do you mean by MSME? This is applicable from 1st July 2020 as per the MSME regulations. The composite criteria is what, guys? Investment in plant and machinery or equipment and annual turnover. Sir, MSME is only selling panipuri or everything? Is it a good or service? Both. Manufacturing enterprises and enterprises rendering services. Both. Micro means what? Investment in plant and machinery or equipment not more than 1 CR. Less than or equal to 1 CR. And annual turnover not more than 5 CR. Micro into 10 is small. How much? Less than or equal to 10 CR. What? Investment in plant and machinery. Then turnover 50 crore. Small into 5 is medium. Investment in plant and machinery, how much? 50 crore. And turnover, okay, not more than 250 crore. Turnover not more than 250 crore. So investment 1 crore, turnover 5 crore into 10, 10 crore, 50 crore into 5, 50 crore, 250 crore. Clear? So first of all guys, it should be 9th April 2021 onwards. What is the default? 10 lakhs or more. Then which companies? Micro, small, medium enterprises are registered as an MSME. And what is micro, small, medium enterprises? This one. Less than or equal to 1 crore and 5 crore, 10 crore, 50 crore. So if you just see the MSME, website, there is this registration you have to get done called Udyam registration. So you can just go to this msme.gov.in. Picture to has to come, huh? Yes, we'll close the picture. Yes, our Olympic medalist, gold medalist, yeah. So that's the thing, yeah. Then, so all these things you can check Udyam registration. Then here only if you see, no, what is MSME, from there only I copied. What is MSME on dialog, here what's MSME, it will open. Yes, thank you sir, thank you so much. Yes. So if you see, this is the scene. You have to register new entrepreneurs, all these things, Udyam registration portal. They have given here. You should organize a full thing, entire procedure, it will take you there. This is the registration booklet they have given. So basically you should have done all these things guys. Enterprise will get a Udyam registration, self-declaration, no requirement to upload any documents, paper, certificate. It's a self-declaration. Again, it's all, ease of business. Then composite criteria. Both criteria should be specified. All units with GST-IN that is listed against the same PAN shall be collectively treated as one enterprise. And turnover and investment figures for all shall be seen together. If you just have one GST number, many branches you have, many divisions you have, then under one GST number, that's it. Deciding the category of micro, small, medium enterprise. Investment, calculation of investment in plant and machinery will be linked to income tax return. Where no prior ITR is available, investment will be based on self-declaration, all these things. Again, everything, even the plant and machinery will be as per income tax rules. You have to have an invoice, obviously. Turnover, export of goods, services, both shall be excluded because Here I am not talking about exports, I am talking about in India. Then everything turnover exports will be seen as per the Income Tax Act and GST Act. Export turnover and normal turnover. Yeah, thank you. Yes. We will end today, don't worry. Yeah. So, that is the thing. So, 250 CR. Same thing. Come back. So, with that, this ordinance, first of all, amendment of section 4. I have given all the amendments here in this sequence. So, one is amendment number 4, which obviously speaks about 1 crore, and also from 9th April onwards 10 lakhs. We have already seen this. Now, this speaks something about the base resolution plan. Then corporate applicant. Everywhere they have changed, guys. First is base resolution plan, they have added 5 clause 2A. Base resolution plan means a resolution plan provided by the corporate debtor under 54 4A. So basically, corporate debtor, they themselves will give a base resolution plan. So the resolution plan given by resolution applicant is called resolution plan. Resolution plan given by corporate debtor itself, MSME, saying that boss, we will change now, please follow, let's follow this. It's like this compromise and arrangement plan. It's called base resolution plan. Corporate applicant, you know, who is a corporate applicant? In section number 10 of IBC, we have seen corporate applicant will be a person from the corporate, person who either the CEO, CFO, manager who is authorized. But here in this definition, they have also added member or partner of the corporate debtor who is authorized to make an application for corporate insolvency resolution process, or this is the addition, pre-packaged insolvency resolution process. Means what? Even if you are a member or partner of the MSME, you will be coming here. By the way, guys, MSME should be sole proprietorship or partnership firm or company. MSME. Honestly speaking, MSME can be anything. General MSME I am talking about. MSME under Udyam registration, it can be anything. It can be any entity, partnership firm, it can be sole proprietorship, it can be company, no problem. But here, what will it come? What individual will not be coming here. So here it is what? Partnership firm also is not there. Here it can be LLP and company. LLP and company. But technically MSME can be anything. So we have to wait and see that in the future they may also allow individuals, firms, everybody, because it's a separate category of sections only, no? So 54 years, MSME, so please come. Everything can be allowed. It just came now, so we need to wait and watch. Still cases are slowly building up. Those cases that are now pending are only with respect to companies and all that. Tomorrow anybody registered as an MSME can go through this actually. So in that sense of the term, it is an entire addition to the concept of IBC. So IBC has CIRP different, bankruptcy different, then MSME different. Got it? So, and the best part is, concept only is reverse. But keeping the preamble in mind, maximization of value and also maximization of assets and promoting entrepreneurship, if you see in the preamble. But rather than a creditor's possession, we still have the debtor's possession. So that concept is different here, that we need to understand. So that's why if you see here individual, but here only they give, see, a member or partner of the corporate debtor who is authorized. So corporate debtor will be what? Company and LLP. That's why I am saying. Initiation date is when I make an application. Who will make an application? Financial creditor, operational creditor, or here in this case corporate applicant will make a application under pre-packaged insolvency resolution process. Interim finance, yes, even in pre-packaged insolvency process you can take interim finance. These are only the amendments, they have added everywhere lines. Who is an officer? Officer will be as per 2 clause 60 of Companies Act. Designated partner. And officer will also apply to chapter number 6 and 7. So this entire MSME starts from 54A. Is your chapter 3A. So the chapter 3A also gets covered as part of this. Chapter 6 and 7 is linked to 3A anyway. 2 clause 60 is again defined. This is 2 clause 60 of Companies Act officer will come here. So you need to submit something called as a preliminary information memorandum. All that we'll see. Then pre-packaged insolvency resolution process cost. Pre-packaged insolvency resolution process period. All these definitions we'll see as and when we see the things. Amendment to section 11. Persons who are not entitled to make application. Remember who all? Corporate debtor undergoing a CIRP cannot make, or now also they have added what? Pre-packaged insolvency resolution process. A corporate debtor remember section 11? Who cannot make application under CIRP? First, corporate debtor was undergoing CIRP, but he can put against another company that we have seen. But he himself cannot put. Now, even if you are going through pre-packaged, let it finish. No, why hurry? Let it finish is what they are saying. Then AA has been added. A financial creditor or operational creditor. Very, very important. How? Financial creditor or operational creditor cannot make an application to an MSME who is undergoing pre-packaged insolvency process. When I am going through pre-packaged insolvency process, the financial creditor cannot go to NCLT and say, put CIRP there. NCLT will say, wait bro, let it go, let them do, they are finishing it, no, let them finish. First of all, corporate debtor itself cannot go and go to NCLT when pre-package is going on. Second, when the pre-package is going on, I am trying to revive, I am trying to really genuinely trying to help, and you are going there and sabotaging my entire operation by applying to NCLT under CIRP. Right? That's why. That time I didn't do all this when doing normal IBC because you would not have understood. Now you are understanding. This is a separate process, guys. Please understand, separate process. Corporate debtor having, this is fine. B is in BA. Corporate debtor in respect of whom a resolution plan has been approved under chapter 3A. 12 months. So basically, if your base resolution plan or any resolution plan under chapter number 3A, that is pre-packaged insolvency resolution plan, is already approved, wait for 12 months, no? Same like before. CIRP also, if you have undergone, wait for 12 months. Here also, if you have undergone this, wait for 12 months before you apply for CIRP. PPIRP plus 12 months, at least wait. After that, you can go for CIRP. These yellow things are the changes. And AA becomes very important because when PPIRP is going on, financial creditor, operational creditor cannot come into the picture. Who puts the entire thing, gives the plan, etc.? Corporate debtor puts the entire thing. Applicant is the corporate debtor. Same I have given here, 54 capital A. 54 capital A. Corporate debtor will be the MSME, that is company or LLP. As of now, as I told you, it is only company and LLP. As I told you, tomorrow going forward, they can say all MSME please come. Because as of now, they have only told in that definition, they have changed what? Corporate debtor, who is an MSME. You see 240 capital A. See, I told you, no? In 29 capital A, there was all these provisions. There they had given a guideline saying that it's okay, no problem. Then you see 240 capital A, notwithstanding anything to the contrary contained in this code, provisions of 29 capital A, that to C and H, those two deadly sections are there, shall not apply to resolution applicant in case of CIRP or prepackaged of any micro, small, medium enterprise. Means if you are a promoter, you can still take over the MSME, provided you are not a willful defaulter. Subject to subsection 1, the central government may in public interest by notification, that happened on 9th April only, direct any of the provisions shall not apply to MSME or shall apply to MSME. Again, it applies to MSME. This will be laid before the parliament. Same thing happened. All this is fine. For the purpose of this section, expression MSME means any classes of enterprises classified as MSME that we have seen. So 54 capital A, corporate debtor, who is an MSME, means company or LLP. We know micro, small, medium, 1 to 5 into 10 into 5. Default how much? Section number 4, greater than or equal to 10 lakhs. Default greater than or equal to 10 lakhs. Online people, just quickly, picture. First picture, these three, right? Because you will take time for you to sit and copy everything, so just take a picture. First is these three. Second, here, conditions. What are the cumulative conditions? Within 3, it's all there in 54 capital A. This is just revision I am doing. Within 3 years before the application. Which application? PPIRP application. Should not have completed CIRP or should not have completed PPIRP. This is before which application? Application of PPIRP. If you are making an application of PPIRP, you should not have completed PPIRP or CIRP within how much? 3 years. 3 years, minimum 3 years you should not have. Give breathing space. Mind you, section 11, don't get confused. Section 11 is for CIRP. 12 months, that is for CIRP. Don't get confused. This is PPIRP application. Second, you should not be undergoing CIRP. If you are already undergoing CIRP, you cannot come back to PPIRP. If the NCLT has already told, hey, you die, I am pulling the plug. After pulling the plug, cannot come to PPIRP. And you must be eligible to submit a what? Resolution plan under 29 capital A. Corporate debtor itself is eligible to submit a resolution plan under 29 capital A. But we just saw now 240 capital A says, if you are a MSME, that is a promoter maybe, you are eligible, no problem, provided you are not a willful defaulter. Insolvency professional to be appointed as resolution professional. Insolvency professional to be appointed as resolution professional. So guys, here there are two concepts. The insolvency professional. So first of all, who will apply? MSME only will say, I want to do this PPIRP, okay. But resolution professional, who will appoint? Company or financial creditor? See the difference. In IBC, who will appoint RP? Financial creditor. Who will apply also under to NCLT? Financial creditor. Here, who will apply? MSME. But who will appoint RP? Financial creditor. Proposal. There are two things. First, proposal will come, then approval will come. That is why it is different. Proposal will be given by financial creditor who are not what? Related party. A financial creditor, non-related party, who has minimum 10% value of the total financial debt. And what is this total financial debt? Debt due to non-related party financial creditors. If the entire financial debt of the company was, let us say, 1 CR, in that related party only had given 40 lakhs. And non-related party had given 60 lakhs. MSME guys, lot of related party transactions will be there. Family, I'll take from family only. So 60 lakhs is the non-related party financial creditor. So in that, proposal should move from anybody who has given minimum 6 lakh loan. Did you understand? Yes. Anybody? Online people, are you understanding? I told you this is not nowhere related to IBC in any way. It is a completely different process. Online, they are like, you do whatever you want. Today is the last day. Right? Yes. So, 10 lakhs. Sorry, 6 lakhs in this example. They will make a proposal. They will give a proposal. And approval finally, that proposal ka approval should happen. How many people under 54A to E? I am happy that 6D classes got over, that IBC classes got over before this, because in that we analyzed full in depth and made these charts. So for fast track it becomes very easy. Otherwise you have to sit and do everything now. Anyway, so 54A to E, the financial creditor, non-related party. This is approval. How many percentage? 66% of the total financial debt. Again, debt due to non-related party. Means what guys? In that 60 lakh, proposal will come from 60 lakhs, 6 lakhs, sorry. But approval will be 6 into 66%. 60 lakh, sorry, 60 lakh into 66%. Approval will be 60 lakh into 66%. Got it? So these are all, only this you study and go, more than enough. I have taken honestly, in the regulation is not part of the syllabus by the way, but institute always expect the unexpected. Institute's tagline only should be like that. ICAI, always expect the unexpected. Regulations are not there, still I have given the regulations, it's given in the addendum also. And fast track students, no need to touch the addendum also, leave it, study these charts, enough. Then declaration. What declaration? If from fourth point, okay, quickly. Fourth point is eligible to submit resolution plan. And fifth point is insolvency professional to be appointed as a resolution. So for you, if you are an insolvency professional, see the opportunities. You can be interim resolution professional, liquidator. Then now under this also, PPIRP, you can be. You can be authorized representative, home buyers, correct? Superb opportunities. And to pass the exam. Yeah, that is there, but you need to pass that, but you pass, apart from CA, you will have that also, right? Declaration, majority, what declaration you should give? We'll see. How many should give, guys? Majority of the directors if corporate debtor is a company, and majority of the partners if corporate debtor is a LLP. So these provisions of MSME as of now are only applicable, as I told you, to company and LLP. Tomorrow they can add anything also. As of now, this many things. And regulation 16, you should do it in form number P6. Regulation number and all not needed, but form number P6 is the regulation. So application of PPIRP should happen within 90 days. Of what we'll see, and of this declaration. So we'll make a declaration saying that everything is okay, absolutely no problem. We are not doing to cheat anybody. We are genuinely trying to revive, and within that 90 days of declaration, what will you do? That's what. I am not doing it not to defraud anybody, and I swear that I'll make an application within 90 days. In the declaration, you should tell that I am making a declaration now, declaring that within 90 days I will definitely apply under PPIRP. And then also name of the IP decided. Before that I will go to the financial creditor. See, that's what, pre-packaged. First step, go and put one dive to financial creditor. Sir, no money, please help. So we can either do compromise and arrangement in company, or sir, we can do this new thing called PPIRP. So first what we will do, sir, first you propose one IP. So that non-related party, sir, in this 1 crore loan that I have taken, 40 lakhs my family members only I have given. So that you leave, I will handle them. They are my family members, no tension. They know that I am on waste body, they have already invested that money, gone now. So you leave. You 60 lakhs you have paid. In that you propose, sir. Propose. Majority is always simple majority. There is no percentage, more than half. When I say majority, it's always more than half, unless otherwise specified. So then approval. So among 60 lakhs, sir, you only make one meeting. This is not called COC and all that. Don't use those words. It's not COC. It's just one meeting of all the creditors and you approve this 66%. After that, sir, I will give a declaration. Majority of the directors will sign saying that I will make an application within 90 days. I will not defraud anyone. And also, you have suggested at IP, that fellow's name I am writing in the declaration. Not just that, guys. Apart from that, if corporate debtor is a company, I also need to attach a special resolution. And if a corporate debtor is a LLP, 3/4 of the partners should agree. Doing what? Approving the application for PPIRP. If they ask you what are the conditions under which PPIRP can be granted, 6 marks. Copy paste these points, full 6 marks you will get. First of all, condition within 3 years before application should not have completed PPIRP or CIRP. This is a combined reading of the Act and the regulation. Nothing is missed out. Second, you are not undergoing any CIRP. Third one, no liquidation order. Fourth, you should be eligible to submit resolution plan under 29 capital A. Fifth one, insolvency professional to be appointed as per a proposal by financial creditors who are non-related party, minimum 10% value, and then approval as per 54A 2E, 66% value of the total financial debt, non-related party financial debt. Then declaration should be taken by the majority saying that I will apply within 90 days, not to defraud anybody, name of the IP as above, and along with that I need to attach what? Special resolution. And the financial creditor who is a non-related party with a 66% will approve the filing. Guys, 2 approvals are needed, mind you, important 2 approvals are needed by this fellow, FC. First approval is this, sir. Approval of IP. So first only I will go and beg him, no? First I'll put one dive. In that dive I'll tell, sir, please propose somebody and approve. Then after that dive I will go and finish all this process. Then one more dive. Sir, all the documents are near your legs. Please bless me. One more approval, 66%. Where is court here? Where is NCLT? Nothing. Pre-packaged insolvency resolution process. In form number P4, form number P4. This is approve filing of the application. First I have to approve the IP, then approve filing of the application. Then in 5 and 8, where there is no FC or all FC related parties, then what to do? For all the relatives are asking me, when are you doing CA? What are you doing CA every year? For all that revenge, I took money from them only, and MSME went down. All financial creditors are my related parties. What to do then? Then decision to be taken by OC, operational creditor, who are non-related party. So before this approval, that's what? Corporate debtor to give declaration under point number 6, special resolution on point number 7, and this is the thing, base resolution plan. Telling that, sir, this is my plan, sir. You see. Legal begging. Instead of compromise arrangement, sir, as I told you, business always operates in a very dynamic environment. Things keep changing. During COVID times, people who were supplying sanitizers, then gloves, tubes, then injections, all these people minted money, still minting money. But others like food industry, etc., wiped out. Many such good restaurants, many such good ice cream places, to my sadness, closed down. Right? So the thing is, you need to give this particular, again, approval, declaration, everything, this 66% majority. You give a base resolution plan telling how you are going to change things. That is this part. How am I going to change things? This is the full chart with respect to 54A. Now tell me, guys, one interesting point. CIRP application also is pending by financial creditor. At the same time, I have gone and begged and I have put a PPIRP application. What will I follow? No, the application once admitted. What was the scene there? If a CIRP is already undergoing CIRP. Undergoing CIRP means what? That fellow should have accepted. No, I am saying it's pending. I have still applied that 14 days time. They have not yet admitted. So can I put CIRP? Can I put PPIRP? That's why it's not given. What does it say? You should not be undergoing CIRP. Okay. I have just applied. So guys, that also can be a potential question. That's why 11 capital A is there. The application under CIRP, under PPIRP is to be given under 54C. 3 conditions. First application is this. It's already there. What? PPIRP application is already put in. Second application, immediately one financial creditor who did not agree to this base resolution plan has directly gone to CIRP. Correct? So the application should be taken approval and then you should go to NCLT. No, obviously. They should see the plan and all those things and then finally decide. So first application 54C has already been applied. In next one day only, one financial creditor who did not like the deal directly goes to 7, 9, 10, 9 corporate debtor, sorry, the operational creditor, 10 majority should agree, no, in this thing, application. Other directors go and apply under 10. What to do? So the solution given under 11 capital A is AA NCLT should admit or reject 54C first, then consider second application. 54C means PPIRP. Next, first application is under 7, 9, 10. I come to know application done. So immediately I will create a base resolution plan. Within 14 days I will put a 54C. Why? Remember 7, 9, 10 within 14 days. Within 14 days it has to be applied, approved or rejected by NCLT. In that gap 14 days, to ensure that it doesn't go through CIRP, I will put 54C. Within 14 days. What to do? Beautiful. Law says, please consider 54C first. Only then 7, 9, 10. Because PPIRP should be the first preference. Only then other things. One more thing. 7, 9, 10 already applied. 14 days over, guys. I have told you that 14 days is mandatory or discretionary? Discretionary. But law is the law. Within 14 days, if you had applied 54C, no problem. But 14 days already over. That fellow still hasn't admitted the application, because if you remember Surendra Trading Company, Jugilal Kamalapet, we had clearly seen 14 days is not mandatory. 14 days accepting or rejecting is discretionary. So that case is still taken up by NCLT. They are still seeing whether to admit or reject. But you have delayed. You have filed beyond 14 days. Then what to do? You have not followed the timeline. 7, 9, 10 to be disposed of. Means first here 7, 9, 10, whether you accept or reject. If you happen to reject it, only then 54C. Did you get this, guys? Yes or no? So this is the other thing. (54C) first, 7, 9, 10 later, admit or reject 54C, then consider second application. 7, 9, 10, 54C within 14 days, 54C to be considered first, only then 7, 9, 10. 7, 9, 10 first, 54C is there, but beyond 14 days, 7, 9, 10 to be disposed of, then 54C. Done. Disposed of means you can either accept it or reject it. When I said dispose of, I will come to a decision and then I will do the next thing. Dispose is not to reject. Dispose of means you make a decision and then end it. Dispose is to end it. So guys, if you remember 54A, you have to appoint this fellow. Which fellow? Insolvency professional. What is his duty? What will he do? Immediately after approval by FC under 54A, What is approval? Approval to appoint. How many percentage? 66% of not voting share. Non-related party FC. See, it's a very, very different here. 66% of non-related party FC. If everybody is related party, then non-related party OC. Sir, if everybody is related party, act is silent. We'll see later. They'll come out with some guideline. IP, insolvency professional, will give a report under form number P8. And he should check the base resolution plan. The base resolution plan should actually conform. Conform means FORM, not FIRM. Conform means it should follow all the provisions of 54K. We still haven't done 54K, we'll see. And his fee, superb, his fee will be part of the PPIRP cost if the application is admitted. You see here PPIRP cost, first only. Fee is payable to any person acting as resolution professional. That fee payable. If the application is admitted, directly it will be part of the PPIRP cost. What if NCLT rejects the application? First I'll put dive, then give all the declaration, one more dive, then I'll go to NCLT, big dive. Right? The small dive is all your gods in your house. Then go to temple, NCLT, big dive. There they say get out, gone, rejected. Then what to do? If not admitted or corporate debtor only best party fails to go to temple, it will be borne by the corporate debtor from a separate bank account. So guys, the moment this PPIRP happens, you should open a separate bank account. For all the expenses, income, whatever that goes into, it goes into PPIRP. From that account you should give. Anyway, plus you should take a consent from him in form number P1. Regulation 7. Eligibility norms. Remember, he should be independent director. All the provisions of 149 should come. Same provisions, no change. Eligibility norms are similar to IRP/RP under CIRP. Should not be working in a legal firm or a auditor firm. Legal firm, if the amount transaction is 5% the turnover, remember? Sir, yesterday's you don't, out of syllabus things don't discuss. Yesterday's is yesterday's. Today is today. The duties of this fellow will cease. Duties of IRP will cease, or this IP, when CD fails to file the application within 90 days. I told you within 90 days you have to make an application. 90 days from which day? Declaration. Or NCLT accepts the application, NCLT rejects the application. You do whatever you want, I don't care. Because if the NCLT accepts the application, who will be appointed? RP. Remember in IBC, you have a IRP. IRP will go till the COC, and then the COC will appoint an RP. In that PPIRP, COC only is not there. First only I put a dive to potential COC who are non-related party. They have already approved the insolvency professional. So the insolvency professional will end which day? The day NCLT accepts, NCLT rejects. Or if you fail to make an application. Basically, he will definitely, the duty will end when anything next happens. Next what happens? NCLT accepts, NCLT rejects, or CD doesn't even go reach the temple. This is with respect to the insolvency professional 54B. 54A, all that dive. 54B, what is the duty of the IP? Now 54C is the continuation of 54A. This is the IP part. Now the other part. 54C, what happens to that application? What will I do? 54C is the application of PPIRP. 54.1 and 54.2. Form number 1. This is where I have to apply, guys. Form number 1 NCLT. This is rule number 4 of insolvency and bankruptcy PPIRP rules given by MCA, not given by IBBI. IBBI gives regulation. Previously when I told regulation 16, regulation 18, that is given by IBBI. These rules are given by MCA. Government gives the rules. Regulator gives regulation. Right? Form number 1 done. Next, filing. What filing, guys? First, what all will I file? First one, approval of creditors. First dive, second dive. First dive, appointment of IP. Second dive, initiation of PPIRP. Both require what approval? 66% of non-related party FC. Correct? Remember in 54A. Then next I already showed you consent of insolvency professional and the report of insolvency professional in the previous section 54B. Yes or no? Third, special resolution we saw. Fourth, I will give a declaration that I have not done any fraudulent preference. Yesterday we discussed undervalued transaction. Giving somebody preference 1 year before CR, all that I have not done. Avoidance of transactions. Online peeps, are you understanding? It's all procedure, chiller, but you need to remember all this. If you read the Bare Act, you will die. I have made this easier for you. Yes or no? Are you able to understand? Yeah, so declaration with respect to avoidance of transactions. Then, books of accounts. When? Last 2 financial years audited. Then, provisional financial statements in the current financial year, which is updated up to 14 days before the application. The application is made 20th August. 14 days before, at least till 6th August, it should be updated. Bare Act, if you read, nothing will be there. It is all in the regulations. It's a mix and match, completely structured. Last 2 financial years audited, provisional current financial up to 14 days before application you have to do. Then if there are any, 21(6)A consortium, 21(6) consortium or syndicate, that will not be there for MSME, but your other fellows will be there, no? 6AA, 6AB, 6AC. 6AB also won't be there, homeowners. But there may be debentures, there may be deposits, there may be other small loans, there may be executors, administrators, guardians, and there will be other people under 24 subsection 5 that we discussed, other financial creditors. If I want, I can appoint an authorized representative. And also I will file a declaration that the corporate debtor is eligible under 29 capital A. Even if you are a related party, if you are not a willful defaulter, you can definitely come under this section. 240 capital A. Done. These are all the filing things. You need to file all these things. Next. Date of application. When will you apply? Within 90 days of declaration. Whenever you apply within 14 days, they will either admit or they will reject. Same dialogue. If they admit, what happens? Commencement of PPIRP. If they reject, before rejecting, they will give a notice to corporate debtor who gets to rectify the defect. Rectified application can be admitted or it can be rejected. Same dialogue. Then I linked it with one more section, 77 capital A. What if you give some false information here? False declaration. So that is one more link that I have done in this chart, 77 capital A. If the corporate debtor or person authorized by corporate debtor gives false information, omits a material fact, knowingly or willfully, gives false information or omits a material fact knowingly or willfully, see here, deadly. 3 years to 5 years imprisonment or fine 1 lakh to 1 crore or both. Yes, it is a compoundable offence, but still deadly. 3 years imprisonment. Minimum 3 years. Minimum 3 up to 5. Fine minimum 1 lakh up to 1 crore or both. So this is the important section of 54C. 54C. So generally, when they admit the application, when you commence the PPIRP, then what happens, guys? Then you need to see whether the entire plan is okay, whether the base resolution plan can be worked, or do I need to call other resolution applicants who are ready to take over the, MSME under PPIRP. So the debtor still remains in possession. That's the best part. Sir, if other resolution applicants can come, I can go to CIRP also, no? Yeah, you can, but there what is the problem? Creditor will take possession. Here debtor only will be in remaining possession. He will coordinate with the new people. That's the wonderful part. This entire process should get over not in 180 days, 120 days. And whether it's the base resolution plan or if it is some other resolution plan, everything should be submitted within 90 days from the commencement of PPIRP. Submission of the plan 90 days. Completion of the entire thing 120 days. After 120 days, if things don't work out, liquidation. Or you can ask one more question. If it doesn't work out, can I go to CIRP? One more, this doctor has told you will never live. Can I take one more opinion? Can I go to CIRP? We'll see that. So before that, what will I give? The base resolution plan. And after that, information memorandum will be given. And within 2 days, all that claims, etc. will be computed. Within 7 days from the information memorandum, form the COC. COC will come here also, but after the commencement of PPIRP. Same provision. Within 7 days from the first COC, form the first COC meeting. from the first COC meeting. So commencement of PPIRP, 90 days submit the resolution plan, 120 days complete the entire thing. Once you commence PPIRP, within 2 days all those things should happen. Information memorandum, collation of claims, and within 7 days of information memorandum, COC. 7 days from COC, first COC meeting. Mind you, while you commence the PPIRP, you should always give a base resolution plan. Later the COC will see, okay, this is okay, not okay, let's see. Then I am not liking it, maybe I'll call somebody else. But the beauty is, the debtor will remain in possession, he knows his stuff, he'll be running the show. No need to call RP. RP will only be in a supervisory role. So it's a combination of debtor who's in possession and who's controlling the business. RP will oversee everything. Supervisory role, that's it. And then I can call other resolution applicants also. Then we'll discuss. I will be present very much there because it's my baby. And then I will give it off to somebody. Right? With my consent. Of course, with the creditor should agree. Different concept, guys. Next. Same thing is given here only. NCLT, when they admit the application, commencement of PPIRP should happen within 120 days, the entire thing. And 90 days, the resolution professional shall submit the resolution, approved resolution plan. Resolution professional shall submit the approved resolution plan. Approved resolution plan, COC has to approve under 54K. So the COC has to approve under 54K. Again, what approval, guys? Same, 66% of value. What they can approve? They can either approve the base resolution plan by the corporate debtor under 54K4, or they can approve any other resolution plan given by other resolution applicants under 54K12 if they don't like the resolution plan submitted by corporate debtor. This is the simple gist of 54D. Approved resolution plan, COC, 54K, then other plans. If COC does not approve the resolution plan at all, and the resolution professional will go to NCLT and request for termination of PPIRP. No problem, Alicia. Hope you could copy down. Termination of PPIRP. This was D. 54 ABCD done. E. 54E. Moratorium and public announcement. NCLT from the PPIRP commencement date will declare moratorium. Best part, section 14. Sunday breakfast. Mutatis mutandis. No change. NCLT. Correct. Disciplinary proceedings are pending against insolvency profession in the application. Same guys. If it is a no, the insolvency professional to be appointed as the RP. Same fellow. Insolvency professional will be appointed as the RP. If it is a yes, then same. IBBI, it will go to IBBI and IBBI will appoint RP. They will send a recommendation to the NCLT, and as per IBBI's recommendation, NCLT will appoint. Same, you remember that, same procedure. So this is very simple, moratorium. First is moratorium, second one is disciplinary proceeding, third one, public announcement by resolution professional. Regulation 19. 2 days from the PPIRP commencement date, I will announce in form number P9 every creditor listed in form number P2. So in the application form I have to give all these creditors list and all that and to the information utility, and it will be published in the website of IBBI also and corporate data. The beauty is, before in other laws, first I will admit and then the other process starts. Here I have already spoken to all those people. Then I will announce. Correct? Then I will announce. That's the thing. (54E) moratorium and public announcement. It's all procedure only, guys. So people only will concentrate on this and go. Don't ignore other things. Other things are also very important, which you have already done. Duties and powers of RP. Duties and powers of RP. 54F. Combined with 54F and 54G. It's a combined reading. If you start reading the Barat again, you will get confused. Just stick to this. Corporate debtor within 2 days of commencement of PPIRP has to give the resolution professional what? A list of claims, securities, guarantees, everything in form number P10. And also give what? Preliminary information memorandum. I showed you information memorandum. All the stuff of the company, what, why it's going down, how can it be revived, everything should be given in form number P10. RP again to confirm this list. Remember in IBC, when I come in, then I'll ask for the claims. Here, claims already list given. Best part. Inform credit. This is the duties of the RP. Again, separate 4 mark, 5 mark. What are the duties of the RP? First is corporate debtor will give him the list. What he has to do? Confirm the list. Second, inform the creditors about the claim, saying that, sir, I have already given this. These are the claims. I am not asking you. These are the claims. Tell me whether it's yes or no. Creditors to send objections within 7 days. And then I need to see how to do it. Within objections, then I have to figure out and again re-admit them or reject them, whatever, same. If there is a debt in foreign currency by chance, the exchange rate as on the PPIRP commencement date will apply. This can all be MCQ questions. Exchange rate on which date will apply? PPIRP commencement date. The claims, even though 2 days, 3 days later, if there is a lot of variation in the market, I don't care. Date of PPIRP commencement date is as per the law. That will be taken as the exchange rate. If you win, win. If you lose, you lose. I can't help it. After checking all this, adding, subtracting, updated list of claims I will give in form number P10. And mind you guys, no taking over management, only monitoring the management of the company. Monitoring management of the company. Then he will constitute the COC, convene the meeting of COC, attend the meeting of COC. He may convene on its own, but if 33% voting share demand a meeting, he shall convene it. This is in Regulation 27. If 33% voting share demand that, yes boss, I need a meeting today, then you shall convene the COC meeting. Inform the COC if the board of directors or partners contravene the chapter. So this is like a monitoring. Your class monitor was there, no, an irritating fellow in school. If you opened your mouth, you used to write your name, that fellow. This RP is that fellow only. Correct? So he is the class monitor. Teacher's pet. Class monitor. Bucket in Kannada they call. Yes. Right? So that is monitoring the management. So he is like that. Anything that you don't do, he will go and complain to COC. Then also file application for avoidance of transactions. That undervalued transactions, preferential transactions. These are all the duties. Then the powers. See, they can ask you duties. If they ask you duties, it is 54. These. See guys, section numbers and all you leave. Just remember these points. In this regulation number also you leave. Amendments, they will not expect you to remember all this in depth. You just need to write the points. Regulation number, leave it. Section number, leave it. You can simply say as per the provisions of IBC. Enough. What are the powers of this fellow? Access the books of accounts, access the financial information of the information utility, the books of accounts and documents, whether it is with any statutory authority, even with statutory auditors or with any accountants in the MSME, I can access, full access. Mind you, we cannot access the documentation of the auditor. I am not talking about working papers, I am talking about books of accounts and all documents which are actually lying with the statutory auditors, accountants and all those things. Attend the meeting also of all the meetings. What meetings you can attend guys? If you are a corporate or is a LLP, you can attend the partners meeting. He is the uninvited guest, forced guest, no choice. Or if it's a company meeting, he can attend AGM, EGM, he can attend board meetings, he can attend audit committee, risk management committee, all committee meetings he can attend, no problem. Next, he can himself appoint accountants, legal professionals and other professionals. Similar power was there in IBC also. He can collect information from everybody as regards avoidance of transactions. Remember, avoidance of transaction, the relevant period was what? 1 year before for non-related party, 2 years before for related party. Like that, he can collect all the transactions. Yesterday I told you, new value, no new value, all that we discussed. Then he can collect the business operations, financial payments, operational payments made 2 previous financial years from the PPIRP commencement date. Show me all the transactions that you have done, everything, business transactions, financial transaction, operational payments, and list of all assets and liabilities as on PPIRP date. Then he will talk to all the financial institutions and get all the details, all the records, it will be given to him. Personnel will give all assistance, mutatis mutandis, section 19. All assistance will be given to him. He is like the boss. This is 54F, duties and powers of the resolution professional. It's very easy if you have written it down in pointers like this. Just stick to these charts guys, nothing else is needed, do not waste time. Some 4 or 5 marks it may come, don't waste time reading the Bare Act and all, I have already done that for you. This much is enough. If they ask you duties, 54F. If they ask you powers, 54F3. F2 is duties, powers is F3. This is as per the Bayer Act and the regulations here and there. Consolidated. Claims part already discussed before. What claims? That same thing. You will ask for the claims, then submit the revised claims and all that. G2. If a person has suffered a loss, a person who has suffered the loss because of this, company's, bad operational problems, he can move the court, and if there is any breach of contract, he can move the court to seek compensation for loss or damages. Why? Because of omission of material information or inclusion of misleading information in any of the documentation. Then who is liable? 54G2 talks about liability. So if you see 54G2, it squarely talks about the liability. Who is liable if there is any misleading information in the documentation arising out of the breach of contract? Where the person has sustained any loss as a consequence of omission of material inclusion in the list of claims or in the preliminary information memorandum. In the memorandum only, you have not given details of many contracts, details of breaches not given. In the list of claims, you have omitted my name. You have omitted certain material information that was needed for the benefit of everybody. I come to know, I can sue you. Who is liable, guys? Promoter / director / partner and person authorized. Willful default. Directly, willfully and knowingly if you do, under 77A, already discussed, 3 years to 5 years, 1 lakh to 1 crore, both. And 54G2 damages. Damages. So this is regarding the other part. Claims part. (54F), 54G2. H. Very simple. Management of the affairs will continue to vest in the board of directors or partners. Definitely different from IBC. Continue to vest with whom? Board of directors or partners. You should protect and preserve the value of property always. He shall exercise all the contractual or statutory rights and obligations. MSME will run as per MSME. This fellow will not put his hand everywhere. Who? RP. This is definitely different from what we have read. That's all. 3 points. Very simple. Management affairs will continue to vest in the board of partners. The MSME should work towards protecting and preserving the value of property, and so will the RP. And RP shall exercise all the contractual and statutory rights and obligation and ensure that MSME also follows the same. I. Guys, section 21, full COC, mutatis mutandis, is 54I. but certain changes. First change. When you do PPIRP, when it is commencing, within 7 days of PPIRP, you should constitute a COC. And interesting to know, in 7 days, claims etc. will keep on changing, right? So the COC also will change based on the updates. Today new fellow will add, tomorrow new fellow will come and say, I also have a claim. The company has some, 142 creditors. I have only details of 70 people now. Others are still filing the claims, but I cannot wait only 120 days, so I can start off the COC. Will the COC keep on changing every meeting as new additions come? Yes. What happens to the past decisions taken? New fellow comes and says past decisions are invalid. No, where were you? When we had already announced here, you should have come. So, past decisions will not be affected. In IBC, generally the COC is formed after almost 30 days of commencement. Here it is 7 days. That's why they are saying it will change based on the updates. And within here also 7, here also 7. There it is within 30 days roughly, and then 7 days. First COC meeting. Here it is 7 and 7. First meeting of COC. This we have already seen. If the corporate debtor has no FC, who is a non-related party, or financial debt only is not there, then operational creditor, non-related party will form COC. Tell me, in IBC, if there is no FC, who will be the COC? Operational creditors. But who? 18 operational creditors by value, highest. Then one represented by workmen, one represented by employees. Here you see, instead of 18 we have 10. 10 largest operational creditors by value, one representative of the workman and one representative of the employees. If the corporate debtor has only one creditor in a class and no financial creditors, other financial creditors are not there, means only one class is there, guys, that is only deposit holders or only other financial creditors, then the COC will be formed by the authorized representative of that class. Means it has only 21(6)(a), 21(6)(a)(b), 21(6)(a)(c), those creditors, or 24 subsection 5 creditors. Then COC will be formed by authorized representative of that class. Authorized representative will be chosen just like IBC, 1 out of 3. Home buyers, remember, 3 RPs will be given, they will choose 1 out of 3. How? By the highest number of creditors in that class as per the regulation. Highest number of creditors in that class. This is with respect to 54I. These are all the changes. J is a small section. General rule: management of affairs is vested with the corporate debtor. General rule 54H, but specific rule is given in 54J. If the affairs of the corporate debtor are handled in a fraudulent manner, that main MSME owner only is one fraud, and has resulted in gross mismanagement of affairs. During the course I come to know that there is some golmaal going on. This fellow is not what he seems like. He is telling that I will do everything for MSME, but seeing him it feels like he just wants to make a quick buck and run away. COC will know that this is happening. What will they do? COC with a 66% of voting share will vest the management to the RP. IBC provisions will come here. They will make an application to NCLT in form number P14 and the NCLT will either accept it or reject it. Reject what? Accept or reject what? Whether the vesting is correct or not. But the grounds of vesting should be these two. Affairs of corporate debt are handled in a fraudulent manner. Gross mismanagement of the affairs. We have already explained the meaning of gross negligence. Gross mismanagement in 202. Per se negligence, per se and gross negligence, all that is over. Commencement of PPIRP within 2 days, corporate debtor to send RP what? Base resolution plan. That RP will then send it to COC. COC will discuss if the base resolution plan or if any new resolution plan is given complies with full provisions of section 30, mutatis mutandis. Section 30 is what, guys? It provides for payment of the resolution cost. Second, it provides for financial creditor payment, operational creditor payment, and then SR Steel decision. Higher of the liquidation value and the resolution value, and also if you arrange that resolution value in the liquidation waterfall mechanism, whatever you would have got there, at least that you need to match. Same. COC will discuss and they will also give you an opportunity to change the base resolution plan. This is more about discussion and then setting it right than anything else. Final approval will be given under 54K4, and if it is not there, guys, then I will invite new prospective resolution applicants. First preference will be given to base resolution plan, first only. Within 2 days only, corporate debtor will send it to base resolution plan, and within 7 days, what happens, guys? Within 7 days of PPIRP, COC will be formed, no? So then I will immediately send it to COC. They will discuss. They will say, sir, please change. Do some extra masala you add and give me. Once you take the opportunity, yes, final approval will be done. But again, you see, taking Satish Kumar Gupta, that versus SR Steel case law, ArcelorMittal. The base resolution plan does not impair the claims owed to operational creditor. Means you cannot create a resolution plan only to favor the financial creditor. You should also help the operational creditor. Good point. If the base resolution plan does not impair claims owed to operational creditor, then I can give a final approval. Otherwise, I am going to invite prospective resolution applicants in form P11 within 21 days from the commencement of the PPIRP. They shall fulfill all the criteria laid down in all the regulations, act approved by COC, and they should also prepare the information memorandum, and the resolution applicants also should not be ineligible as per 29 capital A. This is not an amendment, this is a separate act. Right? Where is this amendment? Right? Crazy it is. This is first point. Second, RP to check all the resolution plans and confirm that it conforms. This confirm approves that it conforms, means it follows all provisions of 30 subsection 1 and 2, that is criteria or priority as per SR Steel. Compare base resolution plan with other resolution plans with respect to feasibility and viability, manner of distribution of assets, order of priority of debts, security interest, everything. If COC feels that debts owed by corporate debtor are impaired in the resolution plan, they can ask for provisions for dilution of shareholding, voting or control rights in the resolution plan. They will say, corporate debtor, you are now giving me the money back, I agree, but you are giving less money first of all. You are giving me less, you also have to take something less, right? What? Issue shares. You own so many shares. Promoter, you own so many shares. Why don't you transfer some shares to me? So I can ask for what, guys? Dilution in the shareholding, voting or control. In the resolution plan, I can say contract of remission. I was supposed to receive 1 crore. You have just given me 60 lakhs in the plan. 40 lakhs, why should I say no? Why should I agree? I believe in your company. Give me 10% stake. Promoter, you own 40%, make it 30%. Can I add like that? Yes. It's all for the benefit of revival. If dilution provisions is not inserted also and still they are fighting, then COC to record the reasons. If they are okay with it. This fellow says, no way sir, I will not give you the management. It is my baby. Okay, if you want 10 lakhs extra, I'll give, or maximum this only I can give. You know that I will do well. You know that I'm going to recover and pay you everything. You know business will be sound. You know that I'll give you a lot of business. But please don't ask ownership. If that be the case, if COC agrees, they can record reasons. And then that final approval. Final approval is what, guys? 66% of voting share. Same. They will file it with the NCLT finally. Sir, this we have approved the base resolution plan. And guys, one more thing. Other pointers. The base resolution plan can be submitted by the corporate debtor either individually or he can do it jointly with others also. Means he can talk to one more MSME and say they will come and do the needful. Impairment means what? If RP does not provide for deadly full payment of confirmed claims, then it is deemed to be impaired. That is one more change, guys. No haircut here. What payment? Full payment. If there is a haircut, then dilution of control. Boss, 1 crore full pay. 60 lakhs means give me share capital. Give me share. That's what they're saying. But this is the feeling of this COC. If they feel it's impairing. What is impairing? Full payment if it doesn't provide. So guys, voting share, NCLT. If there is no approval or COC approves to terminate. What is that? First is no approval. They will not approve only. Or they actually approve to terminate. Means what? No approval means what? They will not get 66% voting majority. COC to approve to terminate means 70% will say this PPIRP is on nonsense. Let us end it. No approval means 66% also they don't get. COC approval to terminate means what? More than 66% approve to cancel the PPIRP. Then RP will give to the NCLT for the termination of PPIRP. Will termination of PPIRP result in liquidation? Or will termination of PPIRP go to CIRP? What do you think? Sir, I don't know. First, it is leading to my termination. Already dead. Correct? Yes, that's how it is, guys. No choice. Finish it off. Then we'll take a break. Over. Till K over. LMNOP. LMNO. That's it. Finally, guys. Approval of resolution plan. COC will approve NCLT. GOC approval. NCLT within 30 days. And I give it to NCLT. In which what is L, what is C, God only knows. Yeah. If it gives to NCLT, within 30 days, NCLT will approve. When will they approve, guys? If they are okay with the effective implementation. Second, if it conforms with the section 30 and 31. And within 7 days, in regulation 49, within 7 days, I am going to intimate each claimant and I will give a formula for repayment. There will be a formula in this and I will intimate each claimant. Means whoever has claimed. That says, sir, they have agreed, sir. Congratulations. The formula for repayment will be given. Now, if 1 and 2 are not followed, means what? If it does not conform to 30 and 31, and if the effective implementation is not done properly, according to the NCLT, then NCLT within 30 days can disapprove or reject the resolution plan and pass an order under 54N for what? Termination of the PPIRP. Termination of PPIRP. Special point. If COC under 54J2 has applied to NCLT for vesting of management with the RP, remember that? Vesting of management with the RP because of what? Fraudulent affairs or gross mismanagement, and NCLT had approved that particular thing that time, which means before this order and all came, first only had approved what? Shifting of the entire management to RP. Then now the RP has been approved by the same COC. And because of collusion, correct? Because of collusion, what is happening? This entire resolution plan is such that, first of all, I had applied there. Where? See what I'll explain. In the base resolution plan, the management had given that we will do 1, 2, 3, 4, 5. Fine. During the course of the entire proceedings, RP lodged a complaint to COC saying that, sir, I am monitoring everything, but these fellows are doing golmaal guarantee. 100% golmaal they are doing, sir. So in that case, please change the management. In the sense, let me come and take over. So COC has already approved. I go to NCLT. NCLT also has approved, which means now I take over the management. Now I am taking over the management, but who is giving the base resolution plan? Still that fraudulent company, fraudulent promoters. In the base resolution plan, I have come to know that management and promoter is not changing only. Same fellow is continuing. How does it matter now, guys? Superb. Same fellow is continuing. And then it may result in collusion. They'll come to RP also and say, bro, I know you are taken over, but I am you, you are me. How much money you want? Let's collude. Right? You leave it, you ensure that this is passed. You go to that creditor, you tell him the same. We'll do something. To prevent this, guys, we have one more section. See, before that, if nothing happens, if everything is smooth, they will either approve it or reject it. If they reject it, what will they reject? They will terminate the PPIRP. But in this case, if it results in any collusion, check it out. If it results in a collusion, they come to know that this is collusion, hand in hand. All of them are coming together to actually cheat the corporate debtor only. That's the best part. Some promoters are cheating the other directors. And people who invested though, gone. So NCLT under a different section, they can reject the resolution plan or terminate the PPIRP. These two are already there before also. In any PPIRP, they can terminate it or they can reject it. That's okay. But two additional things. They can now pass a liquidation order. Direct. And the PPIRP cost to be part of the liquidation cost. Liquidation order can be passed only and only when I have already applied to the NCLT and they have approved for changing in the management. Management has changed during PPIRP, but superbly in the base resolution plan, no management is changing. They are only continuing. And it appears that there is collusion. NCLT feels it's collusion. So I'll say liquidation. There is no point in going ahead liquidation. Direct death. You are misusing the provisions of PPIRP to further your personal gain. I am going to cancel right now. Got it, guys? This is the last nail in the coffin. Otherwise, what can NCLT do? Only terminate the PPIRP. In this case, the RP has approached the same, approved by the same COC, and it does not change the management or promoter at all. So the resolution professional has given the resolution plan. The resolution plan is approved by the same COC. It does not even change the management, promoter, etc. This is full collusion between few creditors and management and resolution professional. So NCLT says, what is this nonsense? Do you think I'm a fool? This MSME is to revive honest MSME promoters. What you are doing is outright cheating. So what do? Liquidation order. Termination of PPIRP. This is the last part. Termination of PPIRP. Routes of termination. Same revision. Where COC does not approve the resolution plan, meeting happens but no approval. That is one part of termination. 54D3. Where COC does not approve within 90 days. Means what? Inaction by COC. They don't approve only. Third one, COC by a 66% voting resolves to terminate the PPIRP. That is after commencement of PPIRP and before approval of resolution plan. Where COC does not approve, meeting happens but no approval. Second one, they do not approve within 90 days. Inaction, indifference. Third one, by 66% majority, by voting share, resolves to terminate the entire PPIRP process. RP to apply to NCLT in form number P13. There they will terminate the PPIRP. This we have already seen all these things as a quick revision. But these provisions will continue. Avoidance of transaction, fraudulent trading, fraudulent management during PPIRP. These proceedings, I can sue them for avoidance of transactions. I can sue them for fraudulent trading. I can sue them for fraudulent trading during PPIRP. That will not take away. Just because I have terminated the PPIRP doesn't mean I can take away avoidance of transaction provisions. If CD, this we have already seen, if corporate debtor is in a fraudulent manner, gross mismanagement, NCLT will also liquidate. Liquidation also can happen. These are the three modes of termination. One, where COC does not approve. Second, COC does not approve within 90 days, inaction. Third one, by 66% resolution, they decide to terminate. Positive action. After commencement of PPIRP, approval of resolution plan, COC with a 66% voting share. After the commencement of PPIRP or before the approval of resolution plan, the COC through a 66% voting share, if they feel like going to CIRP, they can do so. So guys, COC has two options. One, either go to CIRP or approve the plan, reject the plan, don't do anything, terminate the PPIRP. But if any fraud happens, direct liquidation order. RP to intimate the NCLT within 30 days, and they will do what? They will terminate the PPIRP. Resolution professional under PPIRP will now be the interim resolution professional under CIRP. This is transfer of PPIRP to CIRP. What is the effect? Order of transfer is order of admission of application under section 7. Means if I pass an order to transfer PPIRP to CIRP, that is the order of admission. The moment you admit, what happens? CIRP begins 180 plus 90. CIRP will commence from that date. For all the proceedings shall continue. This will also add now. 43 preferential transactions, 46 relevant time, extortionate credit transactions. The PPIRP date will be the insolvency commencement date for these three sections. For 43, 46 and 50, PPIRP date will be the insolvency commencement date. PPIRP period is also included in the relevant time. Only for this. For other cases, order of transfer from PPIRP to CIRP will be the insolvency commencement date. Only for 43, 46, 50, PPIRP date will be the insolvency commencement date. So this successfully we have completed PPIRP. It's a separate act only. That's why I didn't do it yesterday. If I had done it yesterday, IBC, PPIRP, you would have created one own thing. PPII, IBC, IRP. Right? So this is the thing. That ends the matter. We shall take a break now. Now coming to section 188. This is cluster 3. Cluster 3 is what? Loans to directors. 188, 185, 186, 188, those 186, 187, 188, those sections. So in this they have changed with respect to the rules with respect to what? Related party transactions. So if you remember in section 188, you should be a related party under 2 clause 76. You should enter into a specified transaction which is given in 188 1 to F, and it should be beyond arm's length price. You should be a related party under 2 clause 76. Should be a specified transaction under 188 1F, and it should be beyond arm's length price. Related party, they have given a definition. This 188 1 to F and beyond ALP, mind you. 188 1 to F is divided into various parts. Clause A plus clause E. This speaks about selling of goods, sale or purchase of goods of materials either directly or through agents. Then we have clauses B plus C. Clauses B plus C would be what? One is goods or materials either directly or through agents. B plus E would be what? Would be property, immovable property. That also either directly or with agents. Next you have C. C will be leasing of property. That agent is not covered. Then we have D plus C. D plus C is what? Services, either directly or through agents. goods or materials directly or through agents, property directly or through agents, leasing, and this thing. Then F talks about your office or place of profit, and G talks about your what do you say, underwriting commission that you leave. Relevant is only these 4 items. So in this, all cases required a board meeting resolution. All cases required a board meeting resolution, but some cases also required a prior ordinary resolution. But if certain conditions were fulfilled, if certain conditions were fulfilled, prior ordinary resolution, that all depend on something called as transaction value. During the year, whatever transaction value, that was what was required in 188. Now, what they have changed is, in this transaction value, there were amounts 100 crore, 100 crore, 50 crore, like that. That has been amended, deleted actually. Check it out. That was the basics here. This is A plus E clause. Prior ordinary resolution for transaction value exceeding 10% of the turnover. This exceeding has been shifted to amounting to, actually. Please make the change there, amounting. So this is nothing but greater than or equal to 10% of turnover, or 100 crore, whichever is lower, deleted, or 100 crore, whichever is lower, is deleted. Right? Then selling or disposing of, buying of property of any kind, B plus E. B plus E also, 100 crore is deleted. Now it has become greater than or equal to 10% of net worth. 10% of net worth, deleted. 100 crore deleted. C, leasing of property. Leasing of property was actually less than or greater than or equal to 10% of net worth, greater than or equal to 10% of turnover, 100 crore, whichever is less. In that, already what has been deleted, net worth and 100 crore gone. Now it is only minimum 10% of turnover. As far as services are concerned, D plus E, it is now greater than or equal to 10% of turnover. 50 crore, whichever is lower, 50 crore is deleted. This would be the entire amendments in point number 2. Very, very simple. Easy. Right? 50 crore is deleted. So it becomes very easy now. Government company also exemption is there. One highlighted point here. Earlier, 188, the first and second proviso of subsection 1, that is with respect to, the, what do you say, wherever there is 90%, related party 90% is there, then members can vote. That's the third proviso. Second proviso talks about member, if he is a related party, he cannot vote. Generally, members, if you are relatives, you can vote in all resolutions. But if it is a related party transaction, and if you are a member who is a related party, or who is a relative also for that matter, cannot vote. That provision will not apply to government company. Exemption was already there. This was the addition. Government company in which contracts entered into with any other government company. So one government company with the other government company. Airports Authority of India is entering into a contract with Cement Corporation of India for purchase of cement to build their airports. It's a specified transaction. Common directors are there. Related party transaction, exempt. Not only government company, this they have added, or with central government, state government, or combination. If a government company enters into a deal with central government, that also is exempt. That is for unlisted government company. Listed government company, sorry. Unlisted government company, you should take the approval of the ministry. That is there, that was there before also. So this is the amendment with respect to section 188. Very, very easy, right? Are you here with me, buddies? Good afternoon. Are you here with me? 15-20 minutes, I think we can wind up. Are you here with me? Let's finish it off. In MD provisions, one change which is not there in this, I am just telling you that in MD provisions, especially Schedule 5, they have removed most of the powers of the central government. Correct? Now you can appoint a director either through the normal resolution route, board meeting resolution plus shareholders resolution, plus follow the provisions of Schedule 5. Or you can go through the board meeting resolution, and of course you need a shareholders resolution and CG approval, correct? Only if you do not follow, right, section 1. There are 3 sections. If you have not followed section 1, only then you have to take the CG approval. Earlier it was that if you don't follow full Schedule 5, you have to take CG approval. But now only section 1, which speaks about your, various types of rules and regulations and laws. If you breach that and you are imprisoned for any period, or if you pay a fine of more than 1000 rupees. So now only section 1 is covered. Apart from that, everything else is the same. So that is one amendment which has come anyway, which you already know. Central government has taken away its power slowly. So under 197, the remuneration payable to all directors will be 11%. You can go beyond 11% also with a normal ordinary resolution now. But the internal limits of 5, 10, 3, 1 can be increased by passing a special resolution. That is the amendment that you leave. I am just telling you. However, in 203, this talks about key managerial personnel. Key managerial personnel. In this, 2 rules were there. One is rule number 8. Rule number 8, which said earlier, old provision here, old provision. Rule number 8, which said all listed companies and unlisted company. Unlisted can be unlisted public and unlisted private. Unlisted public with paid up capital 10 crore or more. 10 crore or more. And even same, private company also 10 crore or more. This was there. Rule 8. All listed companies mandatory, unlisted companies this. But friends, old section 383 capital A of Companies Act, 383, it said that any company with paid up capital more than 5 CR required a whole time company secretary. But the old rule had told public company minimum 10 crore, private company minimum 10 crore, unlisted. What about private company, public company 5 to 10 crore? What to do? Private company what to do? That is why rule 8A was added before. Company other than a company covered under rule 8 which has paid up share capital of 5 crore or more. This covered what? Public company and private company more than 5 CR, less than 10 CR. This also required a whole time company secretary. Thereby the company secretaries were saved. This rule 8A has been amended now. What? Here. Every private company which has a paid up share capital of 10 crore or more, they have brought it back to this only now, shall have a whole time company secretary with effect from 1st April 2020. Sir, but 1st April is not applicable to the exam. This rule came in March with effect from his 1st April. It is included in the RTP. So study and go. Study and go. Right? They have brought back the old stuff. All listed company, Rule 8 will still exist. All listed companies and all public companies having PUC 10 crore or more, correct? Or other than listed company, that is, other than every other public company have paid up 10 crore or more. But what about private company? We didn't know. Now they have brought this old provision. Private company 10 crore or more is the new Rule 8A. Understood? New Rule 8A. 1st April 2020. Done? Next, even the secretarial audit report, section 204 read with Rule 9. One addition is there apart from, so when do you need a secretarial audit report? Every public company having paid up share capital of 50 crore or more. First of all listed companies for sure. Then every public company having a paid up share capital of 50 crore rupees or more. Every public company having a turnover of 250 crore rupees or more. Or this is the thing. Every company having outstanding loans, borrowings from banks or public financial institutions of 100 crore or more. This is the addition. This is the addition. Sir, when should I see this public company paid up capital and all? When should I see? They have given here. For the purpose of this sub rule, it is hereby clarified that paid up share capital, turnover, outstanding loans, borrowings, case may be, shall be seen on the latest audited financial statements, latest audited balance sheet. Latest audited balance sheet. Free reserves definition in 2 clause 43 also tells latest audited balance sheet. So the same provisions have to be followed here. Latest audited balance sheet. This was cluster number 5 ka amendment. Very, very simple. Right? Next. Cluster 6 speaks about inspection and investigation. Earlier, investigation into the affairs of the company, if I arrest a person, I could directly only go to the judicial magistrate. Judicial magistrate of that particular town, city. I should have gone to him only. But because the courts are also have other work to do, it is very difficult for the courts to manage this. That is why under investigation and inspection, especially because of the increased efforts of SFIO, Serious Fraud Investigation Office, because of that, they have now told that we need to set up various normal civil courts and criminal courts as special courts, separately for the investigative activities. When any SFIO complaint takes up, and it's taken up and it goes to section 447, then you would need a criminal court set up as a special court. So that's why they now say not only judicial magistrate, you can also go to a special court designated on the behalf of that. This is from 15th August 2019. 15th August 2019. Right? Special court or judicial magistrate. Similarly, in ICICI Bank, Chanda Kochar had released loans through the Videocon group, Venugopal Doot. Through the Videocon group, she had released crores of loans. The next day, Videocon diverted some part of the loans to companies owned by Chanda Kochar's husband, Deepak Kochar. And the entire due diligence was done by one company, which happened to be Deepak Kochar's brother. What the hell? Due diligence is made by family member. Loan is given to family member. So the SFIO, Serious Fraud Investigation Officer, when they decided, saw all these things, they realized that whatever is happening is wrong. Some shares also were taken, Chanda Kochar, some shares also indirectly routed to Deepak Kochar. Assets of the company were diverted to the husband. In all these things, it's a fraud. If a fraud is proven, 14 capital A has been inserted. Very, very important provision, 14 capital A. Where the report under subsection 1102, the SFIO report, states that fraud has taken place in a company and due to such fraud, any director, KMP, officer, any other person has taken undue advantage or benefit, whether in the form of an asset, property, cash, CAP, cash, asset, property, or in any other manner, central government may file an application before the tribunal for appropriate orders with regard to disgorgement of such asset. Means they can take over the asset and sell it off. Disgorgement of property or cash for holding such director, etc. liable without any limitation of liability means personal liability. And they can disgorge, take away and sell it, liquidate it, can be done. This is with respect to 14 capital A. You can link it with, that was a stemming, it all stemmed from cases like Chanda Kochar and various frauds that are happening in our country. So to strengthen section 212, it has been inserted. Are we clear? Then with respect to merger, with respect to the concept of merger, one second. Yeah. Mergers and amalgamation, there are various types. There is M&A of companies under 232. 233 we have M&A of certain companies, which we'll see, small company and all those things. That's a shortcut merger. 234 talks about M&A with foreign companies. 235 is transfer of shares, takeover method. And if takeover method fails, then we jump to 236, purchase of minority shareholding by majority. And lastly, takeover by central government in public interest. Now there are various mergers, amalgamations happening at a rapid rate, and we don't know what is the effective date of merger. Is it the date that you appoint? Is it the date when you approve? Because the procedure, if you see, of 232, procedure is, quick fire procedure will do. Procedure, you'll have to do so many things to ascertain that whether 232 is happening or not happening. So of course you need to go with scheme, valuation report, board meeting, approval of stock exchange, you have to apply to NCLT. The entire scheme, is it that date, is it the date of the merger, or whether it is approved by tribunal, is that the date of the merger, what is the date? Even though the merger is approved later, it should be deemed to be as per the scheme. There was confusion. To clear the confusion, this particular section has come into force. To clear the confusion, this particular section has come into force. Clarification under 232(6) of the Companies Act. Clarification has been issued by MCA on 21st August regarding 232(6). According to the clarification, provisions of 232(6) of the Act enables the companies to choose an appointed date. Appointed date may be a specific calendar date, granting of license, or anything that they want. Appointed date under the scheme shall be the acquisition date for Ind AS 103 also. They will have to fix a date. When they are approving, they have to fix a date. If the appointed date is a specific calendar date, it must precede the date of filing of application. If I am applying on 2nd October, the appointed date should be much before. That's what they are trying to tell. It may be 10 September or something like that. If the appointed date is significantly antedated, means way beyond 1 year from the date of filing, so you can't make an appointed date for all the business combinations on 10th September 2019 and now I am applying 2nd October 2020. 1 year, what were you doing? So the MCA has told, boss, bring out the justification. Why there was a delay, you tell me, then I will agree. Otherwise, I will not let you make for business combination A, Ind AS 103 purposes, you will use this calculation. But the actual date is 2nd October, I will not allow. Got it? And the scheme also may identify an appointed date based on the occurrence of a trigger event. Like proposed scheme is done, occurrence of some event, all those things. So this is the basic, gist of the story with respect to 232 subsection 6, a clarification issued by MCA. It is not an amendment as such, it's a clarification by MCA. The section has not been amended. Now with respect to operation and mismanagement, right? Operation and mismanagement, especially mismanagement. Again, you can take Chanda Kochar's example. There have been a sequence of amendments at various junctures. I have made it into a sequence which makes it very easy for you to understand. These are the new sequential insertions in 241, 242, 243 with respect to mismanagement. The central government, if it is of the opinion that the affairs of the company are being conducted in a manner prejudicial to public interest, it may itself apply to the tribunal under this chapter. So if you see under compromise arrangement, the operation mismanagement, who will apply? Here. Members can anyway apply, but if the government only feels that they are doing prejudicial to the interest of the company, right, they can only apply to NCLT. They can only apply to NCLT. For what? Operation and mismanagement. If it is so, what will happen? Remove all these things. Yeah. Provided that the application under this section in respect of company shall be made before the principal bench of the tribunal, main bench NCLT. Under what circumstances? These are the circumstances. See here, circumstances are added on their opinion based on circumstances. Those circumstances is the amendment. Any person concerned in the conduct and management of the affairs of the company is guilty of fraud, misfeasance, negligence and default. This we also saw in 164, also saw in compensation for loss of office in 202. If you are guilty of fraud, misfeasance, breach of trust, you will not get any compensation. You will be disqualified from office also, and you will definitely be, that will be a trigger event for applying for mismanagement. It has not been conducted and managed based on sound business principles or prudent commercial practices. Example, CCD. Cafe Coffee Day, when they are now doing the post-mortem, he said that the late VG Siddhartha had created various components within his company. The finance team had no clue what the other finance team was doing. Finance team of one particular company did not know what the other company in the same group company were doing. Within the departments and within the CEOs only created various verticals whereby no one knew what was happening. The only person who knew about the entire thing was VG Siddhartha. In Bangalore, after the lockdown, I am seeing that where in one road, three coffee days were there, 2 coffee days are being closed down. In and around me, only 15-20 coffee days were there within a radius of 3 kilometers. Now we just have 2 coffee days. Because of the way he had done business, it was not at all based on sound principles. Taking loan from one, giving loan to other, taking loan from that person, paying this other guy, that is what he was doing. Now they are doing the post-mortem. So now the company is trying to consolidate by selling, by closing down many of the centers. Yes, then that could be a case for mismanagement. Anyway, now he's dead, you can't put any case for mismanagement against him. Company is or been conducted, managed by a person who is likely to cause serious injury or damage to the interest of trade. Sri Vijay Mallya. Company is going down. If you had ascertained that he is going to bring the company down, then immediately government suo motu. This is because of Vijay Mallya, Nirav Modi, ICICI scam, ILFS scam. Government said enough is enough. Now I'll only add circumstances where I can go for mismanagement and throw you out. Business is conducted with an intent to defraud the creditors or for an unlawful purpose. And the government feels that there is no fit and proper person to run the office. You are not fit person to run the office. Then they will immediately give it to the tribunal. In the tribunal, they will clearly mention all the circumstances why you feel that is not good and why is not fit and proper and why he should be thrown out and why the company I should apply for mismanagement. Next, 242 4A, sequential, I told you. Sequential. First amendment was 242 3. Right? Then 242 2A. At the conclusion of the hearing, of course, there will be principles of natural justice and reasonable opportunity of being heard. At the conclusion of the hearing of the case in respect of subsection 3, tribunal shall record its decision, stating therein specifically as to whether the respondent is a fit and proper person to hold the office. The tribunal will decide, and if the tribunal decides, then for a period of 5 years shall not hold office as a director or any other office, guys. This is what? Disqualification plus vacation. Sir, you are a fit and you are not a fit and proper person. Get out. Vacation of office. And sir, you cannot be in the same company or any other company for 5 years. 164 ka disqualification, 167 ka disqualification, you have already seen. This is additional disqualification under 243 1A. Next, notwithstanding anything contained in any other law for the time being in force or MOA removal, contract MOA AOA. Means what? This overrides 169, overrides 202. In 169, they say if you are removed, you will get compensation. In 202 also they have told, I will give you compensation. Nothing doing, no compensation. Shall not be entitled to any compensation for loss of office. This is under 243 1B. When did it come? 15th August 2019. 15th August 2019. Understood, guys? Sequentially. Sequential amendments has to be understood in a sequence. Has to be understood in a sequence. Did you understand this now? Done. Like this, if we study, it will become very easy. This is with respect to the class action suit under 245. This full amendment with respect to class action suit of 245. So for that we could see here, yes. Class action suit. Class action suit is members of a particular class can come together and file a suit against the company. It could also be potentially against the auditor as well. If the company has no share capital, 1/5 of the members can do it. If the company has share capital, we have to see whether it's a listed company or unlisted company. If it's a listed company, member or members, even one member can do it, holding 2% of the issued capital. 2% of the issued capital, not paid up capital. Or 5% of the total members or 100 members, whichever is less. Either one member or members holding 2%, if it is done, good. Otherwise, 5% of the total members. The total members are 1000 or 100, for example, 5 people, 5% will be 5 people. Or 100 members, whichever is less. If the number of members are 1 lakh, correct? 10% is 10,000, 1% is 1,000, 5% is 5,000. 5,000 or 100, whichever is less, so 100. They can apply. For unlisted company, same, 5% of total members or 100 members, or member or members holding 5% of issued. Here for listed it is 2%, for unlisted it is 5%. This is the full amendment. Can depositors also form a class and go for class action suit? Yes. 5% of the total number of depositors or 100 depositors, whichever is less, similar to this. Or depositor or depositors to whom company owes 5% of the total deposit. Here it is 5% of issued capital, here 5% of the total deposit. This is the amendment in the rules with respect to this. National Company Law Appellate Tribunal rules. Same, all these things. Listed, unlisted and all those things. 5%, 100 depositors, 5% of deposits. Got it? That chart I have already done. That concludes cluster number 8. Cluster number 10 in SEBI, no, it's only minor, guys. You can just go through very, very minor, chilled out stuff. So in section 15C of the Principal Act, failure to redress investor grievances. If you are a listed company and investor has put a grievance and you have not bothered replying, after giving, you have to give a notice in writing. In writing, whether can it be sent via mail was a doubt. So they have added including by means of electronic communication, which means email notice also possible. No need to send a letter. Then penalty in default of stockbrokers. Earlier it was only 1 lakh rupees, but which may extend to. Now they have added it may extend to 1 crore. Extend to 1 crore. Of the Security Exchange Board of India, employees of the board should ensure that the assets of the Security Exchange Board and all the documents etc. are handled very, very carefully. If anybody is involved in the destruction of the records or failure to protect any documents and failure to maintain confidentiality, very knowingly destroys. Knowingly means mens rea has to be proven. It must be a criminal intention. Then they say that if he makes a false entry in any information record document so as to obstruct or influence the investigation in a bad way. Investigation is going on, you just add some other figures to divert the investigation somewhere else. Then obviously it will be reported to the board and they will do an investigation, and finally they conclude that all these things have happened. Without authorization you have tried to access the documents, without authorization you have downloaded extracted copies, without authorization you have actually introduced a computer virus so that everything gets destroyed, without authorization you have disrupted the entire database etc. Then it says you have deleted all the documents. There, penalty 1 lakh rupees, it can extend to 10 crore rupees or 3 times the amount of profit, whichever is higher. This part only you study and go. 1 lakh to 10 crore or 3 times the amount of the profits that you made, whichever is higher. If you made 40 crore, 40 into 3, 120 crore is what you need to take. Right? Very simple. Cluster 14 is Arbitration and Conciliation Act, which was not applicable to Jammu and Kashmir, but after the abrogation of Article 370, it will, earlier those parts etc. were not applicable to the international commercial arbitration etc. Now everything is applicable to everything. So that is regarding Arbitration and Conciliation Act. Last amendment, guys, very, very simple, would be my Foreign Contribution Regulation Act, FCRA. Foreign Contribution Regulation Act. So in FCRA, what are the changes? 2-3 important changes are there. Change number 1 would be here. As far as foreign contribution definition is concerned, it spoke about donation, delivery, transfer of an article. But if it is a gift which is less than or equal to 25,000, it is not deemed to be foreign contribution. But this has been amended from 16th September 2019 to less than or equal to 1 lakh rupees in regulation number 6A. So now the exception is not 25,000, exception is gift less than or equal to 1 lakh rupees. Gift less than or equal to 1 lakh rupees. That is amendment number 1. Amendment number 1. Amendment number 2, when I was speaking about foreign hospitality as such, foreign hospitality, if there is any emergency medical aid because of foreign hospitality, I go abroad, a politician goes abroad and he falls sick, let's say he gets corona, immediately has to be hospitalized. Should he take the approval of the government, that is Indian government? No, because it is an emergency. He suffers from a cardiac arrest. So prior approval is not needed, but he has to intimate to the central government within 1 month. Within 1 month of the receipt of the foreign hospitality, he has to intimate. This said 1 month, unfortunately, right? This said 1 month and the rule said 60 days. Rule said 60 days and this said 1 month. What to? Rule will override act or act will override the rule? Act will override. That's why rule there was a mistake. They changed it to 1 month. 25,000 rupees changed it to 1 lakh, that I already told you. Last but not the least, when I am applying for the certificate of registration, I have to make an application. Correct? In an application now, I also need to add one more form, and that form is FC3A, Foreign Contribution 3A. There I have to give an affidavit in proforma AA. This also came from 16/9/2019. I am applying for registration. Affidavit has to be signed by the key functionary of the particular organization or an office bearer telling that, look, whatever money we are going to get, we are utilizing only for the purpose of this particular NGO. We are not utilizing it for anything else. This is form number FC3A and affidavit has to be filed. This is the third amendment. That's all. Coming to IBC, Insolvency and Bankruptcy Code. As you know, who are all the people who could, apply to the NCLT under IBC? One, we have the financial creditor, one we have the operational creditor, and one we have the corporate debtor itself. So predominantly, what was the point, correct, in the old IBC was, when I say old IBC, 2016 itself was old. So many changes have come after that. 2018, 2019, 2020 Amendment Act. So lot of changes are there. And if you see recently, day before yesterday, Companies Act 2020, Amendment Act 2020 also was passed. So for May 21 onwards, if it is notified, for May 21 onwards, it will be applicable. Anyway, forget about May 21. Let's stick to November 20. Yes. So if you see NCLT, these three people can do. But operational creditors would include your employees, would include your, people who have given goods, people who have given services. Financial creditor are the ones who have given loan. And corporate debtor is that company itself. But buddies, one thing you need to understand, there were many cases, especially the JP infrastructure. JP infrastructure took lot of money from the prospective home buyers, almost 30,000 crore. And they diverted to various other companies. And in the end, they only applied for IBC. Before that, when they were still diverting, the homeowners wanted to ensure that they will get their money back. So they went to NCLT. NCLT said, sorry, you are not an operational creditor. You are not an employee. You are not the government. You are not provided goods. You have not provided services. Then corporate debtor, you are not a corporate debtor. Financial creditor should be, you should have given a loan, but have you given a loan? No. So this was the issue. Homeowners had no say under insolvency and bankruptcy code. That had to change. So the first important change was this. Section 5(8)(f) in the definition of financial debt. Earlier there was no provision. So a financial creditor is a person who has given a financial debt. Correct? There is a financial debt between the financial creditor and the company. And the financial debt definition was amended to include what, buddies? See this. In the explanation, they have added this clause. Any amount raised from an allottee under a real estate project shall be deemed to be an amount having the commercial effect of a borrowing. So if a prospective home buyer has given some money to the real estate company for a real estate project, builder, then this money, though it is given as an advance, it is deemed, a fiction is created to be commercial borrowing. Did we understand, guys? Yes or no? Correct? And allottee and real estate project, etc. will have the same meaning as RERA, so that you can leave it. So as you see, logic for amendment 1 is I've already discussed now. Okay. So earlier, financial creditor, operational creditor, nothing was there. So in 2017 August, regulations were amended to classify even the home buyers as other creditors who would have the right to file the claims with the liquidator. So this entire IBC did not provide a suitable framework for home buyers. Could home buyers apply, was the question. The answer was yes, home buyers could have. Earlier they could not have applied, but now they can apply. So this was the first amendment, guys. Very, very simple with respect to the home buyers. Are we done with this? Very simple. So if you see there, the Amendment Act has now definitively resolved this ambiguity by classifying any amounts raised from an allottee under a real estate project. One thing please keep in mind, if you understand the logic behind each amendment, then amendments will become a breeze. But if you don't understand the logic, then there is no point. Did we understand this amendment? Yes or no? Did we understand this amendment? Yes or no? Can we move ahead? Amendment number 1 done. What is amendment number 1? Homeowners are now what? Homeowners are now part of financial debt. Yes. Let's move on. Next part. So key takeaway from this amendment is the retail consumers in real estate industry such as home buyers will now be part of the COC, that is Committee of Creditors. Now, second deadly section was section 29 capital A. Now, for 29 capital A, we should just go through quickly. The SR Steel ka timeline just to understand. Correct? We should understand the SR Steel ka timeline. So I will quickly take you through that timeline, because many such sections have come because of the SR Steel. So we need to understand the SR Steel ka guidelines. Let us see. Once you understand the entire timeline of SR Steel, it makes things in perspective. So SR Steel is one of the most landmark legislations, landmark judgments that have happened in the context of our law. So there are so many ups and downs. The entire timeline is very interesting, very, very interesting. So first of all, guys, on May 5th, 2017, way back, RBI was vested with more powers to fix the bad loans. So the government gave them power, saying that now you can, take out whatever you feel, whichever banks are not doing well, whichever companies are not doing well, because the banks would have granted loans to so many companies. Whichever companies were not doing well, you can pick them up and you can, proceed. You can initiate IBC against them. So RBI identifies 12 accounts. They call them the dirty dozen. for immediate resolution under IBC. So they said, let us put this forth for IBC. Insolvency now proceedings. I'll just put this timeline also. So SBI and Standard Chartered Bank. If those of you have taken my classes in 6D and paper 4, we have bashed up SBI so many times, right? Whenever there is any company down, who is the bank behind the show? SBI, right? So SBI and Standard Chartered Bank filed a petition against SR Steel in NCLT. Now SR Steel says, who the hell is RBI to file a petition? Who the hell is RBI to provoke or to initiate or to ask SBI to file a petition? So the SR Steel challenges the RBI decision in Gujarat High Court. Gujarat High Court says, bro, enough. You first of all didn't pay so much money, and now you have the audacity to ask tell RBI, who are you? RBI is the regulator, and under them SBI and all those banks are there. When you have not paid money, crores of rupees, you have the audacity, 42,000 crore rupees you have not paid, and you have the audacity to tell them that, no, you cannot do it, right? So SR Steel, they challenge RBI's decision, but nothing is gonna happen there. Now NCLT admits SR Steel for insolvency under IBC. So very simple, in IBC what happens, once you what do you say, admit it, you will form something called as a COC, and you will appoint a resolution professional, and resolution professional will now invite EOI, expression of interest from various interested parties. Now a beauty happened here. The beauty was in all the people who expressed the interest to buy the company, all the people who express interest to buy the company, right? Who express interest to buy the company are called as resolution applicants. Resolution applicants. Sai Prabha has a doubt. Can any person on behalf of home buyers make an application? Yes, we'll see that later. Resolution applicant, right? Resolution applicant. The best part was SR Group's 2 companies came forward. One was New Metal, correct? New Metal came into the fore, correct, here, and ArcelorMittal. Now New Metal was a joint venture between the Ruyas and a Russian company. Ruyas are nobody but the promoters of whom? SR Steel. The best part is SR Steel, the promoters have not done their job properly. That's why the company is going for IBC. Who is now coming to take over? Who is coming to take over? A random company behind who is there? SR Steel. So how is it possible that a person who brought the company to the ground, he is only taking it forward later? And ArcelorMittal also had 2 other accounts, KSS Petron, correct? He had 2 accounts, it's here given here, KSS, Petron, and we had one second here, this NPA account. What is NPA account? Non-performing asset. So one was KSS Petron, one was Uttam Galva, correct, Uttam Galva. 2 companies were there. In these 2 companies, ArcelorMittal, Lakshmi Mittal, the owner, promoter, had invested in these companies, and these also had gone NPA. They had taken loans and not paid. Now buddies, the best part is, the court generally asked, they went to New Metal, they lifted the corporate veil. Who is there behind? Ruyas. Who is Ruya? SR Steel. Then they went to ArcelorMittal. They said, bro, you have invested in so many companies, all companies gone. Now you want to take over this company. When those companies which you are managing and which you have given money all have become NPA, how can I allow you to come and take over a company, and what is the guarantee that it will not become an NPA later? Got it? So that is the reason why they wanted to bar promoters. They wanted to bar anybody related to promoters. They wanted to bar any other person who had any other account which had become an NPA. Basically, they wanted only financially sound and prudent management to come and take over. They did not want some random person who has made losses across all the companies to come and take over this company. So that is the reason why a very important section 29 capital A was introduced. This is the gist of 29 capital A. This is the gist of 29 capital A, right? Now, if you want to understand full in depth of 29 capital A, it cannot be covered in the amendment session. So I would suggest you to take your mobiles and scan this QR code whenever you are free. And I have uploaded the full in detail video of 29 capital A. Okay. So 29 capital A I have included. You can use that video. You can just scan the QR code. It will take you to that video. Aram se watch it. Got it? So it is available on my YouTube channel. So you can check it out. Rather than you wasting time searching, I have already given the QR code. So now we are all tech savvy. Take your mobile, scan it and watch it. Okay, buddies? The full in-depth I have explained there. It is very important because so many changes have come in 29 capital A. That itself is a separate session altogether. But I'll give you the gist of the amendment. I already gave you 5 minutes gist of what happened. Plus later they came to know a couple of other areas. For example, there is a bank which has already taken over. Let's say SBI has already taken over X Limited, right? X Limited was anyway a company which was going through IBC, which means X Limited is already a company which is an NPA, non-performing asset. It has taken loan from various banks, including in this banks, in SBI bank, when I have given a loan to X Limited, it's an NPA. That's why I'm taking over. Now tell me, can't SBI themselves take over SR Steel? As per 29 capital A, it was not possible. Why? Anybody who has an account which is an NPA cannot take over. Correct? So these were the issues that were there. So now 29 capital A was further amended. So I have given here 29 capital A was completely refined again with retrospective effect from 6/6/2018. So these three, this is the gist of it. If you want the full 29 capital A, please go to that particular video. It's I think around 2 hours if I'm not wrong. Spend some time on that section, it's important. It is applicable for both paper 4 and 16. Alright. So here, since it's an amendment session, I will only be doing this. Correct? There are so many questions. Will you be available after live? Yada! What will I do? Simply taking live and deleting the video. I'm always here to help the students. It will be available later. That doesn't mean you'll be like, Abba, thank God, now I'll delete it. Try to attend it live because I can clarify your doubts. But if you do not have the time, if you have other plans, today is a holiday, girlfriend is calling, boyfriend is calling, that is the case. Or if you have other study plans and all that, you can come back and watch it later. Video will be available for all students' benefit. There is nothing called my students, it is for my students only. I am not like that. I am not like that. Only when specific items are there, that is available only to the ones who have paid for it, right? Because I have invested money. But amendment, it is my duty to give it to everyone. All right. So it will be applicable for everybody. There is nothing called my students, other students, nothing like that. All of you are my friends. And for my friends, I will do. The only difference between me and you is I have 2 letters before my name. For you, it is coming soon. That's all. Apart from that, it's almost the same. I am not so old. I am not some uncle here. I am just few years elder to you. So don't worry. Rahul, this session will go on, man, for 2-3 hours minimum. I will, until we finish it properly, it will go on. I don't know how long it will go on. The schedule was 11 to 2. So let's try to finish within that time. Otherwise, it may extend. All right. Kuldeep, Dumale, Sarji, we have already provided the PDF. Please check on my group. Yes, Ratna Kumari says only 8 girlfriends it seems. 4 girlfriends, 8 girlfriends. This is the 4th girlfriend law. Yes, so financial entities. So I told you, no, SBI has already taken over one more company as NPA. Can I now take over SR Steel? 29 capital A said no. SBI said why? Oh yeah, correct. For you I should give you an exemption. Correct. So if you see, Jitin Rahman sir, yes, you please check that video, it will be available. So financial entities, if you see there, defined to include asset, so your SURFACE, asset reconstruction company, ARC and all those things. One second. Alternate investment fund, scheduled bank, overseas financial instruments, all these things, who are not affiliated in any way to the corporate debtor. Anybody who is not linked to SR Steel, etc., can take over SR Steel. Then you see, entities who hold an NPA account, SBI holds some other X Limited, no? Pursuant to acquisition of a corporate debtor under an earlier insolvency resolution process, exemption is for 3 years. So if SBI has bought X Limited for 3 years before, they can still now buy SR Steel. Okay, they can still opt to buy SR Steel. That's the thing. Then regulated financial creditors. Regulated financial creditors are affiliated to the debtor. Means what? For example, SBI had given a loan. SBI had given a loan to SR Steel. Loan got converted to equity. Correct? After the entire process where you did not pay, loan got converted to equity. This is as per an agreement. Now today SBI is a shareholder of SR Steel. Can SBI take over SR Steel? Earlier 29 Capital A said no. But the new 29 Capital A said why? Please include him also. So you see, regulated financial creditors are affiliated to the debtor. SBI is affiliated to SR Steel solely because of their equity holding pursuant to a debt restructuring scheme implemented prior to the initiation of insolvency proceedings. Beyond 3 years, you are ineligible. Beyond 3 years, you are ineligible. The previous question. Then, guarantors of a corporate debtor. So, what is it? SBI has given a loan to SR Steel. Some other company, Y Limited, has stood guarantee to the tune of 1000 crores on behalf of SR Steel. On behalf of SR Steel. They have stood guarantee now to the tune of 1000 crore. Now tell me, if Y Limited has paid off SBI, there are other banks also, but they have already paid off the full SBI, etc. Can Y Limited take over SR Steel? Answer is yes. So if you see there, guarantors of a corporate debtor unless the guarantee has been enforced and remains unpaid. So if the guarantee is not enforced still, Y Limited can take over SR Steel and pay the money to SBI. Or Y Limited can actually pay SBI full 1000 crore and then take over SR Steel. This is the gist of the amendment. Which one? 29 capital A. If you want full in-depth, scan the code. If you don't want full in-depth, this much whatever I explained is more than enough. Okay. Second point, yes or no? Done? Did you understand? Did you understand, buddies? Yes, no? Let me have water. Keep forgetting. Now after 20-25 minutes, there is little lung exertion always, but it will be fine. Amendment 2 done. Right. Moving on to amendment number 3. Section 8, subsection 2. Section numbers and all you leave, guys. No, not important, but you need to understand the other things. Now, there was a company, Hirusa, and there was one more company, Mobilox. There was this program in Star Plus or whatever, Nach Baliye program. Nach Baliye, where the people dance and then you had to vote and all those things. The entire voting mechanism was outsourced to Mobilox by Star. They said, you kindly take over the entire process. Now, Mobilox outsourced the collection of the database, and the user interface etc. to Kirusa. So basically Mobilox was the main service provider to Star Plus. They provided their service and the contract is over now. Mobilox had hired Kirusa for the user interface and other things. So basically Kirusa was the operational creditor who had provided service to Mobilox. Mobilox is the corporate debtor. Very, very simple. Under IBC, if the money is not paid, Kirusa did all the service, no problem, and they had to be paid some, let's say, 2 crore rupees. When the time came for payment, Mobilox said, I will not pay. Mobilox said, I will not pay. Why I will not pay? Because you have breached some non-disclosure agreement, non-compete clause, like that they told. You have breached some non-compete clause, non-disclosure agreement, you have not followed the provisions, so there is a dispute. Since there is a dispute, I will not be processing your payment. Under IBC, an operational creditor first has to give a demand notice to the corporate debtor. Here, Kirusa gave a demand notice to Mobilox. And if Mobilox can prove that there was an existence of dispute, and earlier it said, and it is pending in the court of law. Existence of dispute and pending in the court of law. Then only you can reject the application. Correct? First of all, there should be a dispute and it should be pending in the court of law. This they have already asked in the exam 2-3 times, both paper 4 and 6D. Important amendment, Supreme Court judgment. Correct? NCLT can reject the application if Mobilox can prove that there was an existence of dispute and pendency of proceedings in the court of law. So basically Mobilox, to protect itself, not only should it show that there was a dispute, but also it was pending in the court of law. This was absurd. Let us say you provide a service of 1 lakh, I am not happy with your service. I will tell you that I will not pay you. For example, Mobilox had told Kirusa, I will not pay you, you do whatever you want. Now Kirusa puts a case of IBC against me. Now for me to protect myself for 2 lakh rupees, not only should there be a dispute is already there, but it should also be pending in the court of law. For 2 lakh rupees, should I go to the court and put a case against you just to protect myself from IBC? Absurd. So it went up to the Supreme Court, and Supreme Court deleted and made it or. This is based on the principle of exceptional construction. My paper 4 and 6D students who have attended the class will understand this concept of exceptional construction, interpretation of statutes, right? That is the senior. Here, or. And was there, or has come. Kirusa Technologies versus Mobilox Innovations. Kirusa Technologies versus Mobilox Innovations, right? So this is the thing, section 8, subsection 2. Kirusa versus Mobilox. Done. Understood? Third amendment done. With logic, very, very easy to understand. Subsection 3. This was the third point was added actually. Other things were there. Third point. This is what, guys. Let's put the chart here. Corporate applicant means the company itself, if it has to wants to go for IBC. The company itself, if it has to go for IBC, what to do? Corporate applicant means the company itself. Corporate applicant means the company itself. If the company itself wants to go for IBC, what to do? Company going for IBC is nothing but shareholders applying or the board applying. This provision was kind of always, what do you say? There was a conflict between this and winding up provisions. Because in winding up provisions, now I'll just quickly show you that chart. In winding up provisions, let me show you that chart. All these things, I mean, I'm just showing you so that the logic is absolutely clear. One second. In winding up provisions, voluntary winding up is covered under IBC now. Compulsory winding up by tribunal is covered under the provision now in Companies Act. Petition to NCLT earlier under section 272, the company should have given it to, the company via special resolution had to apply for winding up. Under Companies Act section 272, company via special resolution had to apply for for winding up. Whereas under IBC, special resolution word was missing. So it led to misuse. So basically people were putting a case against the company in Companies Act, but unfortunately under IBC they did not have any power. So there was lack of synchronization. To synchronize both the provisions, 272 of Companies Act and section 10, that is corporate applicant, ultimately power should be given to the shareholders. So for the power to be given to shareholders, guys, this section came into force. 10 subsection 3, where they said, first of all, books of accounts must be given, information with respect to appointment of resolution professional, and this point was inserted. Special resolution passed by shareholders. So here this was the amendment. They added the word special resolution. Special resolution passed by the shareholders of the corporate debtor or 3/4 of the total number of partners. If it is an LLP, 3/4 of partners. And if it is a company, then special resolution. Special resolution means 75% of valid votes. We know. So this was also added now. Got it? Got the logic? Logic is very simple. Synchronization. Logic is what? Synchronization between what? Logic is synchronization between two things. Companies Act and IBC. Very, very good provision. Did we understand, buddies? Yes or no? Amendment 4 done. So there are a lot of important amendments in IBC for May and November put together for November 2020. So this will come for paper 4 for almost 10 to 15 marks, and paper 6D IBC will come for 35 marks, 35 marks. So it's very, very important. Actually both are the same, thankfully. So it's a combined session for 4 and 60. Amendment 4 done. Yes. Now, there was a company LML which was into scooters and all those things, right? Scooters and other things. Sanjeev Shriya. Yes, Kumar, perfect. 101 mention SR plus 3/4. Brilliant. Perfect. Yeah. So Sanjeev Shriya was the promoter. Who gave loan? Which bank? As usual, SBI. Gave a loan to LML. Let's assume some 80 crores. I'm just giving some random figures here. Figures don't matter, but the facts of the case do. Sanjeev Shriya, the promoter, stood as a guarantor for SBI on behalf of LML. Sanjeev Shriya told SBI, bro, if my company LML does not pay, don't worry, I'll pay. Fine. LML, you remember, once anything goes under IBC and once NCLT accepts it, NCLT will impose something called as a moratorium. Moratorium is like statute. No other case will apply. You cannot sue me, I cannot sue you. I can sue other people, but you cannot sue me. Moratorium, it is like statute. Now what happened? LML, went for IBC. Corporate applicant. When LML went for IBC, SBI said, okay, now I cannot sue LML because statute has applied. SBI in turn sued Sanjeev Shriya. Sanjeev Shriya said, bro, statute. Because LML has already gone for NCLT, moratorium. I am associated with LML. There the liability is not crystallized. We don't know how much is the liability. How can you come and sue me? Moratorium has already applied, which means for you also moratorium will apply. So Sanjeev Shriya said, statute. This was a dangerous case. Correct? This was a dangerous case. So what happened? Here. Check it out. 14(3)(b). The provisions of the subsection. What did they do? Section 14 is the concept of moratorium. It is the concept of moratorium. Under moratorium, what happened? They said this statute concept will only apply to LML. Statute will not apply to the surety or the guarantor. Surety or the guarantor, right? So if you see, the provisions of subsection 1 shall not apply to. Subsection 1 is moratorium. Moratorium will not apply to whom? Surety in a contract of guarantee to a corporate debtor. Got it, buddies? So there were two cases that you have to remember. One is SICOM Investments and Finance versus Rajesh Kumar Drolia. They had taken a literal view of section 14, and that merely by virtue of moratorium order, the suit against the guarantor cannot be stayed. It was a good one. But Sanjeev Shriya had taken an expansive view and told that moratorium order shall also apply to the guarantor. So the Supreme Court settled the issue. In also one more case, State Bank of India versus V. Ramakrishnan. This also is important. Amendments you have to study like this only. I don't know any other way of teaching amendments. So if you want anything which is fast, I mean, there are other sources for you. But for me, amendments means you have to understand the logic. Otherwise, there is absolutely no point. There is no point in studying amendments because you will forget eventually. But if you study the basics like this, then it will be very, very simple. Right? So, State Bank versus Ramakrishnan settled the issue saying that nothing doing. Correct? It said moratorium will not apply to Sanjeev Shriya. Promoter will happen. One more very, very important addition to this. Which will come for, let's say, linked amendment, which came on 15th November 2019, which has never been asked in the exam. Linked amendment. What is that? Buddies, dangerous. See, for example, this IBC is applicable to whom? Applicable to companies, and IBC is also applicable to individuals. Individuals is not yet notified properly, but individuals will also include Sanjeev Shriya. If LML does not pay, can I invoke IBC against Sanjeev Shriya? First of all, he can't tell statute. That is there. Linked amendment. Can I ask Sanjeev Shriya to sell off his assets now? Is the question. Can IBC imposed against Sanjeev Shriya? Can IBC be imposed against Sanjeev Shriya? Very, very important amendment, guys. 15 November 19, brand new. They say that first day of December 2019 shall be the date when IBC against personal guarantors to corporate debtors shall come into force. Means what? Now, IBC against Sanjeev Shriya is possible. IBC against Sanjeev Shriya is possible, right? So this is a linked amendment. If you see RTP, no, you'll be like, why the hell did I take up law? Hopelessly they have given. They have given some old provision, new provision. Then they have given clause has been changed like this. Nothing. They have not given what was old properly, what is new. That is why I made this particular thing for you. Yeah, Kamali, even Anil Ambani is going through the same thing. He was telling, now I become chaprasi, I don't have any money, I'm laying off my wife. Correct? So both the brothers are giving Oscar winning performance. Yes. So if you see, that is the scene. Did you understand amendment number 5 and the linked amendment? So first of all, no statute. When I put a case against LML, no statute. Second, I can now impose IBC against whom? Sanjeev Shriya. I can put IBC against Sanjeev Shriya. So this is the next amendment. Are we done? Great. So amendment number 5 and the linked amendment is also done. Now again, voting threshold. Voting threshold. Various other sections before, the voting threshold was 75%. Correct? Now it has been changed to 66%. Earlier it was 75%, now it is changed to 66%. For all, what do you say, normal items, for normal items of business, it has been shifted to 51%. Earlier, no, for everything it is 75%. Now for important areas it is 66%. For routine matters, it is 51%. For routine matters, it is 51%. There is one chart, so I'll just put up that chart for you. It's there here only. Voting mechanism. Yeah. So you can copy down this chart or take a picture. I'll add 2 more things to this. Section 21. Section 21 of IBC, which speaks about COC. They say all routine matters, voting should be not less than 51%, means greater than or equal to 51%, except otherwise provided, means in different sections sometimes different percentages may be given. Apart from that, all these sections 22, 28, 30, 33, this is accepting the resolution plan, rejecting the resolution plan, changing the resolution professional, appointing another resolution professional, routine matters of delegation, it is not less than 66%. Under 25 capital A, authorized representative point, which we will be discussing next. Authorized representative point, it is more than 50%. It is greater than 50%. Greater than 50%. Then 2 other things. Fast track resolution. Fast track insolvency. Rather than 180 days plus 90 days, which is, extension. Here it is 90 plus 45. Here it is 90 plus 45. So 90 plus 45, fast track resolution. For this it is again 75%. That percentage they have not changed. Percentage they have not changed. So first is this 51%, 66%, more than 50%. Fast track insolvency is 75%. Last, withdrawal of the application. SBI has applied. SR still says, bro, don't go there, bro. For old time's sake, let us settle between ourselves. That settling that they do. Then they'll ask SBI, please withdraw the application. Withdrawal of application can happen in 12 capital A. And this is 90%. So these are all the various voting mechanisms in IBC. 1, 2, 3, 4, 5. Withdrawal is 90%. Got it? So like that, this chart you can just put it off here. 5 items. 5 items. So you can take a picture of this. 21, 22, 28, 30, 34. Then 25 capital A authorized representative we'll see now. Then fast track insolvency 90 plus 45 is 75% and 12 capital A 90%. Right? Done. Voting threshold done. Next, important. There was no other provision before. 21 6A, 6B, 21 7 and 25 capital A. So what does it say? Apart from financial creditors, operational creditors and corporate debtor, in financial creditor you have home buyers. You may have consortium finance, where a group of banks have come together and provided finance to you. So in these cases, can I appoint somebody like an authorized representative? Can I appoint somebody like an authorized representative was the idea. So 6A, 6B and all these things came. And how will these fellows vote? How will these fellows vote? That is given in 25 capital A, voting mechanism. Voting mechanism. That would be the next idea. All these things are there. So we need to make a chart for the authorized representatives and voting mechanism. Correct? Authorized representative and voting mechanism. With respect to home buyers, there are a couple of, in-depth understanding that you need to have with respect to the home buyers. So if you want to understand the concept of that home buyers in an exhaustive manner, detailed discussion is here, right? So whatever I am doing now is the amendment. It's already covered. But sir, I want more in depth. So what will happen here? You have to go to this particular QR code and check out that maybe 1.5 hours video. If you are interested and if you have the time. Otherwise, this much is enough. Don't worry. All right. So let us check that chart now. IBC. Sorry. Check the voting mechanism only actually. That covers everything anyway. Yeah. So first I will do this, then we can go there. Yeah. So concept of authorized representative, all this is not needed, only this much is fine for you here below. So guys, we have 21(6)(a) clause A, everything is brand new provision. 21(6)(a) clause A, 21(6)(a) clause B, 21(6)(a) clause C. 21(6)(a) clause A speaks about what? Securities, which will include debentures, and deposits, which includes loan. Anybody which has given deposits or loans or your normal securities, then you can appoint an authorized representative. But mind you, a related party cannot vote. An authorized representative who happens to be a related party cannot vote. Otherwise, he can vote. 21(6)(a) clause B. Home buyers, if there are greater than 10 in number, then the IRP or the RP can be selected by such home buyers where they give a list of 3 RPs and they can choose one among the resolution professional as a resolution professional who would be an authorized representative. How will the authorized representative vote? We will see now. Then lastly, 21(6)(a) clause C. In this for a minor, guardian will be the representative. For a person who died, the executor of the will be the authorized representative. For a person who has died and there is a dispute between their legal heirs, then the court will appoint an administrator. So 21(6)(a)(c) is about guardian, executor and administrator. Apart from that, consortium finance, all this also you can appoint an authorized representative. This is the concept of authorized representative. Got it? So now we have to understand for this authorized representative what would be the voting power. That is also important. They have never given this in the exam till now. What would be the voting power? All this came on 16th August 2019. First time ever it was applicable for May 2020. But Shri Corona Ji ensured that May 20 did not happen. So all these questions for the first time ever can appear in our November examinations. So 21 subsection 6 speaks about consortium finance and syndicate facility. 21(6)(a) is what I just showed you now. 6(a)(a), 6(a)(b), 6(a)(c). 6(a) talks about deposits, debenture holders, loan, where the trustee or an agent is appointed as an authorized representative. B is home buyer. C is executor, administrator, guardian. 21 subsection 6 also is an amendment which covers consortium finance and syndicate facility. The consortium is where they come together. Syndicate also is they form a group and come together. 25 capital A. So the voting here, and this is 24 subsection 5, any other financial creditor. So basically voting mechanism is covered under 25 capital A, which covers 21 subsection 6, 21(6)(a) and 24(5). 21(6), 21(6)(a) and 24(5). Consortium finance, syndicate facility, then this and any other financial creditor. Now, the voting for consortium is given under 25A capital 3, 25A subsection 3. And for this 21(6)(a) is given under 25A 3A. This came from 16th August. 25A 3A. And for 24 capital 24(5), 24 subsection 5, for any other financial creditor, it is same as subsection 3, that is 25A3. This one is the same. For home buyers and all, it is different. For home buyers, executors, administrators, guardians, it is different. Consortium, it is different. So very, very simple. There is a consortium of lenders, SBI, Axis Bank, ICICI, Vijaya Bank, like that some 10 banks have come together for a consortium. One authorized representative has been appointed who will represent everybody. So of all the loans given, 40% is given by SBI, 10% given by Axis, 20% is given by ICICI, like that. Correct? 30% is given by Vijaya Bank. This is the consortium. Of the loan given by the consortium, 40% is given by SBI. 40% is given by SBI. Right? So, what I am trying to tell is, one authorized representative is going there to the COC. How will he vote is the question. Should he first take a 50% majority vote here and then say yes or no here, or he should vote according to the individual instructions of these banks? What do you think? As the new section 25A3 says, individual instructions of each financial creditor means separate voting for each financial creditor. Separate voting for each financial creditor. Separate voting for each financial creditor. Very, very simple. No prior instructions by financial creditor. Correct. For example, Axis Bank has not told how to vote. Axis Bank has not told how to vote. When there are no prior instructions, then the authorized representative should abstain from voting. Means he will go and vote for SBI, ICICI Bank, Vijaya Bank. He will not vote for Axis Bank because Axis Bank has not told whether to vote yes or whether to vote no in the committee of creditors. Got it? So this is called consortium lending. Very, very simple. Individual instructions, separate voting for each financial creditor. No prior instructions, authorized representative should abstain from voting. However, for home buyers, it is different. For home buyers, it is different. The authorized representative will act as per the decision taken by more than 50% of the voting share of such financial creditor, not majority in number. They have not given majority in number and all those things, who are present and voting. Here, there is no concept of present and voting. Everybody should vote. Here, who are present and voting. Which means, of all the home buyers, whoever has come to vote that day, I will take the entire voting share. One home buyer would have purchased a house for 3 crore. One home buyer would have given 40 lakhs. One home buyer would have given 2 crore. One home buyer will given 1 crore. Some home buyer who has given 10 crore has not come for the meeting only. I will ignore him. These guys are present. The authorized representative will walk in and say, my dear ladies and gentlemen, tomorrow I have to go to the COC and I'll have to vote yes or no for a particular resolution plan. So you tell me, all put together now, you tell me, should I say yes or should I say no? So here, no, first I will take a majority, more than 50% of the voting share. In my example, voting share will be 3 plus 1, 4, 5, 6, 6.4 crores. 6.4 crores. So more than 50% will be more than 3.2 crores. Got it? So of the home buyers, if more than 3.2 crore of the home buyers, it is not majority in number, it's the voting share, value. Those who are present and voting. So if more than 3.2 crore of them have told yes, same for debentures and deposits. It's the same for all 6A, 6AB, 6AC. Got it? This one, 21(6)(a). I will first take the majority. Majority can be yes, majority can be no. Then I will vote here accordingly. This 10 crore fellow who never came for the meeting, he comes tomorrow and says, cheating. What cheating? I called you for the meeting, you didn't turn up, I don't care. If you don't come, I cannot take your vote. You should have come yesterday and said no. All the other people said yes. You didn't come for the meeting, so I'm voting yes. So here he will just say one vote, either yes or no. That's it. Understood? Exception. If there is a petition for withdrawal under 12 capital A, home buyers only have put IBC. Now the main real estate fellow is coming and begging you. You will say, okay, let me now take it back. That time when I am taking back, I have to vote yes or no. That time when I am taking back, is it the individual voting or is it again majority? I have to vote for 90%, no? 90%. 90% is individual voting or majority I'll take and then go with the decision. What do you think? Since I said it's an exception, very simple. For withdrawal of application under 12 capital A, vote separately as per subsection 3. Subsection 3 we saw, no? Separate. So only for withdrawal it is separate. Otherwise, not at all separate. No tension. Got it? So again, one more example here. 21.6 consortium finance 3000 crores was there, for example. 21.6A home buyers 1000 crore. So total it is 4000 crore in the COC. 21.6 consortium finance was 3000 crore they had given. Home buyers and other deposit holders assume they had given 1000 crore for a real estate project. Very simple. So for special items 66%, for routine items 51%, and for withdrawal it is 12A. Now I am talking about home buyers. Very simple. If home buyers who have given 600 crores, for example, have said yes, if home buyers who have given 400 crores have said no, it is deemed that the full 1000 crores have said yes. It is deemed that the full 1000 crores have said yes. This is for which one? 66% and 51%. But for 12 capital A, withdrawal individually, for 600 crores I will count yes, and 400 crores I will count no. I will not say full 1000 crores I have said yes. This is for 12 capital A. Right? So this is the simple breakdown of a seemingly complicated section. This has never been asked in the exam till now because there was no opportunity to ask, which means this is very, very important in the context of our examination. It can come. Voting mechanism 25 capital A, very much part of the RTP also. Did we understand this, guys? Yes or no? Understood? Yes or no? Yes, brilliant. So if you want more stuff, you can check it out, this one. So 8 done. Very important amendment, guys. This one. 7. Eighth one, resolution plan. Yeah. Yes, if for 90% part, if 9 are for and 20 are against, you should vote accordingly. Correct? Yes. Now, coming to this section 5, clause 26. Can the resolution plan include merger, amalgamation, demerger, or should it just be simple takeover, was the question. Can I also say that now I'll pay you the money, but you need to completely merge with this company? One portion of SR Steel will be hived off, demerger, and it will merge with my other company. So these provisions, there are many cases where they say that was not allowed and all that because it was not clear. To make it absolutely clear, some resolution plans were rejected because of that. To make it absolutely clear, the section was amended. Section was amended, and then they said, for the removal of doubts, it is hereby clarified. The resolution plan may include provisions for the restructuring of the corporate debtor, including by way of merger, amalgamation, and demerger. Jayant, the remuneration is paid by the COC, and if it is a large group, it is paid by the consortium of the home buyers. That's a separate discussion. That is just for your knowledge. Okay. Yes. So you have to see 2-3 regulations to understand that. Okay. Yeah. But overall, that's how it is. Yeah. So these 3 things. It can definitely include merger, amalgamation, demerger. Definitely. So to make it absolutely clear, they have inserted that provision. Very simple. So that's the logic, nothing great in that. So that you can include all the 3. Now, initiation of corporate insolvency resolution process, section 7. So in the entire initiation of corporate insolvency resolution process under section 7, So as we have seen that the financial creditor will make an application, he will give all the details, adjudicating authority within 14 days will pass an order. The question that arose before the court was, within this 14 days, is it discretionary or mandatory? Is it discretionary or mandatory? Similarly, if the order where default has occurred, no problem. If they feel default is not occurred, within 7 days they have to communicate. This 7 days, whether it is discretionary or mandatory, was the question. Discretionary or mandatory was the question. So whatever, you have to rectify the defect within 7 days. So some courts in some cases, Shri Metallic's case, they said that the 7 days concept is mandatory. You have to rectify your defect within 7 days. Similarly, this 14 days order, however, is discretionary. So the court ruled one is discretionary, one is mandatory. NCLAT said one is mandatory, one is discretionary, and it went to Supreme Court. That was point number 1. Point number 2 was, within this 14 days, when I am passing the order within this time, should I just go through the documents and pass the order, or should I follow what is followed in India, principles of natural justice, reasonable opportunity of being heard? Should reasonable opportunity of being heard be given, or principles of natural justice should it be followed, where I'll seek more information, ask them to tell their side of the story, ask the company to tell their side of the story, or should I blindly pass the order? These were some interesting areas of discussion which was held in Shri Metallics Limited versus Union of India and Messar Surendra Trading Company versus Messar Jugilal Kamlapet Jute Mills, important case laws. They said that principles of natural justice have to be followed, and hence all the reasons has to be recorded in writing. And also 14 days time, it is just discretionary in nature. Even that 7 days is discretionary in nature. If you want to make this mandatory, then buddy, this also will be mandatory. That's what the Supreme Court said. Though I am telling it is discretionary, that is because administrative convenience, I am telling you it's discretionary. Do not misuse the provision by taking your own sweet time. That warning also the court gave. These are the two important decisions. Check it out here. Shri Metallics. Adjudicating authority has not ascertained the existence of default and passed an order shall record the reasons. How will you record reasons? Only after giving a reasonable opportunity of being heard. Because of Shri Metallics Limited versus Union of India, this particular case, this particular amendment has come. Done? Very, very clear. So amendment number 9 also done, done. The SR Steel case law went on for almost 3 years. So the government said, what the hell is this? First we said 180 days, then 90 days, 270 days things should be done. But in SR Steel case law, Rahul, do you take class in Chennai? I am going to come soon to Chennai, buddy. Next year, January onwards, I'll be in Chennai. So I'll be handling classes in Chennai. Details will be released very, very soon. So we are associating with one more center there and we are going to do classes in Chennai. I want to come to Chennai badly. Right? Okay. So coming back, SR Steel 180 plus 90, 270 days. It went on and on and on. Moratorium. Moratorium is there, no? Moratorium. I'll say statue. Foreign courts cases are going on. Foreign courts cases are going on. Correct? But in the foreign courts, can you tell statute there? No. So in SR Steel, New Metal, so many foreign cases also were going on. So you can't tell statute. And litigation in India is a never-ending affair. It keeps going on and on and on and on. You cannot stop. So this 270 days became 2 years, 3 years, 4 years. Like, what the hell, man? Court also, I should force the court not to delay so much. So it was discussed in the parliament, and a very, very good provision came into being. Check it out. Very, very good amendment it is. Here. This. Corporate insolvency resolution process shall mandatorily be completed within a period of 330 days. 180 plus 90 is there, I agree, 270, that will not change. This 60 days is actually for court delays. Does it mean that after 330 days, the IBC case will close like that? No. So if you see, this mandatorily is there, no. This is actually to be read as may. It's like they're pushing, please do it, but then you can't force the court, right? Court has its own procedure. But this insertion has added a lot of value because court will now not delay much. So the 60 days is for court delays. That is the case here. That is for all the proceedings, legal proceedings. Where the insolvency resolution is pending and has not been completed, correct? Sometime in August it came. As on August 2019, 270 days already over, not yet completed. So now they are trying to tell within 90 days they will complete. Correct? Within 90 days they will complete. From 16th August 2019, within 90 days they will have to complete it for the ones where it has already not taken. Got it? So this is the amendment, buddies. So one is what? 270, 180 plus 90. One more is what? 330 days overall. And as on 16th August, if the cases are still pending, within 90 days you have to wind up everything. Very simple amendment. Some amendments are very tricky, takes time. Some amendments are very easy. Got it? 10th amendment done. Very simple. Again, because of SR Steel timeline. SR Steel timeline. 32B, very, very important. Let me change the thing. Yeah. Rahul, cases may be delayed beyond 330 days also, but just an instruction or an overall guideline to the court to start moving. Don't delay it, start moving on is what they're trying to tell. So coming to this timeline, guys, expression of interest were invited, right? Then what happened? SR Steel parent company only, SR Group, was one of the bidders. Through what? Through the mechanism of New Metal. That is why 29 capital A was introduced, and they told New Metal, boss, you already have connection with the SR Group, you cannot come forward. So first round of bidding takes place, and it was held to be ineligible because both Lakshmi Metal and New Metal were ineligible. Doesn't this go against the basic idea of IBC? Yes, it goes against, but it is India. From 25 years, which was winding up, which took 10 years, 12 years, 25 years, it has come down to 3 years. That itself is a big thing in our country. So you cannot have any foolproof mechanism. As much as possible, this is a good mechanism. Yeah, so after 29 capital A, first round of bidding which took place, both were held to be ineligible. Then the court told beautifully. They said, very simple buddies, Lakshmi Mittal, you have you have RSS, KSS Petron and Uttam Galva. They're almost around 7,000 crore, there is a default. And New Metal, you are in ties with Ruya. You cut the ties with Ruya, then come and talk to me. To ArcelorMittal, he said, bro, you first pay the 7,000 crore and settle that dues, then come to me. So ArcelorMittal really wanted to buy this company, hence he paid 7,000 crore, which was KSS Petron and Uttam Galva, and he became eligible under 29A, and he came to buy. New Metal cut all ties with Ruyas, and they also came to buy. In the meantime, one amazing thing happened. The main SR group only came and said, I will buy the company, you please withdraw under 12 capital A. Please withdraw under 12 capital A. ArcelorMittal was offering 42 crore. I will give you the full 55 crore. That is what SR Group said. SR Group told SBI and all those things, I will give you full money back. ArcelorMittal is only offering 42 crore. So 12 capital A was there, which required 90% and all those things. 12 capital A regulation also was changed. 12 capital A said, before expression of interest only you can withdraw. After that you cannot withdraw. So that also did not go through, because expression of interest had already come by other people. Now this was the scene. After this 12 capital A, they had no choice but to go with ArcelorMittal. So ArcelorMittal won the case and ArcelorMittal went for IBC. So what was the entire, amount given to ArcelorMittal, amount handled by ArcelorMittal is very interesting and important for us to understand the new amendment. So if you see, here, ArcelorMittal had offered 41,909 crores to the lenders, other secured creditors 61 crore, other lenders 17, totally 41,987 crore of the total claims of 49,000 crore plus that 5,000 crores extra. Whereas SR gave everything, 49,395 crore full. Now, these were the financial creditors. These were the operational creditors. Operational creditors out of 4995 crores claimed, ArcelorMittal plan only gave 214 crores. And SR gave full, that you leave. This was anyway rejected. This went to NCLT. They said, okay. The operational creditors then got pissed off. They said, bro, you are getting a high percentage, I am getting a less percentage. I should get more. The NCLT, what did they do? Disastrous. They said overall amount, okay, no problem, I agree, 42,000 crore. But this percentage of share between the two, there is a mismatch. Percentage share, there is a mismatch. They should get around 60%, it's okay. They should get more. Full 4995 may at least around 3,500 crores must be paid. Like that they told. Percentage they varied. The secured creditors, financial creditors, did not like this decision. They went to Supreme Court. Their logic was very simple. Sir, resolution plan is done so that I will get extra money. Resolution plan I am doing because I will get extra money. You are giving me peanuts. You are giving me peanuts. What is the point of me taking peanuts? If I take the distribution of assets under section 53, if I take the distribution of assets under section 53, this is under liquidation. If I go for liquidation, SBI told the court, sir, if we go for liquidation, first will be what? If I sell off all the assets, first will be given insolvency resolution process cost, then liquidation cost. Then I agree, sir, workmen dues will be given 24 months, it's okay. Then, sir, workmen, it's okay, no problem. Workmen are the factory workmen, only 24 months payment will be given, sir. If they have not been paid for 36 months, sir, first priority will be how much, sir? 24 months. Remaining 12 months will be paid later. Sir, for me, full debt will have to be paid. If I sell off the asset, sir, for 49,000 crore, I will get full money. Eventually, and this is one operational creditor. Employees of only 12 months, sir, second operational creditor. Central government, state government, third operational creditor. Remaining debts is the fourth operational creditor. All others are financial creditors who are getting money before. So SBI asks a simple question. Now you are telling me, sir, under resolution plan, they are under various other sequences in the liquidation plan. Now you are telling me, because I opted for the resolution plan, I have to take less and give them more. When in fact, if I had gone for liquidation, I would have got more, they would have got less. How fair is this? This is utter nonsense, is what SBI and other people told in the Supreme Court. Supreme Court came out with a wonderful decision. Wonderful decision. Supreme Court gave the difference between equality and equity. Correct? They gave a difference between equality and equity. Correct? If you just search equality and equity for pictures, now you will get this. Correct? Equality and equity. Equality is what? For example, if I want to watch a match and three people are different height, equality is by giving the same size of bench so that all of them can go up. Equity, my dear friends, on the other hand, is to ensure that all of them get their due. All of them get their due. That is equity. So the Supreme Court said equality has to be maintained. Equity also has to be maintained. Everyone should be with the same footing. But however, equality is also important. If you are getting more money under resolution, the SBI has opted for resolution only because they are getting more money. Otherwise, they would have gone for liquidation, or anyway they would have gotten full money. Operational creditors are being little greedy. Under liquidation, they would have actually got something more. Right? When I say something more, what I meant was in the sense that they would have been layered like this. At various junctures, they would have got money. 24 months is there. No, I have not been paid for 36 months. Extra 12 months I can claim under remaining debts and dues if money is available. So they are trying to tell the operational creditors may or may not get money at that juncture, but they are becoming greedy and now claiming more money in the resolution plan. Secured creditors are telling, sir, now we are getting more here, that's why we are not opting for liquidation. Equity had to be maintained. Supreme Court, wonderful decision. They said, ultimately, the resolution value cannot be less than the liquidation value. And whatever structure you follow in the distribution mechanism, the same structure and the amount also should be followed in this mechanism, in the resolution mechanism. And whatever both amounts you will give, you may give some 1,000 rupees to operational creditor in resolution. He may get 900 rupees in liquidation. He says he should get higher of the two in resolution, which means he should get 1,000. In the resolution is getting 900. In liquidation is getting 1,000. The law says, the Supreme Court said you should get 1,000. Wonderful decision in the SR Steel case law. SR Steel versus ArcelorMittal. And Satish Kumar Gupta was the resolution professional. Based on that amazing decision, immediately the law was amended to insert which section, buddies? 32B. Very, very important section. 32B, which said, see now, provides for the payment of operational creditors in such a manner as may be provided by the board, that is IBBI, which shall not be less than, means what? Amount to be paid to such creditors in the event of liquidation of a corporate debtor, section 53, means you have to distribute the assets. Even in the resolution plan, you have to make the waterfall mechanism in that manner only. And the amount that would have been paid to such creditors, if the amount to be distributed under resolution plan was distributed in accordance with the order. See, if I am going for liquidation, whatever assets I sell will only fetch around 30,000 crore, assume. Now ArcelorMittal is ready to pay 40,000 crore. What they are trying to tell, this 30,000 crore liquidation value also you put here, 40,000 crore also you put here in the same sequence. Obviously pay them whichever is higher. And it should provide for payment of debts of financial creditors also. Financial creditors, let us say 80% of the majority said yes. 20% said no for the resolution plan, which means they wanted to go for liquidation. It should not be such that these 20% fellows are not getting anything here. It should be equal. So they say, and also provides for the payment of financial creditors who do not vote in favor of the resolution plan in such manner as may be prescribed by the board, which shall not be less than the amount to be paid to such creditors under same waterfall mechanism. Waterfall mechanism. Then you see they have given explanation beautifully. This distribution must be equitable. This distribution must be equitable. You should ensure equity. Correct? And they also say, hereby declare that on and from the commencement of the Insolvency and Bankruptcy Amendment Act, this will also apply to all the plans which are still pending. Means resolution plan has not yet been approved by the adjudicating authority. This will apply. Means you have to change all your resolution plan according to this now. According to this, it came from 16th August. So as on 16th August, if there were some resolution plans which were not yet approved, you have to follow this. If you have filed an appeal also, then it will be follow. You have to follow. Commonly, this will not limit the amount at all. This will only, amount can be 80,000 crore, amount can be 90,000 crore, but they are trying to, and in liquidation it can just be 20,000 crore. I am talking about the way of distribution. It should not be that secured creditors are getting a bad deal in the resolution when they are actually getting a good deal in the liquidation, because that full 20,000 crore will go to them. But here the court told, you take less, you pay other people more. Secured creditor said, why? Amount and all will not change, right? So if a legal proceeding also is happening, then it will happen. So this is the change. Again here they have given, you see, the COC should ensure that the distribution proposed should take into account the priority. This is not beneficial to operational creditor. This brings about an equitable distribution between both financial creditor and operational creditor. This in fact favors the financial creditor himself, because even if he goes for liquidation, his first priority. Even if he goes for resolution, his first priority. The financial creditors are protected by this thing. That doesn't mean operational creditors are ignored. Operational creditors also are given equal importance. Even the financial creditors who did not vote also have been given equal importance. A very, very good provision. Very, very good amendment. Did you understand, guys? Amendment number 11. Got it? Amendment number 11. Very, very important. They can ask this in the exam. Clear, buddies? What used to happen was, as an operational creditor, that includes employees, that included, what do you say, those who had given goods, those who had given services, and those were the central government and state government dues. The beauty of what happened was, like for example, income tax department, GST department, all that are there. It was settled in the resolution plan that income tax department were to be paid 3 crores out of 5 crores. 3 crores settled, full settled. GST dues, out of their dues of 2 crore, they were to be paid 1.2 crore. It's settled. They agreed also. So what used to happen was, after the resolution plan is approved, they took their money, but income tax department still had 2 crore pending. GST department still had 0.8 crore pending. After the resolution plan was done and the new company took over and all that, they started sending notices to the corporate debtor for the remaining amount. Corporate debtor said, bro, we have already done everything. Now why are you coming again? This was happening. This had to be stopped. That is why this amendment. Shall by order the resolution plan which shall be binding on the corporate debtor, employee, member, creditor, including the central government, state government, local authority, your electricity bill, water bill, to whom a debt in respect of the payment of dues arising under any law for the time being in force, such as authorities to whom statutory dues are owed, etc. They say that this is completely binding, full and final settlement. You cannot ask for more payment later. Clear? This is what it means. Section 31, amendment number 12. Next. Liquidation. There was a problem as to when liquidation can be done. The COC is constituted. There is expression of interest. Many people are bringing the resolution plan. Before the resolution plan comes, I have to send them something called as a information memorandum. When can I liquidate? There was a question. Some companies already gave the resolution plan. The resolution plan was almost approved, and later the company went for liquidation. Can you do that? Answer was, dicey, did not know. That's why, to ensure when you can liquidate, section 33 has been amended to this line. It is hereby declared that the committee of creditors may take the decision to liquidate the corporate debtor any time after the constitution of COC and before the confirmation of the resolution plan. Confirmation of the resolution plan, including at any time before the preparation of the information memorandum. Before information memorandum is prepared, you can go for liquidation. Once the resolution plan has been approved, once it is done, you cannot go for liquidation. Right? Once the resolution plan is approved, once you send over the information memorandum, all these things, you cannot go for liquidation. Got it? This is the section 33. Next. This again is important. When is the insolvency commencement date? One proviso has been omitted. What was the proviso before? It's given here. This was the old proviso. where the interim resolution professional is not appointed in the order admitting the application under 7, 9, 10, the insolvency commencement date shall be the date on which such interim resolution professional is appointed. So first NCLT will admit the application, right? NCLT will admit the application. And the insolvency resolution professional is not appointed. Earlier they also said that he will be appointed within 14 days. See the next amendment here. This was the old provision. 15 and 16 to be read together. 14 and 15, sorry. Amendment number 14 and 15 should be read together. Old provision also stated that within 14 days from insolvency commencement date, you have to appoint the IRP. What used to happen was, the 180 days started from this day only. In first of all, it is less, 180 days. In that also, if you take away 14 days, you are only left with 166 days, because this is the day when the work actually begins, when the IRP is appointed. It was creating confusion, it was creating chaos, it was creating unnecessary delay. To stop this from happening, they have amended the law now. Both section 16 and section 5 have been amended, where this entire proviso has been omitted. And one more line is added here. The adjudicating authority shall appoint an interim resolution professional on the insolvency commencement date. Which means NCLT is now telling, NCLT has to appoint when they commence the insolvency proceedings. That day only they have to appoint the interim resolution professional. Very, very simple. Or whenever the interim resolution professional is appointed, that is the day when the insolvency is commenced. Which means that extra 14 days is saved now. Extra 14 days is saved. Correct? Section 16 is amended to insert the clause that AA shall appoint. This amendment shall expedite the entire process of CIRP, since the IRP should now be appointed on the insolvency commencement date, because insolvency commencement date is the date whereby application for initiating CIRP is admitted. And the same day when you admit it, you also have to appoint an interim resolution professional. Which means the day when you appoint the interim resolution professional, it is as same as the insolvency commencement date. 180 days, day number 1 will begin on that day. Got it? These are the two important amendments. Then, Section 5, Clause 15. If you see, in the entire financial debt, during the course of the CIRP, the resolution professional wants to raise more funds. Can he raise more funds? Yes, that is called interim finance. Means any financial debt raised by the resolution professional during the insolvency resolution process period. And also any other debt as notified by the government from time to time. This also has been added in the definition of financial debt, because this also has to be repaid. I need working capital. Can I borrow? Yes, that can be borrowed. That is interim finance has been added. Correct? CIRP can also be done by home buyers. CIRP can be done by home buyers. CIRP can be done by other types of creditors, small creditors. Correct? Who are those? How many people can do? This is given again in the new amendment, Section 7, Clause 1. Financial creditors, I told you, right? 21(6)(a), A, B. Debenture holders, deposit holders, small loans, and B, home buyers. And Section 21, that same, 6A, 6B. What should I do? Financial creditors referred to in clauses A and B of subsection 6A of 21 application of CIRP against the corporate debtors will be filed by not less than 100 such creditors in the same class, or not less than 10% of the total number of creditors in the same class, whichever is less. Whichever is less. So if there are 10,000 creditors or 1 lakh home buyers, then it is 1/10. 10,000 or 100, whichever is less. If there are simply 10,000 home buyers, then it is 1,000 people or 100 people, whichever is less. They can apply. Somebody asked a question at the beginning, can home buyers apply? Yes. How many home buyers can apply? 100. They can apply to NCLT. Then to appoint an interim resolution professional, they will be given a list of 3 RPs and they can choose 1 RP of that. Same, again they have given. Allottees under a real estate project. 100 of such allottees, not less than 10%, total number of allottees. Same thing. For 21(6)(a) and 6(a)(b), deposits, debt instruments and home buyers, it's the same. It is the same. So as and when the new amendment act came from August, all these provisions will apply. Got it? So this also is done order. That's about it. All right. So guys, I need to take my medicine now. So let's take a 5-minute breather, 5 minutes break. After break, I just need to gargle and take some hot water. It's very important to keep my lungs intact since Corona came and went for me. So 5 minutes break. And this video will be available later also, don't worry. But I would strongly suggest to finish off the video with me only, because I also know, you also know how lazy or how determined you are to do it later. So as much as possible, try to do it now only along with me. If you have any other plans, then you can do it later. But I would strongly suggest, just push for, I had already told it was 11 to 2. So we'll try to finish by 2. May or may not happen. It can extend to 2:33 also. You never know. But, you know, try to finish it off all the amendments. So many amendments have come, you see. I have put in efforts to make this entire sheet as easy as possible. Till now, were you able to understand, guys? Yes or no? Able to understand till now? No doubts? Amendments have to be studied like this only. There cannot be a half an hour or 1 hour amendment class. Amendments are very, very important in the context of the examination. You cannot just make haste and study, right? So let's take, so now, section number 11, the next amendment. What was the scene? Explanation was missing. So what is added is an explanation here, this one. But what was the provision? Let's discuss that. If you are a company, for example, SR Steel, who's already undergoing a corporate insolvency resolution process, correct? Can it now apply to one more company? For example, X Limited. Can it make an application as a financial creditor or operational creditor to X Limited? The answer is no, because it says the following person shall not be entitled to make an application to initiate corporate insolvency resolution process, namely a corporate debtor undergoing a corporate insolvency resolution process, SRST. A corporate debtor having completed corporate insolvency resolution process 12 months preceding the date of making the application. So SR Steel has finished CIRP, assume, correct? And it has not even been 1 year. 180 plus 90 has happened. It has not even been 1 year. means that is also still coming back on track. So can now SR Steel now as a corporate applicant, for example, can it put IBC against itself again? Where the shareholders by a special resolution put IBC again? No. They say, the court will say, boss, 12 months also is not over. Give some breathing space. We did 180 plus 90, then we did all these things. Give some breathing space. Without breathing space, how will the company function? Give it a couple of years. It will take some time. Good provision. And if the financial creditor has violated the terms of the resolution plan, the financial creditor will be given money and the financial creditor will have to take that money, but he has lied about it. He has given some false documentation. Later they came to know. Correct? If you see there, a corporate debtor also. Corporate debtor SR Steel has to ensure, the new management has to ensure that everyone has been paid off. They made a promise to pay, but they did not pay. Then they came to know the corporate debtor and financial creditor in collusion with the resolution professional cheated the shareholders. So such people again cannot go for CIRP, is what they said. And if a company like SR Steel, for example, has already gone for liquidation, where will it do CIRP? But this ignored one very, very important question. This ignored one very, very important question. If I am going through CIRP, if I am going through liquidation, and I was a financial creditor or operational creditor to one other company, and I was an operational creditor to one more company, they haven't paid me money. They haven't paid me 10 crore. They haven't paid me 15 crore. Because of these fellows, I am actually not doing well now. Because of X Limited, Y Limited, Z Limited, I am not doing well. Because of these guys, I am not doing well. So what happens? They went to the court and said, there is an ambiguity, sir. You need to allow me to actually put a insolvency proceedings against X Limited and Y Limited. You cannot bar me. They are also not doing well. I am the first financial creditor. If I put IBC, my first name will come as a financial creditor. I will get that some money at least. That explanation is what is added now. Check it out. For the purpose of this section, it is hereby clarified. Nothing in this section shall prevent a corporate debtor, SR Steel, referred to in A to D, from initiating CIRP against others corporate debtor, X Limited and Y Limited. Very, very important provision. This came from 28th December 2019. This anyway would not have been applicable for May 2020 anyway. This would have been applicable for November 2020 exam, which is definitely applicable. All these things can come for the first time ever in our examination. Yes or no? Important amendments. I've given you the logic. Check out. So the two cases, divergent views were there. One is Bhushan Power and Steel versus Vardhaman Trading Company Private Limited. And the other view, good view, was taken in Jai Ambe Enterprise versus SN Plumbings. It is one of the duties of the RP to recover the outstanding debts of a corporate debtor against whom CIRP is already in progress. It is a right course of action for managing the affairs of a financially stressed company. So you can definitely go and claim this amount, is what they are trying to tell. You can definitely claim the amount, no tension. Yes or no? Got it? Very, very simple. That is which amendment? Section 11. समझ में आया दोस्तों? Yes or no? What? There is no Josh only. All dead? Good morning. Good afternoon, guys. Dead. Yes. Come on. Even if the corporate debtor is in liquidation, can they initiate? Yes. Why are they in liquidation, Kamali? Because they haven't got the money from so many companies. Can I initiate? Yes. Brilliant. Chalo, next. Section 14, subsection 1, explanation. So, this case law very important. Embassy property developers versus State of Karnataka. Embassy property developers versus State of Karnataka. In that, section 14 is moratorium. Correct? There, the government will give certain license, permits, quota, concession, clearance. If I am into mining, if I am into construction, they'll have to give me a license, right, to construct. That license period will be going on. Renewal will come of that license, etc. Whatever may be the terms of this license, permit, regulation, etc. And against that particular builder, insolvency proceedings have started. Will it affect the license, permit, registration, quota, clearance, etc. was the question. Will license, permit, registration, quota, concession, etc. will it impact the moratorium? For that also, is it a statute? Can't those things go ahead? Was the important question raised. So this particular section absolutely makes it clear that notwithstanding anything contained in any other time being in force, any license, permit, registration, quota shall not be suspended. I have to pay my current dues for use or continuation of these permits, or if I want a new grant, I can pay the new grant. There is no statute on it, is what they are trying to tell. This is the gist of it. Sir, I want to understand this more in depth, sir. I want to understand this in an exhaustive manner, sir. So kindly go to this particular QR code. I have explained it in an in-depth manner. Very, very in-depth it is. So you can go ahead. Section 11 is not redundant. Why is it redundant? You can't be a corporate applicant and do it against yourself, but you can do it against others. Yes? This is also important, moratorium. In my entire amendments of moratorium, I have included all these things. You can check that video. Anyway, you scan all these whenever 3 or 4 QR codes are there in this chart, I mean in this particular thing, you can go there and check it out. Yeah. Now, tell me one thing. I am, for example, Deccan Chronicle newspaper. I am undergoing CIRP. Everything has stopped. Essential services will not stop during moratorium. Essential services, water, electricity, fine, and other things. Now the regulations have all these things, which means my BESCOM, Bangalore Electricity Supply Company, local authority, BWSSB, Water and Sewerage Board, they cannot stop the supply of water and electricity and all these things. But if I am Deccan Chronicle, a printing press, the dye needed, correct? The dye needed, and also the paper is needed. All these purchases, etc., are needed to actually make my company a going concern. But these essential services, etc., were not at all a part of the essential services because it only included water, electricity, and a couple of other things. Basic needs, correct? The question was, if you do not allow me to purchase the dye, the paper, how will I run the printing press? Similarly, water. If I am into hydroelectric, if I am a hydroelectric company, and water is essential, of course, to generate electricity. Essential services would be water for consumption, not water for business. But then if you don't allow me to do that, how will I run the show? was a question. Because of which, buddies, and for example, if the paper company, the dye company, etc. don't give me the necessary tools, how will I run it as a going concern? So from 28/12/2019, brand new amendment has come where 14(2)(a) and 14(3)(a) are there. 14(2)(a), where the interim resolution professional or resolution professional considers the supply of goods or services critical to protect and preserve the value of the corporate debtor and manage the affairs as a going concern. Supply of such goods or services shall not be terminated, shall not be suspended, shall not be interrupted during the period of moratorium. And where such corporate debtor has not paid dues arising for such supply, they will have to pay them. They are trying to tell, for example, Deccan Chronicle had not paid for the paper before the CIRP began. Let's say 3 crores they have not paid. The RP has to convince the paper company and the dye company saying that, sir, you please give now. From when the CIRP begins, whatever paper that you give now, that becomes essential services for me, sir. For this, you don't give me any credit, sir. I will give you the money, I will buy it, but please supply. Don't adjust whatever. Now, for example, I need 2 crores worth of paper. I will pay you 2 crores worth of paper right now. You please give me 2 crores worth of paper now. Please don't adjust this 2 crore against this 3 crore is what they are trying to tell. This, which is before CIRP, this you can enter in as an operational creditor, sir. That is a different thing. But the services that you are giving me now, I will definitely pay you first only and then take the services. Electricity, water, all these things. So this part you separate, sir. That part keep it separate. This is the provision. Correct? And this section may not be made applicable to certain arrangements notified by the central government that you leave. That later they would have notified. As of now, they have not notified anything. Got it, guys? Very, very important provision. 20. Amendment number 20. Section 14(2)(a) and 14(3)(a). In the entire, for example, Rotomac Group, Vikram Kothari, promoter of Rotomac, was arrested by PMLA. Similarly, Rotomac Group went for IBC. The company's assets are here. I want to sell them and I want to take over, whatever the case may be. Let us assume one more company has taken over this. At the same time, the Enforcement Directorate wants to come and confiscate this property. First seize this property, later confiscate. Seizure means taking over the possession. Confiscate means attaching the ownership to the state. Attaching the ownership to the state. Right? So, Rotomac Group, this is there. IBC, a new company wants to take over, but under PMLA, the enforcement director is telling, bro, that is mine. There is constant fight. From one side they want, from one side they want. What to do? So, Section 71 of PMLA. Section 71 of PMLA says it overrides other acts. It overrides IBC also, Section 71. IBC Section 238 says IBC overrides other acts. IBC overrides other acts. One section is telling this, one section is telling that. So it went on to so many cases, but in the Rotomac case, they said both are parallel proceedings, go hand in hand. One, you take over the company, no problem. The other also, the PMLA can come and seize. When it seizes, the resolution professional has to now do the needful. Then it was decided that an asset confiscated under the PMLA cannot form part of the IBC liquidation estate. Once it's already confiscated by them, that is different, this is different. All this was okay, many cases were going on. Now to counter this, one more deadly section has been introduced by in where? In IBC, and that is section 32 capital A. This section was not there before. The section addresses two things. If IBC is going on, can other laws come and take over? Second, if a new company or a new resolution applicant has taken over the company already, will prior prosecution which was on those assets, can it continue or it ends there only? The insertion of 32A has opened or will open a Pandora's box, and in future lots and lots of litigation will come for sure. Lots and lot of litigation, it will go on and on. This came from 28th December 2019. So it will provide a resolution applicant a fair chance to revive the corporate debtor without imposing additional liabilities. Successful resolution applicant face the hassle of prosecution before courts and tribunals for prior acts of corporate debtor, especially PMLA. The old promoter did golmaal, the new guy bore the brunt of the same. So now they said that she shall not be prosecuted for an offence committed prior to the commencement of CIRP. No action shall be taken against the property also, which means what? Under IBC, if you have already gone through, PMLA will not apply. But there it says something else also, no, in PMLA. This section will go on in the courts for a long time. But it will come for our exam also. Why? Because it came on 28 December 2019. Notwithstanding anything to the contrary contained in this code or any other law, PMLA, for the time being in force, liability of a corporate debtor, Rotomac, for an offence committed prior to CIRP shall cease, stop, and shall not be prosecuted for such corporate debtor, shall not be prosecuted for such an offence from the date of the resolution plan approval. When the RP has been approved, that's all. And when the management changes, same thing. But the new management, for example, Kingfisher, new management comes and take over. You open the corporate whale. Who is there? Siddharth Mallya. Huh? Siddharth Mallya has taken over Kingfisher when his father actually put Kingfisher to the ground. Now can he claim 32 capital A? No. Basically the new management should not be a promoter or in the management of a corporate debtor or related party, similar to 29 capital A. If you see that section in depth, you will understand this also. Same, invest on the basis of material, this is PMLA copy paste they have done. A person with regard to whom the relevant investigating authority has on the basis of material in his possession reason to believe that he had abetted or conspired in the offence. Which means to say that when I lift the corporate veil, the new management should not be a person against whom PMLA or any other proceedings are already initiated, is what they are trying to tell. This will also apply to a designated partner in case of an LLP. That's what, similar provisions. Then second one talks about the property. First one talks about the person. Can I touch the person? Second one talks about the property. No action shall be taken against the property of the corporate debtor in relation to the offence committed prior to CIRP, where such property is covered under the resolution plan, which results in the change or sale of liquidation. But then again, same dialogue, new management should not have the promoter or the same person, related party, or any investigation authority, same thing. Mind you, 32 capital A does not protect the personal property of the promoter. Obviously, I can directly sue Vikram Kothari and take over his personal property, but nothing else. Correct? Again, see, this is the full dialogue. For the purposes of this subsection, it is hereby clarified. This is clarifying PMLA. An action against the property of the corporate debtor in relation to an offence shall include the attachment, seizure, retention or confiscation. Wherever I have told action, 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 what do you mean by action? Attachment, seizure, retention, confiscation, whatever name called they have added under any other law. Then I told you, no, it will not bar. Nothing in the subsection shall be considered to bar an action against the property of any person other than a corporate debtor or other than a person who has acquired in good faith. So, can I touch the property of the fraudulent promoter? Yes, I can definitely do that. And when I do this, the person concerned should provide all assistance to me and shall extend all cooperation. This is the provision. This is a very, very new section. Did you understand, buddies? Yes or no? 32 capital A, amendment number 21. Did we understand amendment number 21? Yes or no? Did you get it? All right. So, these are the case laws. Shah Brothers, Ispat Private Limited, Mohan Raj, Enforcement Directorate versus Axis Bank, JSW Steel. This all came after Rotomac. This is again the resolution professional. If the resolution plan has been approved or resolution plan has been rejected, will he stay till there? Or if a liquidation order has been passed, when will he stay? What did they say was, he will manage until the expiry of the CIRP, until an order has been passed, is what they said. So if you see, it was difficult to ascertain when he will, till what time will the resolution professional stay. Was it till the expiry of 180 days or 180 plus 90? Or if liquidation order is passed till the appointment of liquidator, we didn't know. That's why they say, they have added to clarify things. Resolution professional shall continue to manage the operations of the corporate debtor after the expiry of the corporate insolvency resolution process period, until an order approving the resolution plan under 31(1) is passed or appointing a liquidator. So they say, once a resolution plan is there, till you approve it, or if you reject it, liquidator has to be appointed. Till that date, this fellow is continue to manage the operations. Now it makes absolutely clear. Section 34 is the liquidation order, till the liquidation order is passed. Got it? That's the thing. This 22 amendment is missing in the RTP, buddies, but still go through. RTP may they have not given, but institute is known to give some amendments which are not there in the RTP. This came on 28 December 2019. I don't know why they have not included, but it is an important amendment. Why do you want to take risk? Do you want to take risk? No, right? So please study. Nothing will happen. 2 minutes extra it will take. That also I have given. This amendment 22 is not given in the RTP. Now, this is given. The foundation of our entire country is the banking companies, the banking system, non-banking finance companies, NBFC and banking companies. Can I initiate IBC against the banks or NBFCs itself? If you say yes, then it will crumble the entire foundation of our country. So, banking companies and NBFCs, IBC will never apply. However, there is an exception in section 227 where they say, in excess of the powers conferred, central government in consultation with RBI notifies that the IRP, insolvency resolution process and liquidation, will apply to NBFC, including housing finance companies with asset size of 500 crore or more as per LABS. If you have a net asset size of greater than or equal to 500 crore as per the latest audited balance sheet, you can initiate insolvency resolution and liquidation proceedings against non-banking finance companies, including housing finance companies. Housing finance companies take money from the people and not give them back, take finance from somebody else and not give them back, but they are the foundation of the entire economy. Having said that, I cannot let all companies come and do whatever they feel like. So the first, under section 227, the first company here, first ever IBC under this section was dash, which is that DHFL. DHFL, Diwan Housing Finance Limited. Diwan Housing Finance Limited. This has been given in the RTP. I am talking about 22. 22 is missing. 22 is this one. Amendment 22. This is given. Amendment 23 is given in the RTP. In the end they have given. This is which? Diwan Housing Finance Limited. Diwan Housing Finance Limited. First ever. So in the exam, when they ask you a question, right, you have to say it will not apply to NBFC. You have to write a note. However, as per section 227 and the notification dated 18th November 2019, this wouldn't have been applicable for May 20 also. This is applicable to what? November 20. 18 November 2019 applies to what? Asset size greater than or equal to 500 crore. Got it? And you should write the first ever practical case was what? Diwan Housing Finance Limited. Got it? Yes. Now, amendments in IBC due to COVID-19. Amendments in IBC due to COVID-19. First, section 10 capital A. This amendment came sometime in June 2020. This 24th amendment will not be part of the RTP and will not be part of the November exam. But the gist of this amendment is necessary to understand two other amendments which are applicable for the exam. Amendment number 24, mind you, is directly not applicable for November 20, nevertheless relevant to the context of the next amendment. Next amendment is 25, this is applicable. Right? Now let's see. Notwithstanding anything current in 7, 9, 10, because of Corona, they have now told that anything that came after March, IBC will not apply. Insolvency, corporate insolvency resolution process of a corporate debtor shall be filed. No application shall be filed on or after 25th March 2020 for a period of 6 months or such further period not exceeding 1 year from the date. They have made it 1 year now. 25th March 2020 to 25th March 2021, you cannot file any IBC application. So IBC has been temporarily suspended. But application cannot be applied. What if I have already applied? That's a different question. Correct? Also, no application shall ever be filed for default occurring during the period, shall ever be filed. offense should have happened, default should have happened before 25th March. After 25th March, if default happens, it will never be filed. For the removal of doubts, the provision shall not apply to any default committed under the said sections before 25th March 2020. Correct? This provision shall not apply means what? No relaxation. No relaxation to the defaults happened before 25th March 2020. Got it? So, application cannot be filed after 25th March for 1 year. Also, all defaults during this 1 year, you can never ever go for IBC for the defaults between 25th March 2020 to 1 year. This amendment is applicable from June 2020. Nevertheless, our institute has already given amendment number 25. Because of the limit, they have enhanced the limit of 1 lakh rupee default to 1 crore rupees. ₹1 crore as a minimum amount of default for the purposes of the said section. So it is no longer 1 lakh, it is 1 crore. No longer 1 lakh, it is 1 crore. So in the exam, if they say default is more than 1 lakh and all that, you can write that 1 lakh, but also in the note you can say this. If we take the notification dated 24th March 2020, the minimum default is 1 crore. Since the company has not breached that limit, IBC will not apply. Like that you can write as a note. You can write the answer as a note. Clear? PMLA, Section 8, adjudication with respect to the entire time period. So let us see the chart to understand this provision. PMLA adjudication chart. So basically, if the director of the Enforcement Directorate with material in his possession, he has reason to believe that a person has proceeds of crime which is likely to be concealed, transferred in such a way so as to frustrate the confiscation. I know that he has some smuggled goods with him. If I don't catch him now, he will conceal it, he will transfer it in such a way that I cannot confiscate it later. So, by a reason in writing, I will give a report to the magistrate and immediately magistrate will take cognizance. And I will pass an order of provisional attachment. Provisional attachment means what? You can still use the goods, but I have attached the property. Without my permission, you cannot sell it off. I know that I have my eyes on you, but still not proven. So, provisional attachment, like for example, you are doing some crime in the house. I have a doubt. I can order provisional attachment until the case is proven. So, it will not affect the right of the interest holder. So, you still can continue to use the house. And I will file it with the AA, adjudicating authority. However, if you bring about a stay order, when I am attaching, you also have a right to protect it. You say, sir, this is not proceeds of crime. This is my hard-earned money. I can prove it to you. You will say, no, but let it attach. I want to attach it. They will say, no, sir, I will fight. So he will go to the court and bring about a stay order. Provisional attachment can be done for 180 days. But let us assume I will bring a stay order against that for 60 days. They will say 60 days you cannot touch that. Will that 60 days be included in 180 days or is it 180 days plus 60? That was a doubt. So amendment says stay order period is excluded. After 60 also, remaining 30 days from the stay order, This is court delay. Court can give the documents in 10 days, 15 days, 20 days. So up to 30 days, that is also counted in the exclusion. Stay order is for 60 days, but to pass the order they may take 10 days. To release the order they may take 15 days. So basically 60 plus 15. If they take 30 days, 60 plus 30. He cannot sell any asset during the stay order. Stay order is just asking him to stop the provisional attachment, but you cannot touch the asset there also. But still, which means I can fight and I can, stay order is just temporary injunction. But if I fight the case and I prove that it is not proceeds of crime, then I can do whatever I want. It is just a preemptive measure. You say I have a right to take over your asset. Control. You use it, but I'll take over the main control. I'll say no way. Let us fight, but I'll put a stay order. Then we'll fight. Got it? This is amendment number 1. This is provisional attachment. Now, coming back here. Where the AA, adjudicating authority, has reason to believe after the provisional attachment, mind you, after the provisional attachment, I have reason to believe that the usage of property which is provisionally attached or seized or frozen, you are using the property and still it is proceeds of crime, you are still continuing the same thing. I will give a SCN, show cause notice, 30 days. Why couldn't? Yes, time limit is 180 plus stay plus 30, up to 30. Show cause notice, asking him, tell me the sources of income or your earnings, how you are earning all these things, and why it should not be confiscated. So I will give a show cause notice telling why it should not be confiscated. And you will pass an order. You will pass an order. Either confirming the provisional attachment. When I confirm the provisional attachment, that will now be attached. Means what? I will take over the control. This is called seize. I will seize the property. You cannot use it anymore. I will seize it. I am not the owner. I have just seized it from you. When you are going on the road and you are not wearing helmet, mama will come and jump. You remember, mama will take away the key. Does it mean the police mama is the owner now? No, he's just seizing the vehicle. Got it? Now the thing is, investigation will happen later. During the investigation, correct? The entire investigation should be concluded within 365 days, 1 year. Or if there is any court case pending as to who is the owner of that particular thing, then it will still continue. But again, you can put a stay order. You can put a stay order saying that why are you taking away my goods? I want to use that property. Same. Stay order period should be excluded. Stay order period should be excluded. Here that 30 days and all is not given, but yeah, generally by reasonable construction, you can take that 30 year also if you want. But anyway, the stay period will be 10 days, 100 days, 200 days, whatever it is. So stay period will again be excluded from this thing. These are the two amendments in this, whatever I showed you here. Yeah, same thing. Full story is that only. 20th March 2019. Verification of identity by a reporting entity. Verification of identity by a reporting entity. This is a brand new section 11 capital A which came on 25th July 2019. This was supposed to be asked in May 20, not asked. Obviously, exam only didn't happen. So now it can come in paper 4 and paper 6D. 11 capital A, 4 marks question they can ask. This was by the Aadhaar and Other Laws Amendment Act, and through that law they have amended PMLA. For instance, there was a company, Rendezvous Sports Private Limited. Rendezvous Sports Private Limited had the control of Kochi Tuskers. One of the directors were Dr. Sunanda Pushkar, who had got lot of shares. It was alleged that Kochi Tuskers team, IPL team, came into being, and this random Rendezvous Sports Private Limited took up the entire franchise because of the blessings of the then Member of Parliament, Dr. Shashi Tharoor. It was alleged also that Dr. Shashi Tharoor's wife, Dr. Sunanda Pushkar, got kickback, bribe, by making her the director there. Upon investigation, it was also proven that between Dr. Shashi Tharoor and Dr. Sunanda Pushkar, there were almost 300 to 400 sham companies with fake directors, random employees, no offices, nothing. The inquiry took place by the Serious Fraud Investigation Office and other investigative agencies, CBI and all those things. The only person who knew about the entire deal was Dr. Sunanda Pushkar, who was found dead in a hotel in Delhi, Taj Hotel. It was also alleged that she was murdered. Some say it is suicide. All these cases are still going on. So government thought enough is enough. We need to do something about these cases. It may be true, may not be true, but let us do some change. They understood that though Sunanda Pushkar is the holder of shares, Dr. Shashi Tharoor actually is the beneficial owner of shares. Holder and owner, there is a difference. And lot of these sham companies are indulging in money laundering. So now they brought about two sections, 89 and 90 in Companies Act, which spoke about beneficial owner and significant beneficial owner, whereby in the current scenario, Shashi Tharoor has to disclose that he is a beneficial owner in Rendezvous Sports Private Limited and has to file it with the ROC in BN1 and BN2 form. And it is going through various banks. Even Rendezvous Sports Private Limited has put money in the banks. These reporting entities, that is banks, are called reporting entities. This money is being invested through some stockbroker, through various other companies, investing companies. Stockbrokers are also called reporting entities. It has been going through various layers of investment companies. Section 186 of Companies Act has now told these layers must be maximum 2. It has gone through various layers of subsidiary companies. 2 clause 87 of Companies Act has now told these layers must be maximum 2. Are you getting the beauty of the law? It's beautiful if you understand how to read it. Lot of loopholes have been plugged, and now they have told, how the hell did you allow so many companies to come with fake stuff? They asked the banks, when the money was being deposited, did you not do some KYC? Sir, PAN card. I will give you 5 different PAN cards. The only decent and not foolproof, but the only thing which offers some protection and some identity is the Aadhaar card. Hence, now under the KYC norms, to all these reporting entities, they have now told Aadhaar card mechanism has to be followed, that is 11 capital A. Every reporting entity, bank, stockbroker, shall verify the identity of its clients and beneficial owner, Shashi Tharoor, by authentication under the Aadhaar regulations, offline verification, use of passport also is a mechanism, other valid document. Central government may give such standards of privacy whenever they want. Amendment is easy. Did you understand the logic behind amendment? No notification shall be issued without the consultation of the UIDIA, that is the Unique Identification Authority of India, UIDAI. If any reporting entity performs the authentication to verify the identity or the beneficial owner, it shall make the modes of identification also available. What are the modes here? Offline verification and other things. No biometric verification will be stored. That also they have given. Additional safeguards also can be given. That is the scene. Because of this amendment, there are two other amendments which were given in section 12, two old provisions. This has been omitted because there is these two only have been deleted and a brand new section has been added, 11 capital A. 11 capital A. Clear? Done. These are the amendments in PMLA. Now, the following amendments 4, 5, 6, 7. Very, very strange. Very, very strange. They do not appear in the RTP. But I would personally strongly recommend you to go through. There have been things in the past where Institute has given those amendments which are not appearing in the RTP. These amendments did not come now. These amendments came on 1st August 2019. It had to be applicable from May 2020 actually. It is unfortunately missing in the RTP, very, very important amendments. These amendments 4, 5, 6, 7, kindly write it in the exam as a note. If any relevant provision is given, write the old provision only, no problem. This is not any new actually, it's just an addition, So this as a note you can add. Nothing will happen if you write 1 minute extra these amendments. Correct? The first amendment is proceeds of crime. Correct? Proceeds of crime. Proceeds of crime. If I commit a crime which is a scheduled offense, smuggling, gambling, etc., and I buy some asset on it because using that money, is that proceeds of crime? Obviously yes, because it's a property derived directly or indirectly as a result of criminal activity. That's okay. I gift that car. I do smuggling activities. I will use the car. I will gift that car to my son. My son enjoys the benefit of the car. It's a luxury car. My son now rents it out to other people by the hour. Since it's a very luxurious car, he does a rental business. Because of my smuggling activities, I buy a house. House I gifted to my son. My son converts it to Airbnb and rents it out to people. Is that additional activity that I am renting it out and getting money, is that also proceeds of crime? This question was not answered. There were so many case laws, contradictory case laws. One case law said it is proceeds of crime. Second case law said proceed of crime, no, because proceeds of crime will stop at the first instance. It will not continue. That is why on 1st August 2019, this explanation has been added. For the removal of doubts, it is hereby clarified that proceeds of crime include property not only derived, but also obtained from, but also property which may be directly or indirectly derived or obtained. Directly or indirectly. Adding to that, they have also given one more explanation in section 3, which spoke about this. Process or activity connected with the proceeds of crime is a continuous activity, and it will continue till you enjoy the proceeds of crime. Not only will it apply at the initial instance, but it will also apply later when I am enjoying the proceeds of crime. So if I give that property to Airbnb and get money, that is also proceeds of crime, because the underlying asset was actually as a result of criminal activity. You are earning that money because you had the house. You have the house because of criminal activity. Got it? That's the thing. And in section 17 with respect to search and seizure, earlier the inspectors had to obtain a warrant and come and do the search and seizure. Now very, very dangerously under section 17, the entire proviso has been omitted, giving superhuman powers to the inspectors. They can just barge in. Your Tamil, Kannada, Malayalam, Telugu movies you would have watched, no? Jeep only will come inside the house. Correct? You will just bang open the door and come inside. And you will ask for, open everything. I want to check. All that without warrant you are not able to do. Now you are able to do. That's the next one. Dangerous. You had to obtain a warrant from the magistrate and all those things. Deleted completely. Third most important change. Section 45. Offenses to be cognizable and non-bailable. Cognizable offenses and non-bailable offenses are very, very serious offenses. Correct? Where bail will not be granted unless you go through the court. And you have to arrest. You can arrest a person without a warrant there, for sure. But before that, you should give a public prosecutor an opportunity to oppose the application. And then, where he opposes the application, the court should be convinced that, okay, there is an offense done. But what is the major change? Can I just arrest a person just like that? Correct? Can I arrest a person just like that? Without even giving him any warrant? Yes, I can do. But should I give him a reasonable opportunity of being heard? Yes. Yes. But there were doubts with respect to the constitution of our country. One major case law, Nikesh Tarachand versus Union of India. I have discussed this case in paper 4 and paper 6D in depth. I am not going to go there again now. So there they said that no, it is against the Indian constitution. You should give a reasonable opportunity of being heard. All offenses are not cognizable. Because the linking offense, because PMLA is based on a predicate offense. Predicate means I have to go to the schedule. In the schedule, those offenses are there. One of the offenses will be Indian Penal Code. If that particular offense under Indian Penal Code is non-cognizable and bailable, you can't make in PMLA non-bailable. Doesn't make sense. But this entire judgment has been overthrown by this amendment. Dangerous, dangerous explanation. For the removal of doubts, it is clarified that the expression offenses to be cognizable and non-bailable shall mean and shall be deemed to have always meant. Means what? Retrospective amendment. That all offenses under this act are cognizable and non-bailable. Dangerous. Got it? They said nothing doing. I don't care about reasonable opportunity and all that. Once it was always like that, it will continue to be so. Clear, buddies? That completes this part. In FEMA, very, very simple change. In the capital account transactions, 6 subsection 3 has been omitted and 6 subsection 2 has been amended to add a few things. Class of capital account transactions which involves debt instrument, RBI may specify. So the RBI in consultation with central government may specify. Also the limit up to which these transactions are admissible, and also any other provision they can do so. And with respect to amortization of loan and depreciation of ordinary direct investments, again, the Reserve Bank of India shall not impose any restriction. These are freely allowed, which we already knew. But one interesting thing here is this point number 3. This has been omitted. Nothing to worry. The same provisions are already given in the regulations. So they did not want to duplicate it. That's the reason why they have deleted. That's all, nothing else. So very, very simple. Then yeah, the other major change, debt instruments I have given here. The slight other change is the ECB, which obviously I cannot do now because it again will take some time. At least 1 hour it will take. This will be, I will record a separate video and I will give it to you.